Good morning. All right. Oh boy, slow day. Oh, I'm missing my coffee. Give me 1 second. I'll be right back. Okay. We got less than 2 minutes to go. Less than 2 minutes. Make sure Woody's up and running. All right. I hope everyone had a good evening. Markets dipped earlier and now are much higher. 48.29, 29 handle on the futures with less than a minute to go. First 15 minutes, not doing much of anything except taking profits off the table, reassessing the markets after that. 940, 950, we're looking for high relative volume stocks with VWAP sloping for momentum trades. And we're open. Just check your stocks, which ones are doing well.
So looking now to the market on open imbalance, currently sitting at 393 million to the buy side.
Okay, Microsoft looking for a follow through. It's up. Microsoft up 42 cents. Okay, Apple's on the move. Amazon still consolidating. The Qs are higher. Okay. Okay, Microsoft on the move. Check Microsoft. Microsoft is on the move. All right, so don't forget Monday we have Martin Luther King Day. Monday, January 15th, 2024, all U.S. markets will be closed in observance of Martin Luther King Day. Martin Luther King Jr. There will be no pre-market or after-hours trading sessions on Monday. If you want to place a trade to an international market, including Canada, while the U.S. markets are closed, please call your broker for further assistance. Okay, so looking good. Okay, Microsoft looks good. All right. Let's see what sectors are doing what at the moment. Leading sectors, small cap energy, metals and mining, energy. What are financials doing with JP Morgan? Let's see what JP Morgan is up to. It was higher pre-market. JP Morgan up, 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 up. JP Morgan on the move.
Market really convinced now as we make fresh new lows in the 2-year yield going back to May.
Yields backing off some more.
The 2-year market is absolutely convicted and certain we are getting the first cut in March. Let's keep talking some earnings. That is our focus right now. Delta Airlines down about 4%. We talked to banks, which are doing all right. JP Morgan's up 3%. Bank of America is only down 1% now. Citi also up. So we'll keep discussing other companies like United Health as well.
Okay, looking good. Market's looking good. Again, we have crude oils, large cap and small cap energy leading the markets today. Telecommunications, IWM finally bouncing. Watch IWM. JP Morgan on the move. IWM back above the 21 day. I'm thinking IWM might reverse here. Okay, IWM looks good. Q starting to fade a little bit. Okay. Hershey's finally reversing. I was going to cut that loose yesterday, but I say, yeah, just give it a little bit of time. DoorDash looks okay. Amazon. Okay, let's see. Moderna. Nice reversal on Moderna. Microsoft. Okay, looking for Microsoft to follow through. I have next week's calls. They're out of the money, 390s, but it looks like we might get there today. Microsoft, I have the January 19, 390s. Those are profiting at the moment. Looking for a follow through. NVDA, continuation. Still hanging out, consolidating for the last couple of days up near resistance levels. All right, so Microsoft looking okay. NVIDIA, still early. Wait, give it a 15, 20 minutes for the markets to settle down. Algos take care of imbalances. And we'll get a true trend if we have one today. If it doesn't turn out to be a doji day, what's Bitcoin doing? Bitcoin. Survey says Bitcoin's still consolidating. Tesla trying to follow through. It gapped down. Tesla below the 200-day. Looking for evidence that institutions are interested on the dip. Okay, PPI was out. Was actual was 1%. Forecast was 1.3%. People tend to forget about PPI, but we're moving higher, so that's good.
I wonder also too, speaking of which, I mean, look, I get that the lower guidance is not what the market wants to see.
Okay.
I'm trying to wonder with the popping through oil today.
All right, let's get rid of Bitcoin here. Lyft. You looking at Lyft? LYFT. Okay, bouncing around there. What's Uber doing? Uber back to the highs. Triple top, starting to break out.
Extreme high tip alert. All right, we've got the laggards of the day pretty well established here, Jeff, with the airlines getting blasted. Jeez. Thanks, though. Let's get into it. We got Wells Fargo, we got Citi we haven't talked about yet. Wells Fargo's down 1%, Citi's up 3%. Let's go to Citi first because I feel there's a lot of positive tied to this company and the restructuring and their ability
All right.
to lost ground over the past couple of decades.
GMed.
Up over 3% now. Citi reported earnings. Net loss came in at $1.8 billion, or about $1.16 a share. Last year, they reported net income of $2.5 billion, or $1.16. Revenue missed slightly, $17.4 billion versus the $18.75 expected. But a lot of this came from some of the restructuring, right? Citi is laying off about 7,000 people as part of the restructuring. They also said they're going to be exiting the municipal bond and distressed debt trading operations. If we look at some of the charges that they had, so they had that FDIC special assessment at $1.6 billion. That was them trying to put money back in that fund after the Silicon Valley incident. They also had about $1.3 billion in reserve bills to risk in Russia and Argentina.
All right, what's NVIDIA doing? NVIDIA, where are you, NVIDIA? There you are. Little dip today, NVIDIA chips. Let's look at the NASDAQ 100. See if we got any edge there. Moderna up big. Zscaler, Marvel. Okay, all those look good. Moderna. Moderna looks pretty good. Moderna reversing. Okay, looks like maybe a higher high is in store for Moderna.
There's a bit of a debate to be had here within these numbers. I gotta say, that's where I kind of default to like the market share story and a bit of the comeback story of kind of being a major player in the stock price. Because when you're, cutting jobs, 20,000 cuts and the market rallies, that tells you.
Bitcoin looks like sell the news so far. Not a lot of selling. Maybe it's just people getting frustrated that, more than likely, people getting frustrated that there wasn't some huge, unproportioned, ill-proportioned move to the upside. There's not a big move to the downside. It is pulling back a little bit, but not any more than usual. So that's pretty interesting. Airbnb. Airbnb looks pretty good. Maybe a follow through. Airbnb, it's still early. Around 10 o'clock, we'll start to look at Airbnb looking pretty good. The setup looks good for a follow through. Airbnb, trying to break out here. Airbnb, check it out. Airbnb is trying to go. Airbnb. Looking good. I have a credit spread on Airbnb, so if it keeps going, I'm happy. I'm happy with Airbnb. Airbnb. Qs continue. All right, so PPI. Yeah. Market shrug off yet another data point. What's it going to take?
$1.28 billion, setting aside more money for those possible losses on credit cards.
All right. Look, set aside losses, no big surprise. Kind of double from a year ago. That to me is a little bit interesting, given that the market's rallied, the economy has surprised. I think that that's a good thing for the most part. You would think they should be pretty well insulated. But you've got a heavy lending business. You've already got a past that's been kind of checkered with some mistakes, and so maybe over prepare. That's going to kind of limit some of your growth to some extent, but you've already been through such a period of limited growth, literally like regular quarters.
Okay, let's see. Airbnb, Apple looking good for the follow through. Okay, so Apple was a good setup. Last week on Thursday, Friday, Scott had taken one of these dojis. I think you looked at Thursday, right? And then Friday we dipped a little bit lower, but we held the 200-day and reversed, or was it Friday that you got in? Anyway, Monday we came in and Apple had a nice big move. For those of you looking to go long, I took a long of sorts. I took a credit spread. I sold the Apple February 2nd, 175, and I bought the 170. So 175 is way down here. I doubt that's going to get hit. I am looking to buy shares of Apple if we continue to move higher.
Yeah, and if you look at this report, it looks pretty good. I mean, earnings per share $6.16 versus $5.98, up 15% year over year. Revenue up 14% year over year, coming in at $94.43 billion, which beat expectations. We go down the line. United Healthcare revenue up 12.4%. Optum up 24.2%. Premiums were up over 13%. Product revenue up over 20%. Services climbed by about 11%. One of the bigger issues that we're seeing in the reaction here today is that
All right, the 50-day is right around 199, 189. Sorry, 189. Okay, Qs continue to move higher. All right, nice. Okay, Microsoft, go already. Go Microsoft. All right, Microsoft is hesitating here at 386.60. Microsoft looks good though. Okay, we had this spinning top, long-legged doji with a high north of 390. I have the 390 call that expires next Friday, so I would like to exit today. If I can have a little bit more percent profit. I'm up about 25% right now, and I'd like to get maybe 50% on those calls. Apple's still looking good. Okay. Meta, Gypsy Barroom Queen, Meta, looking good. Let's take a look at Meta. Okay, so this is telling me the New York FANG Index should look pretty good too. Meta, all right, so do you note the pullbacks are becoming more shallow on the pullback? The one in October was pretty deep. Then the next one in November, less deep. The last one, end of December, was very shallow. We hit the 21-day and took off. So I would suspect that Meta is going to continue providing earnings come in as strong as I think they are. Same thing that I thought with JP Morgan, and JP Morgan's higher, right? JP Morgan gapped up. It is fading from the high, so there are some profit takers. But Meta, I'm thinking that if provided earnings are good. They're second to NVIDIA as far as earnings are concerned. Revenue. I was very surprised to see that. That was from Charlie Bolello. Anyway, notice that on the move higher in October, it came back below the 50-day. Then in December, it came down to the 50-day, held the 50-day. The last time it held the 21-day. My suspicion is that Meta is going to continue to hold the 9 or 21-day. So for swing traders, you want to be buying these dips back to the 21-day. That's my strategy. Pretty much my strategy in a nutshell is buying the 21-day on the daily, staying above the 10 MA on the weekly. Okay, so you go from high time frames to low time frames. So the 10 EMA, we're trending, the daily, then go to the 60. Everything is set up for Meta, staying above the 20 EMA on the 60-minute. And then, of course, you look for day trades where you got a nice squeeze that pops, So this is looking really good. And Meta's probably going to pull back right now. All right, looking for Microsoft to make some higher lows. So 10 EMA on the weekly, 921 day upward into the right for support levels to buy on the daily. Use the 60-minute 20 EMA. That's my strategies in a nutshell. Sell credit spreads, buy long shares, sell covered calls or straight calls. All of that works. So right now we're just waiting for the markets. All right, so let me grab a bottle of water. I'll be right back.
So in 10 minutes time now, at the top of the hour, Minneapolis Fed President Cash Kari delivers welcoming remarks and participates in a fireside chat at the bank's annual Regional Economic Conditions Conference. No text is expected. There will be a Q&A.
Okay, provided we don't have a complete fade of these moves here, I'd be scaling out into strength. Let's go take a look at I always do that. So that's pretty much what I do. All right, so we're threatening a breakout on the New York FANG. That looks really good. Let's rank these by percent and performance. Okay, number one is Broadcom. Broadcom had a nice bounce recently. Okay, so it's respecting its 9 and 21 day now, yet it's not checking the 50-day. This is showing more strength. I hope that makes sense. As we broke out of this base, the first retest came back to the 50-day. The most recent test came back to the 9 and 21 day. All of the moving averages, 9, 21, 50, are stacked. RSI is rising. Stochastics turning from a prime position below 20. MACD's turning. Volume's picking up. I mean, what else do you need? Answer, this is a perfect setup. Not right here, right now, but on the pullbacks. Now we're waiting. Maybe intraday can get a better entry. It's a Friday, so it's no big deal. But let's see. Airbnb, I still got Airbnb stuck in this note here. Airbnb. Okay, looking for Airbnb to break out. Apple looking good. All right, let's keep an eye on Apple. JP Morgan, a fade for the less faithful people taking profits off the table, probably options traders among others. JP Morgan at highs, 52-week highs. Okay, looking for a move higher. All right, so that looks good. Microsoft. It's Friday. End of the quarter for our kids. The first half of the year is in the books. Okay, Google looks like it wants to go. Let's take a look at Google. I might want to buy some Google. I don't have a position currently in Google. Google. All right, so it is rising. Not the best setup. Broadcom looked okay. Meta though. Meta. Ooh, Meta's going. So you're going to have people chasing this. Don't be the chaser. All right, Meta's still going. A little dip there on the Meta. Little dip. What's Palo Alto doing? Palo Alto, what networks? Meta. Okay, Meta looking good. Look at the volume. Relative volume looks good too. Okay, NVIDIA trying to burn higher. Meta looks good. It's at overbought level 2 right now. It's all green. 15, 30, 60 are all green. I'm looking at Grover signals. All right, New York FANG is on a buy, all green. Okay, that looks good. Amazon, higher highs, higher lows. Okay, I'm probably going to have to roll my calls up. I'm going to go ahead and do that now. Let me do that now. Amazon, maybe I wait. Maybe I wait. Maybe it just fades. Looks pretty strong though. Amazon, I might roll, Roy, I might roll my Amazon upper strikes, my call strikes, I might roll them up. Still got $4.30 to go. It's a Friday, so I'm not looking for a big move on Amazon. Google. Netflix just pulled back and looking like it's setting up. Snowflake, all green. Apple, all green. But it has the moving averages overhead resistance. Tesla reversing. There goes Meta and Tesla. Tesla coming off the lows. Volume, so that might be some institutional managers looking at this Tesla. I don't like it because it's below the 200-day. So last time it moved below the 200-day, it did find buyers and the volume picked up. Right now, all of the buyers looks like they're absent, mostly sellers. If you look at, look at the last two times right here. Well, I won't say the last time, back in October, November. And then again, we tested the 50-day. See the difference between now and then? I noticed this the other day when I got shaken out of my last position. We came down below the 50-day. Look at the volume. Look at the buying volume there. It's pretty obvious. Look at the selling volume now. So I'm not going to touch Tesla right now. There's a big difference. The last dip at 228.20, you see that? The second week of December pulls back below the 50-day. That's the green line. Pulls back. What happens? You had a lot of buying volume. That's the opposite of what we're seeing right now. We're pulling back through the 200-day. No buying volume yet. So wait for the buying volume. Tesla below the 200 and the 50.
credit, increases the profitability on this type of strategy, and because you own the shares, you can collect that 24% dividend yield on this type of strategy. Okay. So plus dividend, little exposure, don't
All right, the Dow Industrials. Dow Industrials. Okay.
Yeah, and I think this stock, up on the news that they're cutting up to 20,000 initially employees, so that's typically puts a bid in on the shares also. They did take a charge here, but you look at that parabolic move on the right side of this chart, one of those October lows as interest rates came off those elevated levels in mid-October. But for this one, I looked at something where, hey,
Okay, the Dow Industrials. I see Russell's comment. UNH is lower. Diamonds are just hanging out here, not going anywhere. Our Q's starting to see a little profit taking. Q's seeing a little bit of profit taking.
Shortly expecting comments from Fed's Kashkari. So again, the live video or the registration to the live video is available on his entry in the calendar. Also keep in mind as well at the top of the hour, the Wells Fargo earnings call is due to start.
So you got a good risk reward setup on that. You pay $240 debit, that takes your break even just below 55 bucks over the next 98 days.
NVIDIA looking really well. NVIDIA, what do I want to do? I'm up 60% on NVIDIA's credit spread. There's no way this is coming all the way back to 475. It's probably just going to stay up there. All right, I'll leave that alone too. Airbnb up nearly 40%. Airbnb, credit spread. SMCI looking good, hanging out at the highs. SMCI. Okay, SMCI flagging at the highs just below 357. Looks like it's getting ready. Look at the volume here. Look at the volume first and second week of December. See that move that broke out above 317.50 and then retreated? It retreated back to the 50-day. Remember what we were just talking about with respect to, what was it, Meta? Okay, yeah, Meta. See how Meta pulled back below the 50-day, pulls back to the 50-day, pulls back to the 21-day. All right, so the same idea here, SMCI pulls back below the 50-day, back to the 50-day. This next time, if it does pull back, most likely gets respected by the 9 and 21-day. I'm just judging by the volume that's coming in over the last 5 weeks and the fact that SMCI is holding now. Once again, let me just review. Let's look at Meta. The other way. Look at Meta. Below the 50-day, at the 50-day, at the 21-day. You can see how it stair steps higher and the moving averages, the pullbacks get less and less pronounced. The things that I look for, maybe not what you look for, but you see the distance here? Look at that pullback. More shallow to the 21-day, 50-day. Very shallow to the 21-day. Next time it's probably going to be even more shallow. We got earnings coming up. Okay, so look over here. See that deep move there? All right, and the volume's picking up. So volume's picking up as it moves higher. Moves higher. Look at the volume. Look at this volume here. Okay, now we just need volume. Volume's starting to pick up right there as we're starting to move higher. See that right there? So that's Meta. So we're looking at SMCI with the same idea. Okay, probably what would be even better is if it moves sideways instead of pulling back to the 90 MA. That's giving signs of strength. Keys are pulling back, obviously. So what we were saying before about take profits into strength, we're already starting to see a retreat. All right, so they're going to shake this tree pretty hard, it looks like.
Available anytime, anywhere,
on any device for free.
Schwab Network, empowering every investor in trading.
Okay, NVIDIA, Theta. Wow, Theta is huge. Oh, that's today. The Theta for today is $1.27. 10.27. $10.27. $10.27. Wow. Everything is leaking out of these options that expire today, which makes sense. The puts. All right, my expiration is 216. Let's go to 216, see what delta is on 216. While we're waiting for the markets to find some buyers. Theta is $28 a day. $28 a day on those puts, both the long and the short put. So let's see. NVIDIA hanging out at the highs, showing strength. Bitcoin, nothing there. Okay, so let's go look at what is actually working today. We had small cap and large cap energy. There's Chevron. I believe, Corey, you said that Warren bought more shares of Chevron. Pretty soon he's going to own the whole company. Disney, trying to hold. Disney was a disappointment. JP Morgan, pop and fade. Looks like weak hands or people that just want to take profits and be done with it. If the dip gets bought, we'll see it. JP Morgan probably needs a little consolidation, I would think, right? Johnson & Johnson, grinding higher. IBM, following through. Recent watch lists. IBM. Speaking of watch lists, we'll go look at the watch list. AMZN, Coca-Cola, still at 60 for the past 2 weeks. Salesforce and Procter & Gamble. Okay, let's go take a look at the watch list real quick. Many of the watch list stocks took off. All right, and we'll go for 1 week, 1 week performance. So look at all the green in the watch list. Watch list for 1 week. Mm-hmm. Oxy. Okay, Oxy. Thank you, Corey. I knew it was one of those. Okay. So the watch list looking pretty good, right? SMCI number 1 on the watch list. SMCI 310 was the upper strike. SMCI to start the week, we were looking at 310 to start the week. All right, so here's where we started at 300, and we're finishing up near 50 points. Not bad. Not bad for SMCI. Up nearly 50 points on the week. I would say that's a pretty good result for just one stock. Beautiful.
see that they've started to lose some of the momentum to the downside as well. So maybe stocks are a little bit more focused on this status a couple weeks ago. So bonds are moving around this week. Yeah, again, kind of holding around 4% though for the most part. So I think if we were to take out 375, that would probably green light momentum back to the upside, 3.5 for sure. But you know, we were talking about Nestor, who I wanted to point out earlier, a voting member on Fed. And then we'll hear from, I think it's Kashkari later on today. So the market again sort of waiting for more information. I think bonds reflection thereof. You've got the 10-year comfortable around 104. I'm sorry, around 4%. Dollar comfortable around 102. So yeah, I mean, I would agree. I think if this continues lower, and it does look like maybe we'll start to roll over here a little bit, then in theory that's bullish for stocks. But even as some of the stocks are right now really treading water. Yeah. You know, I feel like again, kind of making too much as we head into the end of the year. It seems like the market was so late. The CPI didn't really seem to go one way or the other. PPI always seems to get discounted, so we're focused into earnings. And the banks were a little bit of a disappointment. Yeah, the market hated the airline earnings apparently, or maybe doesn't like crude oil up. So there's some conversation to your point here. WTI is still pretty well bid. All right, so stocks mixed, not bad. Again, just a big bond rally. The bond move is more pronounced, I feel like, than the stock move right now. Look at Delta down 7.5% now. Market really tanking the big airline. The other thing too, though, we're going to talk later on about all the spot ETFs for Bitcoin. So you can see down 2%. You're getting no risk on there, so that kind of goes against the market a little bit too.
Okay.
Element where you would think yield down, dollar down, usually good for Bitcoin as well, especially with the ETFs. I mean, this is kind of a disappointing price action, I feel like. Yeah, I feel like it ties into kind of what we were talking about in terms of the indices, the rally we saw at the end of the year. Sustainability is difficult when you get moves like what we've seen, right? Especially the build up, the anticipation, whether you're talking into eco data or approval of ETFs ultimately, you need to find that next leg of enthusiasm, of interest, and oftentimes you see a fair amount of selling coming into it, right? So it's not necessarily a lack of buyers so much. You also have that inflows that start to come in as you get some profit taking. So again, you have two forces at play here. I'm not surprised to see a little bit of a pullback here, but I think again, looking at this longer-term rally, going all the way back to the beginning of January of last year, you can see well-defined trends still higher and still holding these upper levels. So no real indication of rejection as of yet, and a very digestible trade.
Okay, so Meta, little dip here. Let's see what Microsoft is doing. Microsoft. Okay, flat VWAP, SMCI, Super Micro, looking for the breakout. Okay.
Wells Fargo CEO says there's significant uncertainty remaining regarding timing and extent of the Fed interest rate actions.
We've got a few big ones already this morning, but some giants next week too. Kevin Grant, senior correspondent with Goldman Sachs, set to report on Tuesday. Did I get that right, Kevin?
Exactly, yes. We actually do have the report on Tuesday, and actually it's going to be a very interesting report here, both from a technical standpoint and also from a fundamental standpoint. So the market is actually expecting revenue to come in at $10.71 billion. It would be around a 2.5 to 2.9% increase on a year-over-year basis, depending on the estimate that you're looking at. The adjusted earnings per share
Okay.
Now, however, that actually may change.
Tesla, no follow through. Tesla. Yeah, I don't like the way Tesla looks compared to the December move below the 50-day. This time we lost the 200-day, so maybe I think maybe Tesla consolidates a little bit. Maybe we look at it in a couple of weeks. There's no hurry. This is the long game. Stocks are the long game, not the short game. Okay. All right, so that looks fine. SMCI looks good. SMCI. Okay.
So that could also translate to Goldman Sachs, which is why we saw a little bit of a bid in pre-market trading here today. And then we're also going to be looking at the trading revenue, another key area for Goldman Sacks here. We do know that fixed income trading was a little bit volatile when you're looking at Q4. That could be a tailwind for them. We did see that as a tailwind for JP Morgan, but the equity business may have slowed down because of derivatives trading as well as just broader equities slowing down when it comes to volume. So those are going to be the two main areas.
Apple. You're going long Apple? Okay, cool. January 9th for next week. What are you seeing? You seeing anything? Apple. Yeah, Apple, I like it too. I'm long too. I'm long too on Apple. This is SMCI. Looking good, SMCI.
You're starting to see them divest themselves from certain retail products, especially if you're looking at like the Apple savings accounts and things of that nature. They just kind of want to get out of that business, go back to what they're known for, once again, investment banking, institutional trading, and I think the market would appreciate that. From a technical standpoint, however, it's also going to be a big earnings announcement because if you look at a 3-year weekly chart, it is actually pushing out to a significant area of resistance, right around that $390 level. Now, if we can break above that on large volume because of the decent report, I think that could also unlock some further gains when we're looking at Goldman Sachs. But it has rejected this area before, so maybe a dollar report may not be enough to give it enough strength to be able to break out of this particular channel. Maybe you do see a pullback. I think that's going to be the biggest question for the street. We have about an implied, we have an implied move of around 3.5% right now, either to the upside or downside.
More reward by the market kind of fear than Goldman Sachs. But I guess that kind of speaks to some of the missteps they made or the overextension into a retail market that maybe didn't fit them or suit them. Bank of America down 6% over the past year.
All right, so now the markets anticipate that the markets can go to sleep as early as right now. It's only 45 minutes into the trading day. Fridays tend to be slower. We do have Monday off, so some people may be taking an early long weekend, making a 5-day weekend out of it. 4-day weekend. Can't count. 4-day weekend. Okay, watching Microsoft. Microsoft looks like it might be doing something here. Microsoft. Keeping an eye on these FANG stocks, New York FANG stocks. New York FANG.
Also understand they have transformed their business over the last 2 years here. They're trying to divest themselves from certain global markets like Argentina.
All right, let me adjust this here. Annotate. Okay.
The domestic market here in the United States. So this is a really perfect chart. So even if you look at the adjustment after the 2008 crisis, because they did actually adjust their price here, the stock has not really been doing good over the last 2 decades. And so that's where there's a difference between Goldman Sachs, where they do still have some appreciation, and Citigroup, which kind of adjusted their price from reverse.
Okay, so this high right here that we put in yesterday got rejected. Okay. I don't need that anymore. I don't think we're pulling back to 236. Not there. That would be the 200-day. I don't see that happening. 50-day, maybe. 50-day, maybe. Okay, so let me just pull some of these over. All right, so dip there. Dip. Oop. Dip there. Working. Okay, so here you are on your 5th stochastics oversold. I mean, how many times do you have to see this to make money? First time, second time? Or do you have to wait for the third time? Every time we've pulled back on stochastics, and then saw RSI rise thereafter, you had a nice run, even if you didn't catch the absolute low. Now, the only difference now, well, one of the only differences I see right now that could keep this from remaining this persistent, it's like nothing is derailing this market. It's crazy. The one thing that I am looking at and debating in my own brain is the S&P, the number of stocks above the 50-day. What's left to buy? Now, stocks can stay above the 50-day and not be overbought. It's just an indicator of how many, what's the percentage of stocks above the 50-day. You start thinking about this on an individual basis, stocks above the 50-day. Okay, what are stocks doing? Stocks that are above the 50-day. So it's a measure, but it doesn't mean that it can't keep happening. All right, so we got 90% of stocks above the 50-day. Look at Meta as an example. This doesn't mean we can't keep going just because this is at this level. All right, 85%, 84%. You follow? So I'm trying to rationalize this being up here for as long as it has. I think it's more appropriate, really, when you look at the number of stocks that are below the 50-day. When you get this washout level, it's not exactly the same when you're above the 50-day. This is showing strength, even though this is in the red zone. And we've just seen how Meta can continue above the 50-day and the 200-day for that matter, and still, have these little dips and still be strong. JP Morgan, another one. JP Morgan gapping up this morning on earnings. It's above its 50 and 200-day. You follow? So it's just one thing that I'm watching. Let's go look at advanced decline. So I'd be more interested in what happens with advanced decline as far as our next series of buying. Okay, so you can see advanced decline percent, taking the number of advancers and decliners, taking the percentage of that. We're right at the zero line. We're holding at the zero line on the mid caps. Small caps are starting to turn. NASDAQ is starting to show a little signs of maybe consolidating more. But look at small caps. Maybe there's an advantage there. Small caps got whacked this morning. I thought I saw Russell say something about it getting slapped. Okay, it got slapped here. Back below the 21-day. I guess what I'm trying to get at is we're at the highs. We're not giving it up. There's still potential for follow through. We're consolidating still. Remember the consolidation, the box we talked about yesterday. Okay. We're still in the box. Still in the box. And really, when you think about it, we're in the upper half of this box. We're above the 9 and 21-day. 50 days turned up sharply. RSI is at 64. Not overbought, but not trending down. It's moving sideways. Stochastic still has room to run to the upside. RSI could turn up too. MACD's flattening out, but histogram is showing the bears are losing control. Volume is the one of the caveats. All right, so that's that. Let's look at bullish percent. Actually, before we do that, let's take a look at. Okay, so this is still dropping. All right, so as this line drops, it's telling you there's more capitulative selling. So that makes me want to go look at up-down volume. That's 2-to-1 on NYFANG. Tick cumulative is rising. That's telling me that institutions are buying more than they're selling. They're buying more on the uptick than they're selling on the downtick. Upticks being price moving one tick higher. Let's see. NYHL. Look at the spike in that. All right, so when you take this simple equation, simple math, new highs, subtract new lows, the difference, 150 more stocks are making highs today, which equates with tick cumulative, which is saying the same thing, just a different way of measuring it. And look, we're still above the zero line. Are we below the zero line? No, we talked about this yesterday. If you're a long-term trader, if you're 401k or IRA investor, you don't have anything to be concerned about just yet. You think about it. I mean, we got recession, we had supply chain. Fourth quarter last year, we had supply chain. Then we had the Fed raising rates. We had recession fears later in the year, 2023. You had earnings were an issue. Earnings were supposed to be terrible. Then you had consumer was supposed to be terrible, wasn't supposed to be spending. The consumer with less buying power, but yet still spending. What's going to derail this market? I don't know. I don't have a crystal ball. But what I can tell you is that price action is persistent. Persistent bid. Every time we dip, seem to find buyers. Obviously, one day that's going to change. Right now, though, it's going to take a lot to get this back down below the zero line. Look at the advanced decline percent. Advanced decline. That's about to make a new high. Looks like it's making a higher low. Higher low. That's going to make a higher high above that little pivot right there. And then maybe we make it above this higher high that we put in into December. That speaks to price action, which is showing something similar. Price action showing something similar. Top of the box. Top of the box. Okay, we got rejected at 4,800. We figured we'd get rejected at 4,800. That's a major level of resistance. Why do I say that? If you're a new member, we look at options positioning. What's this? Oh, okay. Options positioning, institutional options positioning. And that shows up in this chart. Okay. Here's the SPY. There's, S&P, 4,800. Look how tall that is now. Look at all the calls and puts at that strike, 4,800. And then 5,000 way out here. It's only 200 points, but the only issue I have with what I'm seeing right now is note the blue. That's puts, obviously. Those puts need to fill in between 4,800 right there and 5,000. Puts need to fill in. Oh, this guy's almost as annoying as Kramer is, that voice. So these puts need to fill in. Okay. And all the puts down below here, as price action continues to push higher, anyone that has puts, if we get a little dip, they have to take profits. If they don't, they're going to lose value. So they monetize. So every time we bounce, there's going to be people out there, traders that are going to take profits. Now, if we drop below 47.50 or worse, 4,700, I don't see that happening today. But if we drop below 4,700 or 47.50, then things could change. So we'll reassess at that point. But for now, the S&P looks good. The top of the box, 921.50, 200-day, 100-day, all turned up and to the right. Gut feeling is we're going to test 5,000 probably by February sometime, or at least start moving towards 5,000. It's too early to tell, though, because earnings are out. You know, the major banks. Let's take a look at the major banks. All right, JP Morgan, obviously gap up and fade. So I'm not even talking earnings. I'm just talking price action. Citigroup, little dip, but it's still above the 9 and 21 day. Can it consolidate more? Yeah. What about Wells Fargo? They have earnings today? No. There was a conference call today, right? Was it Morgan Stanley? One of these had a conference call. Wells Fargo had earnings. They beat expectations. All right, let's look at Wells Fargo. Wells Fargo. Okay, descending channel. This is still a bullish pattern, even though it's pulling back. Bullish in that descending channels tend to break to the upside, like this one over here. Okay, so descending channel, descending channel or wedges tend to break to the upside. Now, one thing I just got finished talking about was look at the depth of these pullbacks. Look at the July through October pullback. That was pretty significant. This pullback has been about, what, 4 weeks? Stochastics is resetting. Last time Stochastic was reset was here in late October. I'm not looking for the same kind of move because it's at 52-week highs, but this does look set up. About to get there. Volume, a little bit of selling into this channel. People getting frustrated, looking for a pop. All right, so we already got buyers at the low of the day and sellers at the high of the day, so that's possible. All right, so Wells Fargo beat. Let's see. Earnings growth. That's pretty interesting. Earnings growth on Wells Fargo is 92.5%. The company beat expectations by 1.57%, while revenue grew 27.17% on a year-over-year basis. Now, you might say, well, we lost the 21-day, Vinny. Yeah, we did. Is it an opportunity? I'm thinking it's an opportunity. I think it's an opportunity. All right, so let's look at, did we look at Goldman Sachs? Goldman Sachs, okay. So Goldman reports next week on Tuesday. All right, so growth has been underwhelming at best. They did beat expectations last time around on October 17th. Revenue grew 54.35%, while earnings growth, total earnings growth, was down 33%. Okay. So revenue growth, a different metric, was 54% year over year. Compared this year to last year, same time. 54%. But earnings growth for the year is underperforming at minus 33%. The company beat expectations by 3%. Goldman Sachs. All right, so flat channel. So the rule of thumb with a flat channel, as you know, if you read any investing books, the rule of thumb with a channel is take the direction of the breakout. Is it a breakdown or a break up? Excuse me. So I'm not doing anything with banks right now. And I don't have a JP Morgan position. I have a JP Morgan account. I guess that counts for something, right? All right, watch, here goes Microsoft starting to move. Microsoft starting to move. All right, so these stocks starting to get an uptick, and Qs are turning up.
that there's a whole crypto ecosystem beyond Bitcoin. Bitcoin is like 30% of crypto volumes, and what tends to happen is that as and after Bitcoin rises, crypto natives kind of recycle their Bitcoin profits into riskier, more speculative other coins, which are just open source database projects that are interchangeable with each other. That's exciting. So you can watch the X Bitcoin.
All right, watch Microsoft here.
Strategies and indices with our partner market vectors as well, so that investors can track that on their terminals or FactSet. All right.
Watching Microsoft squeeze. Yeah, I agree with you, Paulo. Let's take a look at something. I talked about this yesterday and in the weekend video. Okay, so here is the S&P 500 versus S&P 500 versus the CRB index composite. Okay, commodities 10. This is a long term. This is long term chart. Okay, monthly time frame. Very important. Monthly time frame. Where are we compared to, say, 2000, the top of the market in 2000? We're reversing, just like in 2003. Look at 2003. The last time we made it down to this level, 2003. 1975 was another one. And what happened thereafter? The markets continued higher for multiple years. We're just starting this bull market. If you look at this one chart, now obviously, I never base anything on one chart or one indicator. But this is good for the long term. This is good for the long term. I believe it's Martin Pring that mentioned this one.
Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360.
All right, that's one. Gold ratio, S&P to gold. This is about to turn. That's about to turn. Actually, it is turning. It is turning if I turn on a Zoom thumbnail. Okay, it's crossed over. There's a monthly time frame as well. What's going on? Zoom thumbnail. Okay, there you go. There's your crossover. Okay, last time it crossed over. These are higher lows. Higher lows. But yet we went higher on the last cross and this cross here. Okay. So just keep that in mind. We're crossing over S&P versus gold ratio on a monthly time frame. Last time it turned from a very deep level was 2009. Again in 2020 during COVID. Now it's crossing up. What happened after COVID? Had a big run from 2020 into 2021. What was the emphasis that we kept talking about in 2020, 2021? In 1999, we started following Spot Gamma. What Brett over at Spot Gamma said resonated. What are institutions doing? The whole time from 2020 into 2021, the call wall kept shifting higher, kept shifting higher, kept shifting higher. for over a year. What's it doing right now? It's shifting higher. A lot of these indicators are saying the same thing. While I can't predict what the market's going to do, I would never try to do that. There's a lot of things that point to a repeat, and institutions are positioning accordingly. Else we wouldn't see all those calls sitting out there at 5,000. Calls, and well, now we need puts. Okay, now we need some puts. Microsoft looking for the break higher. Okay, Microsoft. All right.
Not bad. So yeah, we slowed down, got hit off the breakout following that 1-year high, but then the RSI kind of catches itself before slipping under 50, so or slipping under the midpoint rather. So that's decent. Could be worse for sure. Let's talk Twilio. Had some ups and downs here over the years, still, Kenny, but one of the times that certainly has gotten better as the market has priced in a shift to liquidity and Fed and all that stuff. We're up about 2% this morning. Another positive note here, straight up upgrade.
Yeah, straight up upgrade on paper similar to overweight from neutral. Price target raised to $82 a share, up from 75. So that does imply some further upside from where we're trading at around 73 to $74 a share. They do see material upside to potential free cash flow estimates, and they've estimated better on their call. It also
Mm. All right.
crypto needs to see also as a catalyst and overall its capital return. They report mid-February, that's February 14th after the closing bell. But what is so fascinating when you speak to the roller coaster that's been Twilio, we're up 40% on the year-over-year basis, and then you zoom out and things look a lot less optimistic. Mind you, this stock's all-time high is $457 a share. So we're off the all-time peak by about 84% from here. That's brutal, especially when you look at the average price right now is around $71 a share. So that pretty much implies no movement from
Cool. Cool. Solar Edge, yeah. I like it. I like it, David. Watch Microsoft here.
It was a long time. It was an early favorite in the cloud sector, and then it had some rough patches basically since money got tight and Fed was hiking a couple years ago. Did I hear crypto in there?
Apparently so.
I don't get that. What like?
It's just like it's gonna be like one of these things where it's like blockchain where it benefits everything. I don't really understand it.
Part of the thesis because we're doing messaging services and stuff we're providing for big crypto clients. Maybe we can't put like a reputable buy Twilio stock. I don't. That part I'm confused about. But all right, Rick, how are we looking after the last couple months? I mean, Twilio basically did turn around as soon as the market started pricing in a big Fed pivot.
Yeah, but I kind of would echo what Jenny was saying. Kind of a lack of net movement. Look at from where we were at the earnings event in February, all the way back on the left side of the chart. You can see right after that is where we hit our intraday yearly highs. Since then, And since the day we closed, we're back off significantly. Now we're basically almost back where we started. So we've seen some volatility, but like I said, not a lot of overall change here. And really, we made kind of another leg downward. We had a nice run upward there for a while. We had this sharp upside trend line. Like I said with our last chart here, almost near the yearly highs, a big run upward, and then a drop off, a consolidation around a support level. In this case, it was some old highs near 67.62, that light green line there. And then we are making our way back up again. The key difference from our past chart, or one of them at least, is that our last chart was breaking above resistance.
All right, so are you seeing a lot of put sales? I'm sorry, I lost the message. Who just sent me that on SEDG? The Joe K. SEDG. All right, yeah, it looks like a floor. Looks like a floor is in. Joe K. Let's see. Uber. All right, Uber with a big breakout today. Uber. Nice breakout on Uber. MACD crossing, RSI rising. Uber, nice. Bookings you're looking for? Looking at Russell, BKNG. Yeah, it looks like a good short. I agree with you. When is booking? When are their earnings, Russell? BKNG. February 1st. Okay, so February 1st. So I could do 126 call and buy. Sell the 35.20 and buy the 35.60. 35. Oh, 35.20. 35.20. 35.25. 35.20. 35.30. There's no open interest. Okay, I got to take a couple minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday the 12th, 10:45 on the East Coast, the best coast. Just watching Microsoft for a breakout. I'll be right back.
Watch the flight attendants. They're not nervous, then I'm not nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network. Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I'm Nicole Cavallini, live from the New York Stock Exchange. Catch me on Schwab Network anytime, anywhere, on any device for free. Schwab Network.
SMCI, no follow through.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennie.
Okay, ZIM integrated finally popped. ZIM integrated finally popping here. ZIM. Okay, back up to the highs. Okay, I'm going to refresh in my coffee. I'll be right back.
AUM pickup, and compared to other companies, not a ton set aside for credit losses. It's not as big of a company, but the fact that they've got sort of an organic revenue growth here, whereas JP Morgan kind of acquired the revenue growth, I feel like that stands out.
Right, and it's worth noting, you talked about that big pickup in assets under management. It jumped about 8% year over year to $2 trillion. And that said, also the company was able to return about $4.9 billion of capital, and that's around 123% of earnings to common shareholders in the full year 2023. Also declaring the quarterly dividend of 42 cents a share, which is the same that it had last time. But shares broke out to a new 52-week high today. They are up maybe around 14% over the past 12 months. Bank of New York Mellon doing pretty well.
Yeah, pretty solid move here. Okay. Nice report. The stock is one to keep a closer eye on, given that we've been focused so much on JP Morgan leading the Giants. BNY Mellon kind of leading the mid-cap banks. Thanks for needing. All right, so we do have a mixed market, but at least for the banks. But overall, our indexes all turned to red. Market New York Time, George Tillis and Scott Durfee joining me this morning. George Senior Markets Correspondent, Scott Senior Manager Trading Education, Charles Schwab. All right, we got PPI in always investors wanted yesterday.
All right, ZIM. Keep thinking about Tesla, about some call credit spreads, because it just can't seem to get out of its own way. VIX is popping up now.
down to core services, which are really dug in. And I think overall, the core print came down below 4%, and now with PPI up only 2%, 2.5% year over year, we're starting to see slow and steady declines in inflation, and that's a good sign, I can suggest. I think if you just look at, for instance, the difference between core CPI and core PPI, there's a case we made that even cutting rates 6 to 7 times, or even potentially 8 times, would be in line, bringing the cost of capital down with the cost of production. When it comes down to, of course, the PPI being around 2.5%. So I think it's a good sign. I think at the end of the day, yesterday was a little bit of a surprise for the Bears going into the
All right, Tesla continues to fade. Microsoft sitting on top of VWAP. Q's pulling back.
Yeah, I was going to say that bond rally is continuing on. And as we see that bond rally continue on, that could affect us. Now, we'll have to just kind of wait and see how all that goes. But getting back to the PPI, CPI thing, we would anticipate if now PPI would have come in hot, we'd be having a completely different conversation. It's not unusual for CPI to come in, especially as we're winding down the interest rates. It's not unusual for CPI to come in a little better than PPI. As PPI doesn't always translate all the way through, and it's kind of lagging the CPI. The CPI pulls that through. So, nothing to panic about. I think that what we're paying attention to do in terms of earnings and from the banks and all of those other things are really where investors and traders are putting their thoughts and their focus. And again, that bond rally is something that definitely needs to be paid attention to.
George, what do you think about it? I mean, usually the rule of thumb for the past couple of years is yield down, stocks up. And now it's also usually yield down, dollars down. But we're getting yields down, stocks down, yields down, dollar up. To me, I'm kind of leading the witness here. But if we ever do make that switch where it's yields down, stocks down, that to me is kind of like more of a recession camp type of trade.
Well, that's exactly it. I think that's what's going on. At least today, that's the perception or the analytical conclusion we can make. And eventually, I think OJ will start to see that manifest more in reality, especially as we get closer and closer to the rate cuts. I mean, what was interesting yesterday, if you look at the federal funds futures probability, last week it was 64%. Initially, after the CPI report, there was a slight decline, and then it actually closed over 70%. So, to me, that really sort of suggests that there's some expected weakness or some sluggishness, and that's why we are seeing, of course, stocks fall alongside with rates. And also, lastly, when the Fed starts cutting rates, there will be a redistribution, in other words, a roll from short-term treasuries into long-duration bonds. Sometimes that might end up happening a little bit before the event, but as we get closer to that event, I'm a little bit wary of how the market will respond.
Yeah, well, pressure definitely on. 81% chance to cut right now. Pretty amazing stuff. Maybe the market thinks this is now going to happen out of necessity. We're going to slow down, but unfortunately, we're out of time. Appreciate your thoughts.
Yeah, Apple with an inside day.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Powell for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions.
Generally, what you see on a Friday, generally we see a slow momentum. We got Microsoft moving sideways. Do we get any kind of follow through? That's what we're waiting for. So Apple trying to bounce. Microsoft hanging in there. FANG stock's not giving us much to go on. Looked good for about 5 or 10 minutes. Yesterday I was talking to Jason, one of our new members, about about the tendency of the markets to bounce after the morning rush. Yesterday, we see Microsoft ran up to the highs, and then if you had waited on Microsoft to buy around 11:30, Jason, that's what we look for a lot. Good observation. It's observations like that that are going to make you money over the long run, especially if you're looking for best entries. Okay, so in this case, I'm looking for an ABCD pattern. Yesterday, we got that at the open. We got the A pivot on Microsoft, dropped down to 11:30, got B and C. By 1 o'clock, this started to break out. And had you paid attention or started to look for this around this time, you would have had a great entry on Microsoft and you'd be up quite a bit. There goes Microsoft now starting to move. Volume starting to pick up. Volume picking up. So that was a great observation, Jason. Okay, so that's what we're looking for right now. The markets are not giving us much. Looking for a nice follow through in Microsoft. See if we can take off to the upside, get something working here. All right, Microsoft starting to take the high road.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think to swim. With robust charting and analysis, nearly endless customization, and up-to-the-minute news and insights. Trade brilliantly with Schwab.
All right, so that looks good. Okay, we're about to break higher here. Microsoft watching for Microsoft to break higher. Or Microsoft trying to go.
Good morning. We are 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalini, live on the floor of the New York Stock Exchange. A happy Friday to you. Earnings season really kicked off. In the meantime, here's what's coming up today's show. We're going to start off by digging deep into those big bank earnings today. Everything from JP Morgan to Citi. Also checking on the airlines following Delta. A lot of down arrows there. And we'll take a look at Netflix after a bullish analyst call. And a quick look here at the markets. Right now, you are seeing up arrows. The 10th up week in 11. Four stocks, though, this is for the week, I'm saying, is up. But right now, OBM change line is back in the red. In fact, the Dow did hit an intraday high, but it's since pulled back. Right now, the S&P is down 6, 754.
All right, looking for Microsoft to break higher right here, right now. There it goes. There it goes, Microsoft. Microsoft breakout imminent. There we go. There we go. Boom. Okay, now we just need to get above yesterday's high over here. There goes Microsoft. Nice trade. Nice one, Benny. Nice one. There goes Microsoft. Google's coming out of the squeeze. Google next. Google. I'll go Microsoft. All right, Microsoft continuation. There's your breakout. Green acres, green stocks are the place to be. That's beautiful. Thank you, Mondo. Beautiful. There's your breakout. Google looking pretty good too, by the way. Google by the way. Google. All right, Google looks, it's about 5 minutes behind Google.
I'll go back to yesterday and a lot of excitement pertaining to the spot Bitcoin ETF. What did you think about that? Because we start to see all these ETFs coming to life and the trading ratios.
There goes Microsoft. There goes Google.
Bitcoin higher, but then
Oh, it's Friday.
are you interested in that in a portfolio?
Well, it's something that we've been examining for some time. I think for us on the futures side, the fact that there's futures traded in Bitcoin makes it a very interesting investment opportunity. There's clearly volatility there. There are trends, and it's shown to be an interesting asset, but it hasn't shown the risk off uncorrelated properties as some people have touted it. So I think a lot of people are just excited about the trends of the new area or trends for investment.
What do you think of what we're hearing now? All right, that's the Phoenix opening here at YN Expo. What did you think about today? So we're kicking off earnings season. How do you feel about that?
I don't know what that was. I don't know what that was. Okay.
What's interesting today is it doesn't feel like the market is focused on CPI and CPI. It feels like it's much more focused on the energy move. And so I think there's a little bit of a pause. If we could have some good earnings numbers, that would be, very supportive more to the soft landing narrative. So I think that would be ideal. So we'll just have to see how that plays out.
As the chief investment strategist, what's your strategy for 2024? What do you tell them?
So the interesting, we work in the trend following space, and we've been following global trends for the last 2 to 3 years. And the biggest shift that we've seen, and this is probably the most notable, is that fixed income signals have finally shifted after 9 quarters from short to long. And so what we're looking for this year is a normalization of the yield curve. Rates versus short-term rates. That's the next stage of the trade. Right now, market trends on the macro side are focused on soft landing.
Microsoft going. Microsoft. Let's go, Microsoft. Keep going. Keep going, Microsoft. A little bit of retracement there.
Should we have more geopolitical tensions or upticks or challenges in inflation, those could be something that we want to pay attention to as an anchor to what would be the next phase of this trade.
All right. We'll watch that. Maybe higher than market.
Microsoft doing well.
Busy year ahead, I'm sure, Patsy. Thank you. Patsy Commenting, AMZN Group, thank you so much for being with us. Up next is Big Three. We've got three first three trades. Then next time we'll take us to the technicals. Dan Deming will take us to the trades. Rehearse Diva to the Qualcomm. Next here on Trading 360. We'll be right back.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window. Other guys were charging $400 to $500. He just didn't want to do that. He's proud of the price he was charging. My dad instilled in me, always put people before money. Be proud of offering a good product at fair price. I think he'd be extremely proud of me.
There's no place like the New York Stock Exchange. We got you covered. The biggest stocks, the biggest trends, all the market moves. The Watchlist with me, Nicole Petalidi, 2 p.m. Eastern on Schwab Network. A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Trend Investing. 1 p.m. Eastern, only on the Schwab Network.
Oliver Rennick for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network. Accelerate your market knowledge and shift your perspective.
Just a reminder, we're off on Monday. We're off on Monday. Microsoft looking good. Ooh, what's looking really good? I want to take a couple of positions over the weekend, a long weekend. I like to have that theta kick in. Let's see, Microsoft's at the highs. Already have calls on that. Microsoft. Let me take another look at Microsoft daily. Could add a credit spread. Let's see, Microsoft. Yeah, see the multiple times it hit that 366, 365 zone. Let me see what puts look like there. Microsoft reporting earnings. Microsoft earnings, January 23rd. So that's only 2 weeks away. Not even. A week and a half away. And we got a shortened week next week. So Microsoft's out as a potential. What about Google? Google, when is that report? Same time, basically. February 1st. So Google's better. Let me see what Google looks like. I'm looking at potential credit spread on Microsoft or Google. Now, the next step is, do they have enough implied volatility? So let me see. Yeah, it looks very similar, right? Microsoft and Google look very similar in patterns as far as this run up. Okay, so this week we ran up, we hit the highs, and we went sideways for a day. Microsoft flagging, but it looks like it's going to fall. Look at the volume on Microsoft MACD turning. That's probably going to continue. Qs look good for a move back up to the highs, shaking people out, shaking the tree and then turn it. All right, NVIDIA's good. Bitcoin still fading. Meta is going. Maybe Meta. What's Meta? February 1st is Google. Meta is February 1st as well. So what Meta? Do I want to do Meta or do I want to do Google or do both? Meta. Okay, let me see a credit spread on Meta, what that looks like. And then I'll compare implied vol. Meta. And we want to get out before, well, we could do the second. Because if we get a run up February 2nd, vertical put on Meta. Let's see, we'd want the 350. 350. Sell the 350 maybe. 350 for the 2nd of February. That's a delta of 23. 350. We've had, remember what we talked about with Meta this morning. See how these dips get shallower and shallower? It's respecting the 21 day. So I don't expect it's going to get below the 50 days. So if it took the 350, that's got a implied vol of 44%. Okay. Oh, that looks pretty good, actually. Sell the 350, buy the 345. That's a dollar credit. That's 25% return. Okay, so I'm going to go and do that. Let me make sure I got everything right here. 350, sell the 350 put for February 2nd, buy the 345. Okay, I placed the order there. Okay, so I just took this trade. I'm going to post it in the, I'll post it in the spreads channel. Okay. On Meta. 02, 02, 350, 345. IB is 44%. Delta is 23 and 19.
Yeah, I mean, I can see where Ben's coming from. From a technical standpoint, it still looks a little challenged, but valuations at these levels, as well as the out of favor nature, as consumer defensive really did fall out of favor last year, I do think that there's potential here for that to see some mean reversion, and with that, I think Hershey's is going to benefit. So again, I don't the trade example. If that's something I want to queue up here for you on Hershey's, is I was looking at a risk reversal. In February, so basically selling the 190 put, buying the 195 call. You can do that for now and run it.
Okay, I'll double up on Meta if it continues. Okay, and I'm going to post this in the spreads channel. All right, spreads channel.
Holdings within these sectors, and Viva is another name. Excuse me, another name that we have certainly been keen on over the years, and it fell out of favor in early 2022, and it really has struggled for the last couple of years. But it again, another type of pattern where you see some cyclicality, and now that it's caught its uptrend once again, I do believe that it's going to challenge that 230 level at a minimum, which was the highs from last year. And again, this is a stock that once it starts to realize a trend, it usually has a tendency to run longer than what is anticipated. So that's the reason why I'm looking at Viva to continue to higher price action.
What do you think of this one? And you think this has the momentum that it needs for this higher price action?
Okay, so let me just enter that into my spreadsheet. All right, so today is the 12th of January. January 12th, Meta. Okay, we have expiration 2 February. I'll get out of this before earnings, by the way. No. Bull call. Bull put spread. And we took the 350, 345, and we got a credit of about 25% of cash held. Let's see. All right, so that's actually got a little bit more than that. 225, 228. Oops. Typing that in the wrong column. 220. Okay. Credit. Credit. 774. Okay. Let's see now. Okay. 2226. That's a 29%. 29% return. 29.19% return ROI, return on investment. 29% return on investment. I'll double up on this position. I have to put $774 aside. It's a small position, 226 cash. Just keep adding those up. Keep adding them up. Oops, I got an erroneous number here. Sorry, I'll repost this. Let me get rid of that. Let me delete that image. Delete, and let me update my. Oh. Sell format. It's just a number. Why is it doing that? Text. Okay. Do that as text. Conditional formatting text. Okay. So we are doing the 350, 345. Okay. Yeah, that's good. All right, so that looks better. My apologies.
You're going to see what I look for, right? That high prediction on the left side of the screen, sideways consolidation, and basically a vertical shift into a horizontal type pattern. This is a value area downside. And just going back to, again, a couple of weeks ago, Friday, into the holiday shortened week last week, we bottomed out around 133. But you can see they're mostly rotational. Most of this has occurred around the 138 level. So again, nothing really to take away. Just want to show you some of the weakness in the two phases of development as we shifted into a horizontal phase. Now, let's take a step back here because I mentioned the significance associated with 142 level. Let me show you exactly what was going on as we rallied off the fall of last year lows. We're talking October. Areas of consolidation formed at higher and higher levels. And then you can see as we were balancing around 142, the bulls were looking for a breakout to the upside. They got one. We balanced around 145. But as we formed that area, they were referencing the prior area balance. Again, that 142 area. Because we didn't want to see it get down below that. In fact, it is the trend up got validated as we took out 142. Now, on that bullish note, and kind of similar to the other two stocks we looked at, Viva and Hershey, we could see some random kind of price activity below 147 and up above this lower extreme 133 that would be supportive of Dan's kind of bullish narrative here. But I think it would be relatively contained. And let me show you again the significance of that 142 area, because in this instance, we're talking about what had been a trend low on a longer term chart going as a daily candle all the way back to September of 2021 here. But we were forming areas of value at lower levels. Again, while we were balancing around 120, we were referencing a 140. Look what happened. We got back up to 140, that 142 area.
All right, so that looks good.
Could we be in for some random price activity in a larger area of consolidation? Certainly, and that could lend itself to some randomness upside. But I think that longer trend is still intact.
Okay, Oh, Meta, geez, looking really good, Meta. Thank you. Okay, so looking good, looking good.
A great big three today. Thank you both gentlemen today. Really appreciate it. Deming of KK International and I'll spend much time there on the chart. Coming up next, we're going to check in on what's going on with Delta. All those airlines are weighing on the
All right, what's Lily doing? Lily continues. All right, so Lily's looking really good. Lily's yet another credit spread. You add up all of those credits, it comes to a pretty nice number on a monthly basis. I just posted a new trade on Meta.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insight.
GMed is up a couple of bucks there. Scott, GMed is up. I did sell some covered calls and wound up rolling twice now. I sold the first time around. That was like Wednesday, I want to say. And I rolled up yesterday. The first time I got a credit of about, I want to say $2. Let me just check here. Order status. Let me go to GMed. GMed. So I bought the shares. I like the idea. GMed. Okay, so GMed. Let me write this down because otherwise I'll forget. I don't like that. GMed, where are you? There you are. Okay. GMed. We'll put that in the notes section. GMed. Rolled up for $2.05 credit to, okay, originally. Is that, oh, $1 credit. Okay, so originally it was $2 and then I added another dollar, so that's $3. Okay. Original credit for the covered calls. Covered calls was, where is it? $2.05 per contract. $2.05 per contract. Okay, so total in GMed, I've got $3.05 in credits. Okay, and that's if I get taken out at 55. Now I got in at 54.50, so we'll see if GMed continues. If it does, I'll just roll up again for another credit and widen the profit in the shares. Okay, that looks good. And okay. All right, let me just go through my positions as we wait for the markets to stabilize here. Penduo Duo. All right, Penduo Duo is one you know about. We took a position on Penduo Duo. All right, I'm just going to go through these while the markets are sitting here doing nothing. If you took profits in Microsoft on the way up, let's see what Microsoft is doing. Microsoft. All right, so it looks like higher highs and higher lows building on Microsoft. Yesterday we hit a high at 390.60, more or less. We sold into strength calls that Buford Buford had mentioned, David had mentioned Microsoft. He was taking a Microsoft trade on, what was that, Wednesday? Held into Thursday, took profits into strength. We pulled back, talked about the thing that Jason was looking at. So we came into yesterday with that gap up. We came into yesterday with Microsoft. It gapped up, took profits into strength, which we usually do in the first 15 minutes. And then the price action pulled back. That's where Jason started looking at a potential position, thinking about an ABCD pattern. He got his ABCD pattern, and if you bought Microsoft yesterday between 11 and say 1 o'clock, you did very well, and you could sell again today. So 2 different trades, 2 different strategies, but similar in setup, that you're buying the pullback and you're selling into strength. Always. Okay, so Pinduoduo is one that I'm looking at. Pinduoduo, Chinese stocks. Pinduoduo. Okay, so here's Pinduoduo. Okay, so I sold the 140 put and I sold the 155 call. Then I took a 135 put. I bought a 135 put for protection. And overhead, I bought a 160 call for protection, expecting price action in Pinduoduo to do what it's been doing for the last several weeks, stay in between these strikes. And in the process, I collected a credit of $196 per contract. Just roll it up to 200. That's 25% return. 25% return. That expires next week. Okay, so again, for 2 weeks worth of Schwab holding my cash, Schwab can hold my cash. I had to put aside, how many of these do I have? Bear with me 1 second. Okay. For every $100 per contract, I had to put aside. Schwab took $400 cash of my money and just put it aside. I can't trade with it. So that's a 25% rate of return in 2 weeks. ROI of 2 weeks. 25% ROI in 2 weeks. 12.5% per week. It's hard to find that kind of rate of return. So in the big scheme of things, it might not seem like a lot, but think about credit card interest. Okay. Figured on a daily basis, right? You're paying interest on a daily basis. So each day, whatever your balance is, you're going to pay interest. Now, credit spread kind of works the same way in some respects, in that it might not seem like a lot, but if you add a bunch of these up on a monthly basis, that rate of return becomes exceptional. I mean, where can you get a 12% return a week? You know, with the risk that goes with it isn't that great. Meaning it's not very high risk. Okay, to make 12% per week, that's not bad. I mean, think about real estate. You have to own the real estate. You have to pay, to keep the properties running. If you're selling or if you're renting real estate, so there's a lot of ways to make money. This is just one of them. Credit spreads, iron condors, butterflies, broken wing butterflies. Like I said, on November 30th, my son and I, we opened up a trading account for him. It's a small account challenge. The idea is that we're going to double his account. Started with $1,000. We did take shaved a little bit off his account last week. We lost $100. Basically, we're back within $100 of where we were the beginning of the week. So we had a couple of positions we had to take off. Tesla was one of them. Okay, Tesla shaking us out once again. I know what I did wrong on Tesla now. So presently, he has a credit spread on Apple, 175, 170. He's got the Amazon Iron Condor that I have as well, just smaller position. And he's got DoorDash, just a put credit spread, which is making nice money. DoorDash. So looking to double his account, $1,000 to $2,000, small account challenge. I want to show him how you can double your money. Now, I don't know that we will, but that's the goal. That's the goal. So little bit by little bit, small account. You don't need to take a lot of risk, but you can trade some of these positions that we're talking about and not risk a lot of money. Okay, the total risk on the DoorDash, total risk for him on the DoorDash, he made, I think, $55 in credit for one credit spread. All he needed was $200 in the account. So he could have traded that with a $200 account, but we have 3 positions. So the credit spread, the cash secured by Robinhood in this case, was about $250, I think. No, it wasn't that much. It was like 180. And he made like $60 in credit, I believe. I didn't take copious notes on his positions. I'm just mirroring what I'm doing. Same positions. And with a small account, under $1,000, he's able to take 3 credit spreads and manage to make $300 in a couple of weeks, if all goes well. Now, all didn't go well. To start the week, we lost $100, but now we're back to where we were. So it's definitely something you should look at, especially if you're working stiff. In addition to a 401k where you have long positions and you're not managing it or trading, you look for best entries, and then you're looking for the long run to work for you. Okay, so we're just sitting here. The market's just chopping around. So that's Pinduoduo. Okay, what next? Let's take a look at. Okay, Hershey's finally starting to move a little bit. Hershey's. I have just a call vertical on Hershey's. This is a consumer staple stock. Okay, you can see. What I was trying to note here was, instead of just taking a call vertical, what I could have done was an iron condor, sell the 180 put, buy a 175, sell the 200 call, buy the 205. So it's basically 2 spreads, and you're looking for price to stay between. I would have done better off if I had done an iron condor. Instead, I did a vertical, and it is presently flat, I think. Hershey's is off 10%. All right, so Hershey's all right, you can see the fade here. This morning it was looking a little better, like it was going to head towards 200, but it's still staying in the middle here. You could also took a butterfly. A butterfly, you sell 2 190s. You sell 2 190s, you buy a 200 call, and you buy a 180 call and a 200 call, and you sell 2 at the 190 strike, and you look for prices just stay right in this area, and you make money if it stays basically in near the 190 area. Okay, so that's Hershey's. Eli Lilly we talked about. That's doing well. Eli Lilly. Okay, Eli Lilly. Okay, Eli Lilly, I have a credit spread on that too. And that is the 600 and 590. So I sold the 600 put, and I bought the 590 for protection, straddling the 50-day, the green line. I didn't think that price could get back below 620. So I took that trade with the idea that this is going to continue to grind higher. And while you might have calls on and looking for a big move, I don't care if it goes higher. Well, I do care if it goes higher, but I don't want it to pull back dramatically. And it can just sit here or grind higher, and I'm fine, because theta kicks in and that expires on 2nd of February. So that's Lilly. Lilly looks good. Lilly, let's look on the weekly. Lilly above the 10 EMA, bullish trend. Lilly. NVIDIA, of course. I believe that's on. I got to put all these in one chart list. That way I can just go through them easily. NVIDIA. Okay, so NVIDIA, I have a credit spread. The 475, you're aware of that. 475. NVIDIA. All right, here's my spread on NVIDIA. Okay. So sold the 475, bought the 465 for a nice credit of $320. $320. You keep adding these up. That's a 30% rate return on my cash secured by Schwab. I can't use $900. I got a credit of $320. So more than 30%. And this trade expires on the 16th, as you can see. Between now and then, I doubt seriously this gets back to 475 or anywhere near that level. It's got a $14 ATR per day, $14 move. All right, so I guess if it started selling viciously by the end of next week, Tuesday through Friday, there's a possibility at $14 a day that we could get all the way back to 500. I doubt that's going to happen just by the look of it and the volume telling me the institutions are the ones that are buying this. Okay. Stochastics, MACD higher, RSI rising. So that credit spread is probably one of my favorites. I could do another one if I wanted to. Micron, I did another one on Micron. Micron, where are you, Micron? MU, Micron, daily. Okay, Micron, here you go. Micron, March 15th, the bull put spread. And that one is a credit of $164. It's about 19% return ROI. Micron just had earnings. Micron. Here's the other thing. You know, from a fundamental standpoint, we're also watching. Now, Micron reports again on March 20th. So that was the reasoning behind taking a March 15th bull put spread because earnings are behind us. And revenue growth year over year was 15.69%. So I was hoping this would continue higher. I might even actually take this one off. If let me see what I could buy it back for. I could just let this one go, but it's not bouncing. Micron. Okay, that's up 30%. Okay, what if I were to try to close that? Let me see what my cost would be. 200. Micron. Okay, so I'm gonna sit on this for a little while longer. Keep a little bit more of my credit. Okay, so the Q is just sitting here chopping around. Microsoft grinding higher. Okay, so it's a Friday. Generally on Fridays, we see a lack of liquidity. Volume tapers off. The Qs, we had one block at 409.30. 836,000 shares traded on the Qs at 409.30. We're trading 408.90. So we really need to get back above 410 to be bullish. Below 407, we're bearish. We would be bearish below 407 with that block taking in context. 836,287 shares bought in a block at 409.30 on the Qs about an hour ago. All right, I'm going to take a couple-minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 11:50 on the East Coast. It's Friday the 12th of January. We're off on Monday. I'll be right back.
Biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free. Welcome back to Trading 360. Time for the 360 round. We've now kicked off earnings season. A lot of big banks reported today. We'll have more next week. Are we learning something today that could give us some insight into names like Morgan Stanley and also Goldman Sachs, for example? So Kenneth Leon's with us, Global Director, Industry and Equity Research at CFRA, and David Chiaverini, Managing Director, Equity Research at Wedbush. Thank you both for being here. Obviously, they had a few things that are overhangs the regional banks that they had some fees and things there. What did you think, Ken? What was your takeaway? I mean, what was a winner? What was a loser? If someone said, how did the banks do to you today? And you always do a spectacular job sort of summarizing, but maybe with some detail so that people can understand a little better. Ken.
Well, first of all, bank stocks today are kind of going sideways, mostly because they had outsized gains in the fourth quarter. What we learned with the results today is that for 2024, the U.S. economy is likely to be going to a soft landing, not a recession. Without a recession, the worries about credit loan losses accelerating seems quite low. The opportunity we see is really still for some moderate loan growth. Of course, there's a major change in terms of the direction of rates. That impacts banks for net interest income. But if you still have loan growth, that will contribute to net interest income. The investment banking area widely noted that we hit the trough in the middle of last year, a slow start this year for M&A, equity and debt underwriting, but we expect it to improve as we go through the year because there's an enormous backlog, particularly from private equity firms looking to monetize their investments. Lastly, I would say that the banks are really focusing on expense control. In some ways, this is giving them a good floor to whatever happens in the economy.
And so at this time now, I mean, when you think about the change in direction of rates, and you have Bill Ackman out today saying that he sees the Fed moving even more rapidly on interest rate cuts and saying that they have to move early in order to get more than three cuts in for this year, 2024. David, I'm curious, what did you think about the entire picture? What stood out to you as maybe some wins and losses?
Sure. So since I covered the mid-cap banks and the regional banks, I was looking for read-throughs from the money center banks to those companies. And what really jumped out to me was all this focus on, commercial real estate. I wanted to see to what extent it is coming through the financials and non-performing loans. And unfortunately, looking at Wells Fargo first, their commercial real estate non-performing loans increased 8% sequentially to $4.2 billion. And then Bank of America, it was even more troubling looking at, again, focusing in on commercial real estate non-performing loans, increased 43% in the fourth quarter to 1.9 billion from third quarter's 1.3 billion. So that gives us a little bit of concern on the credit quality front. I am hopeful that we do have a soft landing to kind of soften the blow, but based on this credit migration, that could be a key concern. And then the other thing that is a little bit worrisome coming out of the prints.
All right, I just closed Airbnb. Original credit was 180. I closed it, locking in 110 per contract. Okay. All right, let's I don't like the way it looks right now. I was hoping that it would bounce more. Okay. Airbnb closed the trade. Original credit 180 per contract. Locking in 110 per contract.
Yeah, and you make some great points on the commercial real estate non-performing loans. I mean, I think the one that the bank in America in particular is going to net interest income is certainly a focus for 2024. And when you look, Ted Leon, at these names, and when JP Morgan talks about sequential quarterly declines on this, are you surprised to hear that?
Airbnb, I'm out. Let's see, Pinduoduo is okay. Okay. That expires next week. That's a nice one. Pinduoduo, that was a nice one. Just shy of $200 per contract for 800 in cash reserved on the side per contract. 25% return. ROI. More than likely, unless something drastic happens, Pinduoduo will collect 100% of that plus the theta decay. All right, let me see what those options look like now. The call side, the put side. Yeah, they're down to pennies now. That's what I like to see. Yeah, I like that. Like that. If you ever been on the other side of a purchase of calls or puts and the calls or puts didn't do what you wanted it to do into the last 2 weeks, and you just watch your investment continue to erode day after day. Theta on Pinduoduo, while not a lot, is $2 per day on each leg, calls and puts, so $4 a day. Adds up after a little while. And a 2-week time period, you got 12.5% per week and ROI. Okay, so Airbnb, let's go see what else is working. So we took something on Meta. Meta. Expecting Meta to continue to grind higher into earnings, maybe a little profit taking next week. Meta's at the highs.
For 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions designed for investors like you, with no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to move forward
Find the next trend.
from every click to every tip.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome to the Schwab Network.
Daily live exclusive content tailored to today's investors.
From 24/7 studios in Chicago.
Oh boy.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
Never a day without drama when you got kids, I tell you.
From bell to bell and beyond.
Never a day without drama.
24/7, 7 days a week. SchwabNetwork.com.
And on all your favorite.
Okay, so looking at positions, the markets are just drifting here sideways. Let's take a look at the Qs. Okay, let's look at the bigger context. Qs. Okay, while it'd be beautiful and wonderful if we close the week on a high note, right now we're just consolidating at 410-ish. We know that that's a resistance level. The 9 and 21 day are below price. In other words, price is above the 9, 21, 50, 200 day. RSI is still above 50. Volume looks good. That's institutions. Stochastic still rising, though it may peak. And MACD, while not crossed over yet, we did see bears losing control this week. Okay, so net, the Qs look okay. Could look better. Looking okay. Neutral to bullish. All right, let's look at junk bonds. Junk bonds. All right, so if you're a new member, you should always be paying attention to the things I'm going to go over right now. Junk bonds usually lead the market. Why? Because institutions or traders who will invest in junk bonds or high yield corporate debt, they are adverse to risk. All right, they'll be the quickest in and out of the market. They're smart investors. Okay. So if HYG, high yield corporate, and junk are moving higher, you got a plus in the bullish column. You got a plus. Now we got a gravestone doji right now, but look at the 9, 21, 50, and 200 day. They're all pointing up and to the right. RSI is rising. So going into lunch, it's lunchtime right now. Let me put these guys on. See who's on. Maybe Frank is on again today, hopefully. Okay. Is Frank on? Who's on? Talking banks. All right. So if you are a new member, pay attention to junk bonds and high yield corporate debt. Risky assets. These people will be out of the markets when they think something's about to happen or is starting to happen. All right, Frank's back on. Good. You can see over here in September where we made that last leg lower. Okay, they were selling. They were out of the way, out of the picture. Look at the moving averages, nearly a straight line at 40 degrees. It's like 40 degrees there. Okay. What I'm looking at is the slope of this moving average. Or these moving averages versus horizontal. Okay, that's about 35 degrees. 40 degrees maybe. 45 would be something like that, right? This part right here is almost 45 degrees. We're starting to flatten out a little bit. But the slope of the EMAs versus over here, okay, very obvious. Look at the slope of the EMAs over here. Actually, they're more flat. Okay, so big difference. Moving averages are up and to the right. So you should expect that it's going to pull back occasionally, make higher highs, higher lows. So right now we're fine. We're just starting earnings. So what happens during earnings? Things slow down a little bit. Less risk. Good idea. Wait for the, as Lee Star likes to say, grab the popcorn. Wait for, what is it you say? You say something along the lines of watch the movie, watch half the movie, or whatever it is, Movie just started. The movie just started. So you're sitting there with your popcorn watching the movie. Just starting earnings. JP Morgan out of the way. Rick has a good saying. Rick is Lee Star. Still renovating his hacienda. Okay, so that's junk bonds. Okay, junk bonds. We want IWM, a risky asset, to be bullish too. Okay, IWM. Note the moving averages. While they're flat right now, they're still making higher highs and higher lows. We want IBB, biotechs, to be moving higher. They are. Okay, so IBB looks good. New York Stock Exchange advanced decline. Cumulative. Cumulative is making higher highs and higher lows. Okay, so that looks good. Advanced decline. NIMO. Okay, it is peaked, but it's been making higher highs and higher lows. Bitcoin. What do you think of Bitcoin? Pretty nice. Bitcoin. Moving average. Look at the 50. That's like about a 15-degree angle? But it's upward sloping. Now, there's some selling the last 2 days, including today. There's selling here in Bitcoin. So probably people that were expecting price action to bolt higher on the approval, with other people like us buying in September. On September 11th, we made our low in Bitcoin and started moving higher highs, higher lows. Down there at 25,000. Gained 20,000. So that was in expectation of these ETFs getting approved. So over time, people, bought into the idea. Now we're at the highs. It looks like could be people are selling the news. I don't know. It's hard to say, but that's a pretty bearish looking candle today. The other thing you want to watch, we want yields to be moving lower. Okay, so we're back below the 200-day. Notice that if this was a stock that you were trading and you got rejected at the 200-day and you backed off, look at the 90 days turning over. So is the 21 days rolling over. 50-day is headed down towards the 200-day. Stochastics turning back down, resetting. So this looks like we're going to see lower yields next week and the following weeks. There's a little bit of buying there at the low, probably short covering. All right, we want the US dollar to be moving lower too. It's moving higher. So that is 1 in the bear column. But we got like 5 in the bull column right now. Crude oil. Crude oil still range bound. So that's 1 in the bull column for now. So it's 6 in the bull column, 1 in the bear column so far. Okay, breadth, high low. We know what high low looks like. We showed you this morning. High low is above the 0 line. So am I worried? No. Am I watchful? Yes, always. There's advanced decline in the middle panel. Look at the New York Stock Exchange, 2,700 stocks. It's trading at the highs. Do you see any red candles yet? We might get one today, red stick, if we close lower. But for the most part, blue is telling you consolidation. Green is buying strength. Red is selling strength. So right now, all we have is consolidation. Yeah. Grab your popcorn, milk duds, front and center seats. Watch at least 3/4 of the movie before you walk out. That's Lee Star likes to put it that way. I always think that was pretty funny. Grab your popcorn, milk duds, sit in the front, watch at least 3/4 of the movie before they walk out of the theater. So earnings again, we just started today. So generally, you don't want to do a lot. You don't want to take a lot of risk on. Now, keep in mind coming into this year, what were we doing the last 2 weeks of the year? You know what we were doing because I kept telling you every single day. Take some profits off in the strength, reduce your risk, light and tight, bring your stops up and tight, up underneath your price action. So last 2 weeks of the year, we saw the potential for the reversal in October, and we rode this higher. But the last 2 weeks of the year, 2023, we were taking profits off in the strength. What got us started in October? What got us started in October? There's your answer right there. Number of stocks above the 50-day. We're at a washout low. I think it was like 9% of stocks were above the 50-day. 91% were below the 50-day. Whenever you get to that level, always remember, when you get a washout, that's when institutions are going to be buying. Okay, you look at any other previous occasion over here on the left, far left, right there in March, oversold. Number of stocks above the 50-day were 20%, 80% were below. What happened? Market rallied. Yeah, it dipped a little bit, made a higher low. So did the number of stocks above the 50-day. Then it turned back up. And then we made that high into July. Okay. So while we're in the 80% level right now, many stocks can still stay above the 50-day. So this is not a sell signal per se, because stocks like Meta above the 50-day can continue to move higher. Different sector, JP Morgan, above the 50-day. Not looking so hot, but it's still above the 50-day. Different sector. Let's check Newmont Mining, gold. Okay, it's below the 50-day. Look at gold, different asset class. Look at gold, different asset class. Above the 50-day. Let's look at Google. Above the 50-day. So many stocks can still stay above the 50-day. Tesla, below the 50-day. Accelerating lower. Volume. Look at the selling on Tesla. DoorDash, different sector. Consumer discretionary, above the 50-day. Does it make sense? Look at the market this way. I mean, you can take one stock, take somebody's advice or what somebody says they're doing on StockTwits or Twitter, or you can do your own due diligence. I mean, this isn't hard. You need to do the work. DoorDash, consumer discretionary. What about home builders? Toll Brothers. Above the 50-day. The green line's the 50-day. Are we going to pull back? Maybe. What about Costco? Above the 50-day. Again, we're nearly 90% of stocks above the 50-day. That could stay embedded, and this is the reason why. This could be the beginning of a bull market that people just will not recognize, because they won't recognize it until it slaps them in the face like a trout across a bear's face. This monthly chart is telling you a lot. 2003, we ran higher into 2008, 2007, October 9th, 2007. That's when the markets peaked, and we rolled over. But that was 4 years later. Look what we're doing right now. This is the ratio between the S&P and commodities. Let's look at commodities. See our Deutsche Bank commodities at the lows. Okay. Let's look at copper. COPPR. This is a leading economic indicator. We want copper to be moving higher. So it's sideways. It's below the 50-day. What about healthcare? All right, UNH reported earnings. It's below the 50-day. What about XLV, healthcare sector? Above the 50-day. What about utilities? American Tower, above the 50-day. It's getting close to the 50-day, but it's still in a very bullish trend. I hope this is all making sense. We looked at financials. We looked at JP Morgan. Industrials. Let's look at Caterpillar Industrials. Above the 50-day. Boeing, below the 50-day. But the majority of stocks are above the 50-day and look like they could continue. John Deere, above the 50-day. So whenever you get stocks that are way oversold and 90% of stocks are below the 50-day, always remember that, for you traders or investors that are, young, maybe you just started a 401k, maybe you just got out of college and you had the smart sense to invest in a 401k or a Roth IRA or whatever your company provides. Most companies will provide a matching amount. Now, it's been a while, but there were companies that would match a dollar for dollar or 50 cents for a dollar. So you put in a dollar, they match 50 cents. And you do it pre-earnings. So you take that off your gross and you pay taxes on the net. 401k is a great vehicle for obtaining wealth over the years. So if you're in your 20s or 30s, just out of college, and you're just listening to this, let me show you something else. This is pretty interesting, I think you'll find. It's under S&P. Okay, S&P. Okay, for those of you, I don't think there's anybody in the trading room that's of this mindset, but for those of you that are very pessimistic, the markets can continue higher. Look at the left, World War II. Look in the middle, the boomers, that's me. Look at the waves up. The waves up, or when multiples expand to a point that they have to contract. What have we done recently into 2022 and 2023? You see what we've done over here? You see how multiples have contracted? Yes, they're a little elevated. We've come off a bottom after the bear market. All right, so we had a bear market. We had that peak. Multiples contracted during 2022, the bear market. But what are they doing now? They are expanding. Look at the red line. Look how close we are to the red line. We're not extended yet. I'm looking for the next wave higher. Why would we have a third wave, a fourth wave, a fifth wave, a sixth wave? Think about what this means. The boomers back in the 80s got out of college, started buying stuff, new cars. They got rid of the car the parents gave them. They bought a condo. I bought a condo in 87, my first condo out of college. I started investing. I bought a stereo. I bought furniture. Buy. Consumers. What are you hearing them talk about? Consumers are pretty resilient despite everything they're talking about, right? Millennials are just starting what the boomers did for 30, 40 years. The millennials are just starting. They're starting families. They have kids. They got to send them to school. They have to, all the things that you buy for children. They're 6 years into this. Well, starting year 7. We're only on wave 2. Wave 3 is starting. Again, reference the red line. This should be exciting to you. If you're a millennial and you're seeing this, you're hearing what I'm saying right now, you should be pretty excited, because I didn't learn this idea for maybe 15 years into my trading career. Somewhere around 2000, I started thinking about or heard about multiple contraction and expansion. And when did that happen? Right after 2000. You see 2000 there, that peak, number 5? We pulled back dramatically. if you were thinking about it, you missed the sell-off in 2000. You missed the sell-off in 2007, 2008, 2000 into 2009. The big key takeaway here is, folks, if you're a millennial or you have children that are millennials, play this for them. Play this, repeat what I'm saying. Play the video later. You've got the link. You've got the link to the broadcast. Okay, it's around 12:30, 12:20, 12:15 I start my diatribe. I'll get off my soapbox in a second, but if you're a millennial, just know that you're going to be buying things over your lifespan. You're going to be investing. The markets are going to go higher. They've always gone higher with the occasional bear market. We just came off of one, 2022. And pretty much everything I'm looking at says that we could see a big swing to the upside. I just showed you the ratio between S&P and commodities. This is the ratio S&P to yield, high yield stocks. Okay, stocks that are yielding high. People start to buy yielding stocks when the interest rate starts to come back down. So we peaked here, telling me that this trend should continue. This is a monthly chart. Here's the gold S&P ratio. I showed you this earlier. This is just about ready to cross over. Last time it crossed, what did the markets do? They continued higher. Now, I don't have a crystal ball, but I can read charts with the best of them. I can make my own decision. Is it going to be the right decision? I hope so. I really, really hope so. Am I concerned about the markets? Absolutely not. Am I watchful? Every single day. And that's why we're here. I'm here to communicate this information to you, something you probably wouldn't have, maybe you learn over time, but I've learned so much over 35, 40 years of investing, 38 years of investing, that I'm here to share it with you. And I can guarantee you, there's not many guarantees in the markets, but I can guarantee you that the majority of what I'm telling you will repeat. Just like Warren Buffett said, that the markets over time will move higher. Let's look at the S&P 500. Okay, here's the S&P 500. Okay, going back to early 2000. What's the market doing? Continues to move higher. Now, this is a very simple indicator, okay? This is called the Faber trend model. Now, this is pretty well known by anybody who is a FINRA registered representative. The Faber long-term trend model is very straightforward. The dotted line there, that's the 10-period simple moving average on a monthly time frame. You're bullish above it, you're bearish below it, or short, or out of the market altogether. Okay, see 2022, that's the dip. We were out. Got back above the 10 EMA, we're long. We dipped back to it and bounced. We're long. Look at the momentum indicator, turning higher. Okay, so if you go back, obviously you know this. So where are the, oh, they're over here. Okay. Historical chart gallery. Okay. 1900 to present. What do you see? I mean, pretty straightforward. What do you see is the markets continue to move higher with occasional secular bear markets. But overall, we should be always looking for markets to continue higher. Climbing the wall of worry. Lately, it's been supply chain, earnings, the Fed, rates, yields, recession fears, the consumer, and yet the markets continue to move higher. Pretty amazing when you think about it. When you put everything together, It forms a big picture. Learn to do your own due diligence and follow the money. And with that, I'm going to shut up for 15, 20 minutes because my throat is hurting me. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's Friday, the 12th of January. I hope you learned something. For those of you who've heard it before, you're probably like, yeah, Benny, we've heard it before. I know you guys love me. I love everyone in the trading room. It's a great trading room. Lots of good sharing going on. Everybody has the same idea. You want to make money. You want to lose as little as possible. And, a lot of good people. I think we draw in people with a similar mindset, kind, humble, no jerks in the trading room, have great ideas, present very similar setups, 921, 50-day up and to the right. I said I was going to shut up. Here I go again. And price above the 10 EMA weekly. And now I am going to shut up, and I'll go back to Microsoft. Okay, I'm going to take a couple-minute break. I'll be right back. Oh, boy. Don't forget, this time of day is when you want to start looking for stocks that are bottoming, like we talked to reference to Microsoft yesterday.
As you can see, the Dow down 200 points. Welcome back to Halftime Report. Let's hit some committee stocks that are on the move. We're starting with Delta Airlines. Shares lower despite beating on earnings. The company lowering guidance for the year. Jim, just added Delta earlier this week.
Yeah, this share price movement is absolutely a head fake. It is an outsized response that I expect to be reversed, and here's why. First off, free cash flow last year, $2 billion. They're guiding to $3.5 billion at the midpoint for this year. So $3.5 billion, that's pretty sizable, 75% increase year over year. By the way, the free cash flow guidance and the earnings per share guidance are exactly where the analyst community was going into this print. So it's not like the analyst community is surprised. The reason the shares are down, two reasons. One, whenever you get a headline like this, the algos sell it down. But also, let's face it, when you have airstrikes in the Middle East like you did last night, I don't care who was reporting today, the airlines were going to be down on the threat of higher oil. In the meantime, what you've got in Delta is a stock trading at 6 times earnings, growing earnings, trading at a free cash flow yield of 16%. And by the way, that's 6 times multiple. Traditionally, it should be 8 times. With the demand that you're seeing projected by Ed Bastian, the CEO, I fully expect it will get back to 8 times earnings. So I see a 33% growth rate from year to year end.
Jim, we have another one for you. This one's United Health. Shares are lower after reporting higher than expected Q4 medical costs. What's your take on this one?
Yeah, obviously, I don't like to hear the concept of higher medical costs. It was a bad quarter, and when you're investing in any company, any quarter can bring anything. It can bring upside in revenues, it can be upside in expenses, which obviously happened this quarter on the expense side. What you've got is people are coming back to medical procedures still that they delayed during the pandemic, and that's what caused the increase this quarter. That is not likely to continue. Company guidance is such that for the full year, they do not expect elevated medical claims. So I'm really not worried about United Healthcare here. It's just a bad quarter.
All right, moving to another one. We're talking DocuSign. Shares are moving higher on reports of a PE takeout. Jenny, you own this one.
We do. So we added this a few months ago at $42 a share. And this was one where we sifted through the rubble kind of the fallout of 22, sifted through those Zooms and the DocuSign. And when you look at it, you're like, wow, this is just really cheap. It has real earnings, it has real cash flow. The shares should not be trading at $42 a share. So it's interesting because when we bought it, we didn't think that this was going to be the catalyst to drive shares higher. All we thought was there's tremendous free cash flow generation, unbelievable barriers to entry, and that just says there's value in the stock that's not being appreciated. But then when you think of that, right, high barrier to entry, lots of free cash flow, like of course it is private equity who is going to start to get interested. So, I'll take it. It's a fabulous company. The growth potential is unbelievable.
Joe, I know you used to own this stock.
Used to own the company.
What do you think of this report?
The question I have, I don't know, Jenny, you might know the answer, is what type of premium do you think this company will be acquired at? Well, that's a big question.
That's the huge question. And also, what if they join forces? Then obviously will lower the premium because you won't have two competing bidders.
Right,
yeah.
Correct. And that's important to understand where we are now. How significant is that premium? What is that going to look like ultimately? And that's going to allow you to determine what you're going to do from it.
From here.
From here.
All right, stock's at what, almost 64 right now? Jenny, what did you get into it at?
42.
All right, so you.
Right. So when you say like what's the premium, you're like, wow, it's already exceeded what we thought our 1-year price target would be so dramatically. And that's tricky work, I think, to go back and say realistically, what are if you're putting a private, you're going old school value investing in a way and saying like, what's the private market value that this thing should trade at? I don't know. Like I could wing it and just say 70, but I think it's closer to where it should be right now.
All right, DocuSign up over 4% on news about private equity takeout. Time out for headlines. We're going to toss it over to our Pippa Stevens. Pippa.
Hey, Frank. The Biden administration is pushing the Supreme Court to step in on its border fight with Texas. In a filing today, the administration accused Texas of adding walls and wire to the border in an effort to keep the Border Patrol from doing its job. The filing also claimed Texas's actions were limiting agents' ability to respond to emergencies. It argues the changing conditions show the court needs to intervene quickly. The IRS collected another $360 million in overdue taxes from the rich as a result of modernizing the agency using funding from the Inflation Reduction Act. In a call with reporters, the agency said in addition to taxes recouped in October, nearly $500 million have been recouped from rich tax cheats. And the highway to the danger zone just got a little more crowded. According to Puck News, Paramount is bringing back the team behind Top Gun Maverick for a third installment of the franchise. The series has been successful for the studio, with Top Gun Maverick bringing in over $1 billion at the box office. Frank, back to you.
All right, Pippa Stevens back at CNBC headquarters. Pippa, thank you. All right, coming up next, our calls of the day. A lot of analyst action this Friday, including a price target hike for one of last year's big tech winners, plus upgrades and materials, biotech, and much more. The committee debates it all when halftime returns. Stay with us.
Okay, markets are just sitting here doing what they do best, chop people up. I see a lot of Uber blocks here. Oh my gosh, I just noticed Uber. Okay.
today. Help me break down this market action. Let's bring in my guest for the day, and that's going to be Joe Mazzola. He's the Director of Trader Education at Charles Schwab.
Hey, welcome back.
Live from the nice seat. Joe, good to see you again here. Hey, we've seen a choppy trading session today. We saw choppy trade yesterday after a hotter than expected CPI. But this PPI data kind of reflected that, hey, maybe that CPI data was a one-off, that we're going to see continued weakness there. What's your take here?
So what I'm gathering is that PPI data is being interpreted as something that's going to potentially show PCE.
Halftime report. Let's get to our calls of the day. Uber touching a new record intraday high today. Wells Fargo thinks it can go even higher. For boosting its price target by $2 to $76 a share. Jenny, you own Uber, but you've actually been trimming it.
Right. So we bought it a year and change ago, 2022. We paid $22 for it. Put it in as a 3% position. So if we were still holding that whole position, it would be way over 7%. And that's just too much. This is in our discipline growth strategy. So we always employ a lot of discipline. It's actually the third time we trimmed it. So we trimmed it at 47, 50, 58, 59 last week. And I think that's just responsible. So here we sit.
DocuSign running? Okay.
Position. I think their price target is a little too aggressive, for the next year or so. I think maybe like high 60s is more realistic. And that's where you get into, okay, if we get to the high 60s, there's 10% upside between here and year end. That is excellent. I love 10% upside, but I think there's other things in the portfolio that could easily return more than 10%. So let's take that nice return they've given us, diversify a little bit, reinvest into things with more than 10%, and maintain a balanced portfolio. So that's all that is that selling. Look, the prospects are still amazing.
Joe, you own as well. Still bullish on this thing?
Absolutely. I think today at one point the intraday high is an all-time high for Uber. I see the stock clearly going into the 70s. I need a little trimming in Uber as well. But this is an industrial growth story. And to get the type of revenue growth that this company delivers, the type of balance sheet that you're owning and owning this company, and then just the overall necessity for the consumer and for professionals in the utilization of Uber, I see this stock clearly well into the 70s.
All right, Uber shares fractionally lower right now. We're going to turn to Cleveland Cliffs, upgraded to overweight at JP Morgan. The analyst there citing greater focus on shareholder returns. Jim, you own this one?
Yeah, and the analyst is returning to the stock from an unrated position while JP Morgan was advising Cleveland Cliffs and the whole U.S. Steel takeover drama. But he's coming back with a fresh voice to say what we all know. There is a tremendous amount of cash flow generation going on at Cleveland Cliffs. Hot rolled coil prices are very high. They were $700 a ton just a few months ago. Now they're almost $1,100 a ton. You've got good volume picking up from auto demand picking up. CapEx expenses are low and going lower, at least for this year, because they front-loaded last year and the year before those expenses. So the cash flow generation is going to be tremendous. Their debt level is already so low. So what can they do other than just give it back to shareholders via share buybacks that they announced would be sizable? We'll see that when we get the fourth quarter earnings report in a few weeks.
All right, so Cleveland Cliffs is also a read on commodities. Brenda, I know you own a commodity fund. What's your take on commodities in general, the whole complex, especially what we're seeing in China?
Yeah, so we maintain an overweight in commodities in our allocation. Back in 2022, this last year, we really spent a lot of time trimming back the commodities exposure because we felt like there was more opportunity in traditional stocks and bonds. So we're still about halfway. I think it's important to have a little bit of exposure. But when we think about where overall appreciation really lies, in our mind, it's much easier to get our heads around making a story for traditional stocks and bonds from here rather than the commodity complex, especially in an environment where China's growth is slow.
Moving over to Regeneron, RBC calling the company one of the most dynamic all-around stories in large-cap biotech. It also says there's more than meets the eye when it comes to this stock. Regeneron is trading at a new record high today. Joe, you own this one in the Joe T ETF.
Yeah, clearly that analyst report identifies all you need to know about this company fundamentally. It is a very well-diversified, large-cap biopharma with delivering on significant revenue growth. But this is a classic example of how momentum in markets actually does work. This is a name that has been in the ETF
since January of 2022. The momentum is incredibly strong, even in an environment where healthcare was underperforming.
Moving on, Citi is bullish on Qualcomm, upgrading the stock to buy and boosting its target to 160 from 110. Back over to you, Jim. You're in this.
Yeah, well, let's admit there have been a lot of false dawns in terms of the mobile phone market bottoming and picking up. Hopefully what I'm about to say won't add to that series, but it does look like the mobile phone market has bottomed and is slowly going to pick up this year. Obviously, that helps Qualcomm, which provides chips into mobile phones, but also the automotive industry, which I've mentioned before, is producing a lot of cars, restocking inventory. That's a key growth area for Qualcomm. And as the economy continues to expand, their Internet of Things business should be going well. Last thing on Qualcomm, besides the valuation, eventually AI applications are going to take place on the phone, and that's going to play very strongly to Qualcomm's strengths.
All right, a lot to watch there. Those shares up 1/3% right now. Price target raised to 160 by Citi. Coming up, we have our chart of the day, a big pop for one commodity that's on track for its second straight positive week. The committee is playing it. That's coming up next on Halftime. Stay with us. All right, welcome back to Halftime. Our chart today, it's oil hitting $75 a barrel in early trading. That's the highest level since December. Joe, you're our resident energy expert. Starting with you.
I mean, it's so confusing to explain what's going on right now in oil. Oil is back to 72.50 as we speak. 75 and a quarter, I believe, was the high earlier today. The price action is just not correlating with what we're seeing surrounding the geopolitical tensions in the Middle East. It's somewhat discouraging as someone who is overweight energy. Quite candidly, I'm more excited and believe the better investment opportunity resides in natural gas. Certainly, as we heard about the deal yesterday with Chesapeake and Southwest. And you're seeing all these deals over the last 4 months, $130 billion worth of energy equity deals. So Is it really translating, though, in terms of performance for the energy equities? I'm not necessarily sure that it is. And it seems as though these deals are happening because obviously companies are trying to utilize the cash that they have on their balance sheet that they're not reinvesting into the wellhead to actually go out and buy the production. So it's really, there's a lot of complexity right now going on in the energy space, and it's very difficult for those watching the show to try and make a decision based on what the spot price of oil is doing, because the spot price of oil is acting in a very erratic way.
Yeah, it seems like it would be higher with so much geopolitical tensions. I mean, military action. By the way, Jenny Harrington right here, just waving. Come over to me. Come over to me. What's the matter? I just want to educate everybody. Energy transfer, Morgan, Pioneer, Shell, some of your holdings.
Right.
Go ahead. Go ahead.
So I actually don't think it's any mystery at all that they haven't performed. But you need to take a 3-year, almost 4-year now, look in the rearview mirror to understand why they're not. Because go back to 4 years ago, right? Energy actually traded negative. The stocks were completely in the dumps, right? Nobody believed we'd ever see $70 to $90 oil again. Share prices run up. So we had that plus 50% move in 2021, plus 60% in 2022. They had their move. You know, stocks have their move. And what they did during that time was they incorporated what $70 to $90 oil looked like. Like, yeah, it got a little higher for a while, but the reality is, and I think this has been very much the conversation for some time, is oil is range bound. And it's range bound in the $70 to $90 range. And the reason being, supply demand is simple, right? And OPEC has lost control over some amount of it. So, you know, the suppliers are just going to pump a little more. They're going to ignore that they want to keep it closer to 90. We find that around 70, that's where it starts. If it gets below 70, it starts to hurt. So you've got an actually very high functioning supply-demand relationship keeping oil in that range. And in 70 to 90, that's where the free cash flow modeling, you know, to get to the prices that they're at today works. So as you guys know, I sold Chevron about this time last year at about $178 a share. Haven't looked back on that. And Frank, when you read off what's in the portfolio, it's mostly in the midstream space. Why? Because I think there you can earn really consistent returns and not have to live and die on what the commodity prices are trading at. So for our clients who don't mind K1s, which by the way, I think that's the best way to go, you own energy transfer and enterprise products. It's like a 9 and an almost 8% yield. For people who hate K1s in the midstream, we own Kinder, ONEOK, Williams. Those are all closer to the 6% range. But it's a nice way to be in that space. You'll get a little bit of capital appreciation, a lot of income, and then in the international Total and Shell, which just straight up trade at a huge discount to their domestic.
Jenny Harrington with the energy soliloquy. We got to run because we got Mike Santoli in here, but soliloquy.
Real quick on the spot price of oil, okay? You have to be careful, and Jenny just validated the point. You cited the price of oil going negative in 2020. Forget that. It was a function of exploration. By the end of the year, by the end of the year, it's back to $50 by the end of 2020. So the point is, don't utilize the spot price of oil to dictate what your energy investment can be.
We got to leave it there, Jennifer. Coming up next, Mike Santoli joins us with his midday word. If you didn't get it in before, I don't know what else you got to say. Later, more key names reporting next week. We're including one big semi stock. Halftime, back right after this. Markets commentator Mike Santoli joins us now with his midday work. Hey, Mike.
Hey, Frank. Yeah, so, this prolonged pause continues. They're sort of tantalizingly close to the S&P 500 all-time high. But it's tough to find too much fault after the sprint we had in late fourth quarter. So I'm looking at, the median stock is down a little on the year, even as the S&P has kind of more or less held in there. And trying to find fault with what's happening. Maybe there's still some unfinished business. We have seen the small caps roll over against everything else. I think the big story today is the increasing conviction that disinflation is fully in train, and we have some confidence around that. The bond market is getting pretty aggressive as it's rallying here, and is going to invite the Fed to have the Fed funds rate catch down to things like the 2-year note yield. So I think that's a little bit of the drama that we go into the weekend with.
What did you make of today's PPI report? We had Seeley's been on earlier saying, it could lead to this, it could lead to that. Just very quick, what's your take?
I think in general, it checks off the box to say that wholesale inflation is going the right way, which feeds into the Fed's PCE measure of inflation. It's hard to get too alarmed about it. I think the burden of proof is on people who think inflation is going to stay high and sticky.
All right, Mike Santoli with his midday word. Mike, thank you very much. All right, coming up to set up for more big earnings coming our way next week. We're going to hit one semi-stock. We'll have some transport names. Halftime will be right back after this break.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
So, initially the market responded pretty well off that. I think the potential where we're starting to see some of the rollovers, just look, we've been kind of stuck in this range for a while, and then we kind of looked at some of the internals. The internals have been getting weaker these last couple of days, and just haven't had the catalyst. I think today we were all hoping, I guess regarding what your position was, right? The markets were hoping that the financial companies releasing earnings today would kind of push us up over that 4,800, give us a little bit of momentum. Hasn't been the case, pulling back.
Yeah, definitely. If you look at that, below 2% on core CPI for the first time since January 2021, so some weakness there. But one of the top stories today in weakness leading the NASDAQ to the downside is Tesla. More price cuts. Let's bring in Jenny Horn, markets correspondent here on the network, to help us break down this story. Jenny, after the Hertz is starting to sell a bunch of their EVs that they bought to rent out, nobody's renting them, I guess. I don't know. Now price cuts. You saw some of the OEMs in this space kind of pull back on their investments in EV. Seems like the adoption is going to take longer than expected, huh?
You know what, Tom? Okay, I refute that because Hertz's inability to properly electrify its fleet is not necessarily Tesla's problem. Because if you pay attention to this, you will see more Teslas on the road today than you ever have before. I think.
As of December.
Yep. All right. Great breakdown for us here on Coinbase, George. Appreciate it. Have a great weekend. Now let's get into a look at an example trade here in Coinbase. As the stock is falling back down to the 50-day moving average, I don't know if that acts as support. So looked at a strategy. If you agree with this Mizuho and Bank of America analysts where they've got underweight ratings on Coinbase, I looked at a strategy that goes out in duration out to the February monthly cycle. So you got 35 days till expiration. The company reports earnings on the 20th. So you avoid those earnings. And if you think this thing's going to continue to pilfer to the downside, this type of strategy may work out in that type of environment. So we looked out in the February monthly cycle, just 35 days to expiration. I'm going to buy an unbalanced put butterfly as an example here. I'm going to buy one of the 140 strike puts that's in the money by about $8 here. Buy one of the 140 puts, sell two of the 125 puts.
All right, welcome back to halftime. Earnings season picks up steam next week. We're going to get results from Interactive Brokers, Taiwan Semi, JB Hunt, and much more. Let's get this set up. We're going to start off with Interactive Brokers. Joe, you own it personally as well as in the JOT ETF.
Very strong risk-on sentiment in Q4. I think that's going to be reflected in revenue growth year on year for this company, somewhere around 20%. Net interest income will be very strong as well. You could probably see that figure close to 30% as well. So it's a stock that I recently purchased personally while it is in the JOT ETF, and I'm comfortable continuing to own it given the improvement in sentiment and the capital market environment.
Yeah, I think we also got to talk about Taiwan Semi. I know nobody owns it. Jenny, you used to own it. But any thoughts about Taiwan Semi? So there's some macro issues, the Taiwanese elections, and also Taiwan Semi, one of the biggest foundry chip makers, a big read on the chip sector.
I know, it's such a hard one. And we were actually talking to a client this week on the phone who owns Alibaba. And so we own Taiwan Semi, way back. I actually owned it in the dividend income strategy. Then we owned it in the international strategy for years, sold it. The return was unbelievable when we eventually sold it. But it's one of those things that we reflect on now. And we're just so happy to not be invested in that region because it is pretty scary and it is uncomfortable. And for as phenomenal a company as that is, and their management board leadership is extraordinary, but to some degree, you just can't get away from the political risk there, so I don't want to be part of it.
Speaking of that political risk, Brenda, what's your thoughts on Taiwan Semi and also the possible impact to the broader tech sector?
Sure. Well, I think we'll hear more about the inventory issue and whether we've passed that this year and looking forward if things are getting better on that front. Also should hear more about AI. So I think there are some things to listen for that will have broader implications for the whole group outside of the political risks. So I think it's an important one to pay attention to, even for those who don't own it.
Just because of their key part in the chip supply chain, do you think this is a read to the broader chip sector?
I think we'll get a look at, smartphone demand, whether that's starting to pick up or not. So I think there will be some read-through to other areas in understanding whether we've worked through the inventory buildup that would have happened this past year and whether we're on the other side of that or not.
All right, Taiwan Semi basically flat. Again, Taiwanese presidential and parliamentary elections coming up this weekend. All right, stay with us on halftime. Final trades from the committee coming up.
I'm here with you guys. I'm just eating lunch.
All right, welcome back to halftime time now for final trades. Jenny, you're up first.
Okay, Crown Capital. This is a cell tower and small cell provider. I bought this last June when the stock had been cut from 200 back down to 113. So now you can get in at a 5.5% yield. Same thing I paid for it last June. But the thing is, they always had an 8 to 9% consistent growth rate. They're getting closer to getting back to that. So be patient, but own it for a while.
Your team.
Marathon Petroleum, energy equities last year, one of the leaders. Once again this year, one of the leading energy names.
Brenda.
Stryker had a great year this past year, but think it's poised for another great year, especially as hospital balance sheets improve, and that should improve adoption of their smart robotics system.
Jim, last word.
AbbVie, a lot of us talked about healthcare coming back as a leader this year. AbbVie has led for quite some time. Great valuation, great dividend yield.
All right, that is it for halftime. The exchange starting right now. Have a great weekend.
Thanks very much. I'm Tyler Matheson in for Kelly Evans. Here's what's ahead this hour. Encouraging signs on the inflation front. The market now seeing an 80% probability of a rate cut in March, but our market guest doesn't see that happening. He does see, however, plenty of opportunities despite that, and he'll tell us where. Plus oil spiking, Tesla production disrupted because of Red Sea turmoil, the U.S. responding with strikes in Yemen. Yemen has vowed to retaliate, so what happens next? We'll talk to former NATO Supreme Allied Commander Admiral James Stavridis. And we're heading to the intersection of AI and real estate. 3 ways investors can take advantage of what our guest calls massive opportunities ahead. But we begin with today's markets and Dom Chu with the numbers. Hi, Dom.
A fresh 52-week high for the S&P 500, Tyler. That's a big story for the S&P today, but we have backed off those levels. At those highs of the session, the S&P 500 was at 4802, and at the lows of the session, 4768. So again, tilting towards maybe the lower end of that range so far, just about flat if you want to look at it in percentage terms. The Dow Industrial is down about 0.5% here, and the NASDAQ Composite just about flat on the session as well. So if you take a look at the S&P, yes, fresh highs for the year, but we have to get back from some of those levels, so we'll see if that momentum changes in the afternoon. Another place to keep a close eye on what's happening with the oil complex overall, because currently U.S. benchmark West Texas Intermediate prices are still up nearly 1% to $72.61. But as things stand right now, we are at just about the lows of the session. We were up north of 75, just around $75.25 at the highs of the session so far. So significantly below those levels on some of the tensions in the Middle East tied to those strikes on Houthi targets in Yemen by the U.S. and U.K. and its allies. So again, WTI crude is still just down about 24% from the highs that we saw over the course of the past year. And then if you take a look at some of the individual stories making names and making moves here, it's got to be about the big banks kicking off earnings season. I know that you're going to talk much more about this later on in the show, but just to give you a check on what's happening, we have seen broader moves lower across the board, except for Citigroup, which is holding on to 0.75% gains here. JP Morgan Chase now slipping in the red. Bank of America down about 1.25%, and Wells Fargo down 3.5%. So again, banks a big story. We got more of them coming up next week. Ty, I'll send things back over to you.
All right, Don, I'll see you in a little bit. Thanks very much. Today's economic data has investors squarely focused on the March Fed meeting. That is when they price in the central bank's first rate cut. They think it's coming. Steve Leisman has the details. Steve, welcome. As I look at today's inflation number, I guess it's a little more encouraging than yesterday's, which another network characterized as, quote, skyrocketing inflation. I didn't see it that way. Did you?
No, it was a miss to the upside. It was really interesting, Tyler, to see the way the market traded. Is a little spooky at the very beginning yesterday after the 8:30 number, but then it kind of calmed down, and I wonder if it was sort of looking forward to this. Now, if you look at this story, the producer price index came in below expectations at minus 0.1%. Why all the focus on it? Well, it suggests little inflationary pressure from supply chain. It prompts economists to estimate the Fed's preferred inflation indicator, the core PCE, will come in at 2.6 to 3% year over year. But wait, there's better news. 1.5 to 2% on a 3-month annualized basis. That is, it would hit the inflation target. Before PPI, the probability of March cut was 69, it shot up to 80%, where it's trading about now. Ian Shepperson from Pantheon actually answers Tyler's question, says the PPI is far more important than yesterday's slightly disappointing core CPI numbers. Core PCE is what matters for the Fed, and these data will increase the pressure on policymakers speaking soon. 2 years saw it, felt it. You saw yields decline by up to, what do you want to call it, 15 basis points at one point, now down about, 13 or 14 from where it started before the number. There's still 2 PCE numbers, 2 CPI numbers, 2 PPI reports to come before the March meeting, and there could be some upside risk to inflation if supply disruptions and higher energy prices and shipping costs linked to the conflict in the Middle East. But if current inflation numbers do continue, it's going to be hard, I think, Tyler, for the Fed to either not cut in March or at least guide in March towards a rate cut that would be coming in a future meeting.
What is the incentive for the Fed to cut in March if the economy's doing well, employment is fine, inflation is okay, but still maybe a little above the target range of 2%? What's the real incentive?
I think that's a good question. I think, Tyler, there is a window for the Fed to pivot and get this right rather than remain too restrictive for too long. I think you're right that there is some momentum to the economy that gives the Fed some time here, but there's a whole lot of loans out there and refinancings in corporate America that are going to be coming due, and companies are going to be laying off people, shutting down, otherwise having to sell if they have to refinance into the highest possible rates. The Fed has an opportunity to offer some relief to the economy. Think about it. If you consider that there's a long-run funds rate of 2.5 and the Fed is at 538 or 540, it is very restrictive right now. So there is room for the Fed to offer some relief and secure that soft landing, because that's not a given either.
All right, Steve, thank you very much. Have a great weekend. Appreciate it, my friend.
Okay.
Alrighty, our next guest says the Fed is unlikely to deliver the cuts the market is hoping for, but that doesn't mean there is not opportunity to be had. He's bullish on two sectors in particular. We'll get to them in a moment, both in the news today, energy and banks. Joining us now, Cole Smead, president at Smead Capital Management. Cole, welcome. Good to have you with us.
Good to see you, Tyler. Thank you.
You heard what Steve just said, and that is that there's a high, the market is pricing in a rather high probability of a rate cut in March. You say that the Fed looks unlikely to be able to cut the way the markets are hoping. I don't know whether that means throughout 2024 or just that March number. Why don't you explain your position and why you feel the way you do?
Yeah, it's a great question, Tyler. So to Steve's point, he was just mentioning, let's say refinancings are coming up, okay? Let's ask ourselves what kind of businesses would be impacted from those refinancings at higher rates, okay? So let's just use commercial office as an example. Are there commercial office buildings that will not be able to go through that process? They will hand the keys back to the banks. No question about that. The only issue is there's not many employees that are tied to those businesses. They're asset-based businesses. They're not labor-based businesses. So I think the idea that the tight rates are going to restrict the U.S. economy in a major way, I think we've proven for about 18 months that that's just, to your point, what's the incentive that the Fed has? We're running very tight rates and the economy continues to churn and kind of move along. So I think the interesting part really for this whole dialogue
of roughly, we've got 570 on there right now. It's probably trading closer to $6. It has moved down. But if you pay 570, that's your risk, $570 per spread. Break even 134.30 to the downside. We're already through that level at this point. Now, the kicker is at or near that short strike at the 125. And then even below 120, all the way to the downside on this unbalanced put butterfly, you still have more than or almost a double on this trade. Profit about $430 if it goes below 120 and stays there at expiration over the next 5 weeks on this one. But this is a type of strategy that you can do in higher or lower implied volatility events where using the unbalanced butterfly is you mean you've only got one break even at 143 or 134.30 to the downside. Anything below that is profitability. And you offset some of the input costs or the risk on this trade by doing the unbalanced, because you're in essence on this one buying a $15 wide put vertical that's bearish, offsetting some of the costs by selling a $5 wide put vertical to on the downside of the 125, 120. So good look at directionally bearish put a butterfly here to take advantage if you think this stock's going to continue to move down. You get that little kicker at 125 also. All right, that's going to do it for us today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing's coming up.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
All right. DocuSign.
Let's me adjust the base, add the guitar, maybe some
All right, DocuSign being pointed out in the trading room about a half an hour ago. Looks good. DocuSign.
Analysts expect the company to announce earnings of 8 cents a share for the quarter. Burke is a timeless super brand with a brand universe that transcends.
Well, around 12:30, Yoda mentioned DocuSign was running. Okay, pushing higher.
So again, there's not a lot of data for us to look at, but we will chart this one as well, break it down, take a look at the key levels to watch, and definitely got our eye on Burke.
Yeah, it has risen about 15% since it did begin trading, so that is something. And also, fun fact about Birkenstock, even though they're new to public markets, this is not a new shoe. They do claim to have shoes that date back to 1774. They even have the 1774 collection, which is always so interesting. So I can't even fathom what shoes even looked like back then. It's like a new version, of course, is what they sell in modern day. But we will leave it there. We'll be discussing more on Birkenstock as well as Lululemon coming up next week. Focus on the retails as well as all things technical and some example trades. Stick around. Next Gen Investing. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
There's no place like the New York Stock Exchange. We got you covered. The biggest stocks, the biggest trends, all the market moves. The watch list with me, Nicole Petalidi, 2 p.m. Eastern on Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
All right, kind of a slow afternoon. Watching stocks bounce around. Just scanning through some existing positions going into the long weekend. All of these credit spreads are going to do well. Accumulating theta on over the weekend. Okay.
Consolidation, a lot of chop here around 45, and again, just overlapping, kind of rotational, very random type price activity. As I mentioned, no real well-defined trend. So I always say when in doubt, zoom out, right? And then you get a little bit of clarity here because the bottom left corner of the screen here goes all the way back to the beginning of October. Stock was trading around 355. We rallied all the way up to 516 into the end of last year, beginning of this year, and you can see how we kind of come off since. This is the price activity we're just looking at.
Okay, let's do that.
Hourly candle chart, but my eye was drawn to a few areas that the market established on the way up here. Again, 60-minute candles, areas of consolidation, which help us kind of determine which way value is moving. These areas where the market pauses is what we like to think of where value is established. So 370, 400, 430 in a very staircase type pattern. We're currently balancing around 490. So basically what we look at this, we can establish the market's trending higher. So it gives us areas to base and establish areas if we want to participate in the trend to the upside. Gives us areas to look at in terms of favorable locations to try and position ourselves accordingly. Or if we wanted to fade this trend, I mean, you could counter trend trade this as well. But either way, it gives you a couple key levels to look at. So let's take one more step back.
Okay, hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, the 12th.
Establish a new area around 490. So this is what the bulls want to see, Jenny. Area consolidation form at this higher level kind of validates that working assumption that value trend is moving higher. Consolidation area at this level again would solidify that working assumption. They don't want to see it below 63.65, but bottom left to top right, pretty easily identifiable in this instance.
Yeah, and absolutely. I mean, this has been somewhat of a give it and take it, but clearly as of late, a give it because we are right around all-time highs. All-time highs, I had to double check that because even more, I think, significant, of course, than just 52-week highs. But here to break down some examples for the course.
Okay, earnings. DocuSign. Okay, so last week we reported DocuSign beat expectations with earnings growth of 41.8% on the year, 41%. Looking forward, 41%. Nearly 42% earnings growth. They beat on revenue year over year. They beat on revenue 8.5%. And the company beat earnings expectations by 20%. So earnings expectations beat by 20%. Revenue growth year over year was 8.5%. Now earnings growth going forward, they're looking at 41.8%. So everything looks good for DocuSign. Okay. So it's a matter of getting in at the right time with a bullish thesis. DocuSign looking really good for the breakout. All right, so I would probably sell a credit spread down here at 55. Let's see what that looks like. Vertical put. We're at the highs of the day and starting to dip a little bit. So I'll wait a little bit, but it looks like DocuSign would be a good entry to sell a credit spread there. Let's see what that looks like. Vertical put somewhere below 55. Let's see what that looks like for March, being we have time. Next earnings, March the 7th. So I want to go the week before that, March 1st, looking at the 55 put. Is that too far below? 55. That pretty wide spread. That's the only problem. Pretty wide spread in the options. So we might have to pass on this one. Okay, IV is 59%. Theta is $3 a day. Delta is 20.
Show you the two separate scenarios that I see playing out here. One is just a very simple three areas of consolidation that are moving higher and higher. Oftentimes you see these areas of consolidation with really well-defined vertical separation where you get higher highs and higher lows, a high conviction move to the upside before new area balance forms, but then sometimes it's just kind of overlapping and you don't really see that well-defined separation, but yet value is still moving a little higher. Again, in this instance, just in a more overlapping kind of tendency. But the other way of looking at it is just kind of taking a look back and just.
All right. Mm-hmm.
47.50. The bulls don't want to see it down below 46, but I want to remind you here that we're looking at a 5-minute candle chart here, so there's only so much weight, only so much credence we can apply to this chart here. So let's take a step back, right? And as we do, you're going to see almost a similar pattern, right? As we just looked at on that 5-minute candle chart. You've got sideways consolidation, a vertical separation, and then a new area of balance, which is formed at a higher level. You've got a spike high of around 52 into the end of last year. And you can also see how as we've come off that high, we've been very much sideways here. Take a look at the balance areas that are forming on the 6-minute candle chart. There's really two that my eye, and I think yours should be drawn to, 48, 42, and, again, just kind of teetering around this level here. Open up the door to the upside, should get about 48 to test that.
Okay, DocuSign does look bullish, though. Looking for the follow-through. DocuSign, nice bullish chart. Nice follow-through. What's SMCI doing? SMCI. Okay, consolidation below 357. Not pulling back, just consolidating.
Let's take a look here. Let's establish a couple areas of value here again on the 4-hour candle chart, and my eye was drawn to 3 of them. So right now,
Oh, just noticed something here on DocuSign. There's no open interest.
Value moving higher, bouncing around 48. As long as it holds above 41, it does appear to still be in this bullish type pattern. You've got a well-defined upward stream around 52, and you've got a couple well-defined bottoms here around 45, 46. So again,
all right, Schwab is screwing up. All right, let me log in to the site with my mobile and cancel that order. Just noticed something. On DocuSign, there's no open interest. Okay. History, balances, trade, order status, cancel.
And the chart, I think Ben did a great job on. There's an area in particular I wanted to highlight as well that is kind of the
Okay. All right, so that was canceled. I just noticed whenever you take a credit spread, make sure that there's open interest, because I was inadvertently plucking around here and not paying attention to the open interest. All right, so that looks a lot better. The 55 for February. 55 is a 13 delta. Let's go to 60. 60 on DocuSign. Okay, 60 is right underneath this week's price action. That's a little uncomfortable. That's a 28 delta. Let's go down to 57.50. Let's see what that looks like. All right, it's a 20 delta. That's palatable. Okay, that's good. Of course, it's not letting me place it because Schwab is screwing up today. That's not good. Okay, let me do it on my cell phone. Okay, what I'm trying to do is go open an order. DocuSign. Okay, I want to put in a credit spread. Let's see. DocuSign. Action. Select action. Options. Select a strategy. Vertical put. Okay, sell to open the February, where are you? February 16th. Let's sell the February 16th, 57.50. 57.50. And buy the 55. 55. And I'm going to do that for what? That's not right. February 16th.
Binge watch the market with the Schwab.
Buy the 55, sell the 57.50.
On all your favorite streaming services. Schwab Network, available anytime, any device.
Limit.
Schwab. Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a single commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device.
48.
And available
48.
on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for promo today. We are looking at Twilio. It's making a nice move to the upside today, but also this week is we're up over 6% here on a week-to-date basis. And this is following some pretty optimistic analyst news we got today out of Piper Sandler, who did upgrade shares to overweight from neutral, raised the price target to $82 a share from $75, which justified some nice upside about $9 from where we are currently trading. But we've also
DocuSign's still going. 55. That's almost $10 away.
we did see many months from activists and
19 delta. All right, that's fine.
of their CEO's loss day, which is also expected to see pretty major changes at the company.
Okay. I'll be right back.
Data and application business. So we did see analysts respond to this news Monday. William Blair actually really struggled to re-accelerate business in the space outside macro headwinds and failed to execute on key growth initiatives. They do believe this executive change could be a positive for Twilio considering the ongoing challenges the business has faced just over the past several quarters. Twilio spokesperson did decline to comment beyond their statement that was made by Lawson, in which he said the time has come to now pass the reins. But I would say that's definitely probably a pretty big ego bruise that it was perceived as a positive for your stock. Maybe he was stepping down. But perhaps what the company needs right now is that major makeover. And it seems like as far as the analysts go, they agree with this move. I will say, the stand isn't exactly like super loved among those covering it. Pretty divided. There are 16 buys, 16 holds, 2 underperformed. That puts it at about a 47% buy ratio among those analysts. Average price target right now is $71 a share, which also implies no upside from where we are currently trading essentially. But right now, I do think that there's this possibility initiative that there's hope that they can start to execute on. And we can also see major stock catalysts emerging. For one, being essential business split, of course, potential is very key there, as well as marketing budget improvements. And this Piper Sandler analyst mentioned crypto as well as capital returns.
It's okay, Ben. I don't necessarily know where the crypto thing comes in. I have really searched, and this is like a software company that does all sorts of APIs regarding like making your customer integrations easier and simpler. I've read more about Twilio than I care to admit today. I don't understand where crypto fits in, but hey, if we're just throwing that out to any stock at this point, sure.
Well, I'm going to let you handle fundamentals here, Jenny. But in terms of this stock, this company needing a facelift, I'd push back on that a little bit, Jenny. You and I, before we come in here, we need a facelift. This one, a makeover. This one needs a facelift altogether. Okay, so let's take a look here at shares of Twilio because we've come under pressure. And Jenny, this is another prime example of give and take, right? Let's take a look here. You can see the run up that we saw into the 457 level beginning of 2022, and then the sell off and how we've been just kind of sideways since. Let's zoom in on that big move lower from 457, currently balancing around this lower level here. Let me show you some of the areas that I was drawn to. As you can see, value continues to move lower, right? We're in shot and trade around the $60 level, and really not getting much to get enthusiastic about at this point, and really even hard to establish that we've formed a bottom. So let's step one more time into this one, more intermediate time frame. Normally go from the more granular to the bigger picture. We're going to kind of mix it up here a little bit. I want to show you the rally we saw off the lows. We were trading around 49.50 if you remember back at the beginning of November, all the way up to 76. Take a look at the hourly candle chart because we were and have been continue to be trending higher as of recent. So again, since the beginning of November, we can see 5 areas value currently balancing around 74, qualifying an upper extreme 78. We got a lower extreme around 66, which notice how that held the key area. The bulls wanted to see it hold. So another step back. I want to show you where we are. Look at this here again, just kind of getting back into this bigger picture daily candle chart here. You can see as we have been and continue to be watching, there is value move lower. So on that hourly candle chart, here's the move we just looked at, the rally up to 80. You can see that's right back up to a key area where if the bears are still in charge here, they're going to start to flex their muscle around the 75 area. The bulls don't necessarily, or the bears don't want to see it above 75. The bulls would consider that a bit of a trend reversal. One more chart here I wanted to show you. Look where we are relative to 50 to 200-day moving average. We've been holding above both. So it speaks to strength off that low again last fall. You can also see how RSI has been coming off. Price starting to get a little bit of a lift here, but it's still some heavy lifting, I think, as I like to say. Best way of putting it for the whole still. Yeah.
And I have a really hard time with the fact that this day, so we're like, 52-week highs just around $80 a share, so we're slightly below there. But then, like you said, it's all about time frame. And I think that this speaks to the fact that this needs more than a makeover. This needs a whole lot of cosmetic help. Because it's all-time high, $457 a share. I mean, we are not even close. And then when you zoom out, it seems like anything that's happened in the last year has just been like a huge nothing burger. We're just like stuck. I guess we are still above the 50 and 200-day moving averages, but like, I mean, 457, is this just like a pandemic win that we'll never see price level back to, where we once were? I guess it's difficult to say.
Well, I would say never say never, right? I can remember after, the tech peak we saw in 2000, a lot of people thought that we would never see that, right? Here we are at this point talking about NASDAQ back to higher levels here. So ultimately, yeah, I don't know if I would say never, but this is definitely one that's been struggling to recover. And again, a facelift would be appropriate in long overdue.
Yeah, I like that the analysts from Piper Sandler, they say the company is not completely out of the woods yet, but the recent pressure represents a good opportunity to own the best.
All right. Ooh, DocuSign does look good. I don't think I'm going to get filled on DocuSign. It's just going 2 balls to the wall higher. That's a good one, Yoda. Good find. DocuSign continues to push higher. Maybe I'll adjust these. Maybe I'll adjust it higher. Or I'll put in a new one. That's what I'll do. DocuSign. DocuSign strategy, vertical put, expiration to 16. The 60 is going to be a little high on the delta. Ooh, that's a 28. I can't go to 60. Can't go to 60. All right, let me go to a different expiration. Let me go to 23. Maybe there's something in between. Oh, there's a 56. Okay, 56. Oh, 58. Okay, 50, 50, 55. Let's go to 58. Sell a 58. Okay, that's a 20 delta. That's better. Okay. Sell. Okay, there's very little open interest though. That's the only problem. Shoot. All right, let me go to a different expiration. Let's go to 22. February 2nd. That's an 18 delta. Sell the 58. Okay, that works. Okay, let's go to 22. Is that what we got? 2222. Sell the 58. Sell the 58. That's a 18 delta. All right, so sell the 58. Buy the 55. Do 5 of those. Oop, not 13, 5. Not 15, 5.
In terms of companies like this and some of the overhead that they deal with, some of the constraints.
Okay, let's go there.
The industry in general, in many ways, one could argue. But talk to me in terms of
Let's see if I can do it here.
many would argue that, well, we're in such a data-dependent environment, the Fed, us as investors, I would imagine this is going to kind of help them tip the scales one way or the other. Strengthen jobs, for example. We're all traveling. If we have, wages, we're earning.
Wow, prices are all over the place.
Consistently earning wages here. I mean, if labor conditions in the U.S. much like.
Okay, we'll see if we can get filled there. Okay.
I would imagine too. And here's the thing: consumers have choices, Ben. And so,
Man, DocuSign is so freaking strong there, Yoda.
some strong data and other data that looks not quite strong. We saw where the consumer decided to spend their dollars. Even when we talk about travel in particular.
Okay. All right, so whatever the problem was with Schwab, it's now fixed itself.
That's a stranger to some like woes, and I'd say maybe just volatility. As this company did file for bankruptcy back in May of 2020. So
Yeah, Scott, I'm thinking the same thing.
doesn't mean that your stories would be necessarily completely perfect. We could still see some degrees of like, where they're still figuring out this EV market, as I think a lot of these major companies are that are exposed to EVs. So we will leave it there. Really great breakdown on what has been a wild ride for Hershey this week, leading on the market correspondent here for the network. Now, coming up next, it's time to talk some earnings. We're looking at Delta, which reported some nice fourth quarter results, but features down over 7% here on the session. Also, weighing on the other major airlines. We set that little green coming up next.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her move forward. The client wants to hear how much you know until they know how much you care.
Every morning, our analysis is your blueprint for the day. Bonds, stocks across all asset classes on Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Eastern. No politics, no noise.
All right, DocuSign's got to come back a little bit. I'd rather do a credit spread at a lower price.
Schwab Network. At each and every angle, the whole picture, everything comes full circle on
Higher price on my credit spread.
the New York Stock Exchange on Trading 360, only on Schwab Network. Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services.
Okay.
Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
All right, it's 1:40 on the East Coast, the best coast, the coast with the most. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday the 12th. Not a whole lot going on today. Watch and spy in the queues. Back in the middle of the range. I'm going to take another couple of minute break. I'll be right back.
I'm right there with you, Jenny. Yes, we actually did see them beat both on the top and bottom line here. Actually, smashing the street's expectations when you're looking at the adjusted earnings per share number that came in. But as you were talking about here, we did see an adjustment to the guidance to the downside here for 2024. They did move their adjusted earnings per share estimate between $6 and $7. That's down from the previous level, which was between around $7 to $8 here. And that was actually still below the street's expectations. But there were some bright spots when you look at this report. The passenger load factor, kind of just think about that as the capacity of the flights at this point in time, continues to rise at a pretty healthy clip. We're not seeing them at pre-pandemic levels, but they are on the right trajectory. And even the international flights are now starting to see a really significant boost in demand. And the international business actually does provide a wider margin or better profitability than some of the domestic flights. Now, U.S. domestic travel has slowed down here across the board when you're looking at the industry, but they are hopeful that they are starting to see positive signs of that actually picking up here in 2024. The last thing that may have caused a little bit of uneasiness when it comes to this earnings announcement is their discussions around the supply chain. They are having issues with procuring certain parts for their aircraft, and that's actually delaying repairs, and that also can have an impact when it comes to their route availability.
Kevin talked to me before the break. We mentioned Hertz, and I tried to tie employment strength and labor conditions here in the U.S. To one of the factors that investors and traders should look to in terms of potential for Hertz to continue to see strength or maybe kind of lack thereof here. But in terms of Delta, I'd imagine kind of a similar situation, right? With business travel since the pandemic not necessarily providing that backdrop that it once did, I'd imagine we're looking to, again, the consumer in many ways here. And for that, we look to labor conditions.
Yeah, definitely, Ben. As you have increased disposable income, that's also going to increase the demand when it comes to travel. Now, when it comes to corporate travel, we have actually seen that increase here over time. And I think the big question is going to be the seasonality of it. Do we start seeing more of a downturn when it comes to corporate travel during the winter months as we can still utilize some of the technology that was really prevalent during COVID-19? I think that is going to be the question. But we also talked about the consumer. If you're looking at the high-end consumer, you talked about the first class or luxury consumer, that strength continues to be there. We actually saw that in their numbers. They actually saw premium economy increase by 15% on a year-over-year basis. So that's really good for them. But once again, if you're looking at U.S. domestic travel, if you're looking at the coach seats, if you will, starting to see a little bit of a slowdown. That's not a really good sign. But I think their biggest fear right now is the supply chain rather than consumer demand starting off 2024.
So Kevin, now we do have the rest of the airlines reporting. We do get American or United, January 22nd. That's the first of the group, and then we get Southwest and American Thursday, January 25th, when the market opens. So as far as far as the space, I know that they don't like completely trade in tandem, but could we expect very similar type results?
Yeah, so it depends on the airline company, as you talked about. And actually, with the price action today, they probably have a fairly low bar, as analysts are most likely going to adjust their forecast here in the next week. I would say if you're looking at United, once again, that's a company that has a fair amount of exposure for international travel. That can actually be a tailwind for them. But if we start looking at some of these other companies that actually just have really a significant amount of domestic travel, let's talk about Southwest. Yes, they might have a little bit more of headwind because U.S. travel is starting to, U.S. domestic travel is starting to wane a little bit, as well as the profitability of those flights are not as high as international flights right now. I think the biggest question mark is how each company is really trying to hedge against jet fuel inflation, and if they're able to really offset some of the costs by what that we are seeing as far as volatility within that space.
Yeah, absolutely. And I think that's going to be something we talk about pretty much all year long until things improve.
Okay, DocuSign at the highs. All right, what's Microsoft doing? Microsoft. Okay, turning back up, Microsoft. Okay, Apple. Okay, what do you see on Apple? I see ABC. ABC moving higher lows compared to yesterday, higher lows. And an ABCD pattern like yesterday, except not as deep. Okay, that's Apple. What about Broadcom? Broadcom, ABCD. So if this makes a higher low and gets above VWAP, that would be a good area with just over 2 hours and 13 minutes to go. Amazon flat to sideways too. Okay, Meta. Okay, Meta. I sold a credit spread on Meta. NVIDIA, I have a credit spread existing on NVIDIA. NVIDIA. 2 steps forward, 1 step back on NVIDIA. Okay, so now we're just consolidating at the highs, NVIDIA, but not selling off. Tesla. I'm not going to do much with Tesla because it's still selling off. Tesla, as you know, has been elevated selling volume, showing institutions are present, taking shares off, looking for this to move back to 190 or so. Once this starts to turn green, like it did last time, it was below the 50-day, 200-day, in reverse, all of this green volume on these dips. Now we have the opposite. We're moving lower, but it's on higher red volume. Tesla. Microsoft, we just talked about. Microsoft looking for a follow-through on a breakout. Looks good. Google was looking similar earlier. Google. Okay, Microsoft. Okay, NVIDIA, we covered Snowflake. And Netflix. That rounds out the top 10 New York FANG Index components. There's only 10 of them. Very easy to follow. These 10 stocks. Pay attention to them. You can make money on these credit spreads and the like. Okay. So Netflix, looks like that might actually follow through. Netflix. Okay, flat price action. Okay, so the better ones are Microsoft, higher highs, higher lows, ABCD pattern, pretty obvious. Higher highs, higher lows, Microsoft pushing higher. 390 is the next level on Microsoft. I wouldn't mind taking a Microsoft trade if it wasn't for the fact that it's Friday. I don't want to hold on to Microsoft. Look at frickin' DocuSign. Look at DocuSign. Look at the 60-minute time frame on DocuSign. Can't chase that. So I'll put a limit order on a pullback. So the limit order will work better if I can get a fill.
This is essentially a situation where we saw a huge run up and push higher in global shipping and transit rates because of existential threats to the region, which can create some problems for shippers and suppliers, as well as, again, customers which utilize their services. And so spot rates have essentially doubled in just a short period of time, and we saw this particular name run up about 50% in short order, and it's up it nearly doubled since the lows back in December. But today, for the bulls, it's a little bit of a disappointment after traded higher and starting to drift lower, as of course crude oil has stabilized as well.
Yeah, George, it looks like false swell attempting to break out, taking out that high. It looks like on the 7th of January, but coming off significantly. Just take a look at the chart here real quick. I've got us still holding above the 200 well off the lows that we saw end of last year around 639. I mean, kind of a counterintuitive fashion, right? George, you think about higher insurance costs, you talk about spot rates, twofold ultimately. Again, I sort of wonder, with all the focus on inflation, obviously we see it in terms of crude prices higher today at 1.25. We saw them up to near 75 or 75 in the WTI, but who takes on these added costs? I mean, is it trickle down directly to us as a consumer, or do they have to absorb it?
Well, the companies themselves may have to absorb some of it initially, but if it stays more permanent, in other words, if shipping costs increase, they certainly will pass that on to the customers, which essentially ends up being passed on to consumers through higher inflation and final goods sold. So I think that's a potential here for inflation to resume based upon this. But looking at it from a stock standpoint, these companies, shipping companies, based on my observation and trading, are extremely volatile because of the nature of spot rates, because of the nature of geopolitical risks. But they do follow the commodity cycles, because if you look at ZIM, going back on a 3-year chart, it really peaked out.
Okay, so with
and since then, it's been in a weekly
DocuSign, let me show you something on DocuSign. All right, DocuSign. DocuSign. Okay. All right. So here's DocuSign. I just put this in the spreads Condors channel. Okay. So here's DocuSign. I want you to notice a couple of things. Number one, DocuSign just will not stop. Okay. So realistically, I would like to see this pull back a little bit from the highs in order to fill my limit. You see the ask over there, 97 cents, right above where it says add a leg, it says 97 cents. If you go all the way to the left, you can see limit credit. I'm asking for 75 cents, trying to get filled at 75 cents. $225 with $675 in cash secured. All right, cash gets taken. I can't. Schwab puts it aside. Basically, I can't use it. That's a 33.5% return on investment, ROI, if I can get a fill. Now, the trick with credit spreads is these are puts. So what do you think would increase in value if it continues to move higher, or it moves backwards and moves back down towards 63? If it moves that back towards 63, the likelihood of me getting a limit filled at a higher midpoint, closer to the ask, is much greater. So I'm looking for people to take some profits towards the end of the day. And if that happens, maybe I can get a fill at 75 cents. If it starts to pull back, I might even adjust it 75 cents, maybe to 80 cents. Maybe I can get closer to that offer right now at 97 cents. That would be great. Notice the deltas. The deltas are 15 on the sold put and 6 on the sold the bought call. Also notice the implied volatility is north of 46%. And theta is $3 a day on the put that I'm selling. All these things are important. Open interest, while it's not a lot, there is some open interest there. Hopefully the open interest will start to build as people start to recognize that this is on the move. Okay.
This week we saw the SPX 100 points to the upside, 47, end of last week up to 48. And yeah, we're off that level right now by a bit, but I think in many ways, considering some of the headwinds, the uncertainties that are out there right now, and all of this building up and into earnings, ultimately a win for the bulls in many ways.
And Bitcoin looking relatively sour to end this session. I mean, it's down about 6%. The futures, as we hear, just around 43,000 after touching highest levels since December of 2021 earlier yesterday. So that has also been volatile. We'll be talking, I'm sure, all things Bitcoin next week. We will leave it there for next gen investing for this week. And have a wonderful weekend all. Coming up next, we have the watch list with Nicole Petalini.
Okay, so we went through the FANG Index stocks. Let's go see what is currently working. Okay, so IBM on the move. Okay, well look at IBM. IBM's on the move.
I remember when I first started flying.
IBM's on the move. Let's take a look at IBM. Okay, tight price actions back up to resistance. IBM.
Financially, I'm a flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them.
All right, S&P Qs are starting to move higher.
To be in that position.
Now let's look at the Qs. I could sell some credit spreads on the Qs too. 395. Q. Okay, there's no risk of earnings. 395.
Every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio.
Okay, we're on the move.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network. Cut the cord on the way you get market news. It's Market on Sale. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Qs look like they want to follow through, eh? Okay, looks good.
Good afternoon. Welcome to the watch list. I'm Nicole Penelides, live at the New York Stock Exchange at 2 p.m. Eastern Time, and we are glad you are with us. Earnings season is kicked off, and we have a busy show for you coming up. Spot Bitcoin ETFs are here and trading. Will Bitcoin's price continue to rise or fall? Our guest could think that it's about $100,000 worth. That'll be interesting. Closer look at the escalating conflict in the Red Sea and the impact it is having on the energy markets. And our panel will break down this week's inflation prints and what they mean for the Fed. In the meantime, take a look. You know, the Dow hit an intraday record high that has since pulled back, right? We've been in the red. We came up off the earlier lows, but you'll still see, red back and forth here throughout this day. It is a winning day, which makes it the 10th winning week out of 11 weeks. So that shows you something good for the bulls out there. But today, back and forth. S&P's up 6, the Nasdaq's up 21, the Dow is down 101, and the Russell losing 0.1%. As you take a look at oil and gold, of course, you've had the tensions in the Red Sea and the escalation there as the U.S. and UK airstrikes against the Houthi rebels. And that has elevated oil for us, which is at 72.92. It's off the earlier levels of the day, but still has caused oil to move higher today. Gold up 1.6%, and Bitcoin 43,445 or more, and that's down 6% today after jumping yesterday in a lot of the big news. For some of the biggest stories in the markets, we welcome in Kevin Reeves, the market correspondent on Schwab Network. Of course, the banks kicked it off with earnings season. It's a fourth down day for banks. There were some bright spots. What stood out to you?
Yeah, we did see a couple of bright spots when it came to the earnings for the banks here, Nicole, but we also saw some significant write-downs from a lot of these banks as well. And I think the biggest one that is performing to the upside here today is Citi. We actually are seeing the shares up over 2% in the session, and they did not report the best earnings announcement, to say the least. They did miss on their revenue.
Okay.
Actually took around a $1.8 billion loss because of write-offs and charge-offs for their business. They continue to have this reorganization really impacting their top line and their bottom line, as well as their expenses. And we continue to see Jane Fraser, their CEO, really discussing that their performance has been very disappointing, but also noting that there is progress in certain areas of this marketplace. They also did announce that they do plan on reducing their headcount by 20,000 individuals in the next couple of years, and that could actually cost the company around $1 billion when it comes to severance costs. Now, when we look at Wells Fargo, a little bit of a different situation here. They did actually beat both on the top and bottom line, but their guidance moving forward actually came up a little bit light. They are very, very cautious, to say the least. So much so that they actually took a significant write-down.
All right, the Qs continue to move higher.
Charge-offs for credit losses. Now, that's just kind of an accounting type of issue, but once again, it kind of signifies the fact that they do believe that there might be a little bit of risk in the marketplace, and their CFO actually did highlight the fact that the commercial real estate market is actually something that they are a little bit concerned about here. And then last but not least, we do have JP Morgan, beat both on the top and bottom line. They did actually have some pretty good results, but we have seen that stock move to the upside pretty rapidly over the last couple of months. So it's not surprising we're seeing a little bit of a muted reaction post their earnings announcement.
Understood. All right. We have so many more next week, as you noted. We'll have a busy week ahead too. In the meantime, the energy markets, tell me a little bit about the escalation, the conflict that we've been seeing. I mean, even Tesla now said, I heard that they were pausing the work at the Germany plant because of supply chain issues. And that's the question. Are we going to see some supply chain issues here too?
Yeah, we are starting to see some companies starting to report that they are actually halting their production in certain factories, especially in Europe, because they don't have the supply on hand in order for them to produce cars. So it's not only Tesla, but it's also Volvo. And you kind of talked about it at the beginning of the show here. We did have the U.S. and UK actually strike Houthi rebels in Yemen, and that actually spiked crude oil up to $75.25. But since then, we actually have seen oil pull back here a little bit. That's not surprising, Nicole. We have seen a lot of pressure at that $74 level when you're looking at crude oil. But we also saw some activity this week in the natural gas markets, and that's another key area because we have this Arctic blast going across the United States, and that is pushing prices up. And actually, if you look at it, Nicole, from an asset standpoint, natural gas is actually the best performing asset year to date so far, up around 30% year to date, which is not good from an inflation narrative standpoint. But once again, once this weather system does pass, we might see natural gas coming back down to an equilibrium that the market seems fair, thinks that is fair.
All right, we'll continue to rally. Looking good.
Great to see you. Thank you so much. Appreciate it. Bigger picture, Andrew Rose is with us, President of Diversified. Andrew, thanks for being here. So, your thoughts? What is 2024 shaping up like in your mind?
Oh, that's a loaded question, Cole, but let's see. I think if I break it into a couple components, fixed income market to us looks still pretty strong this year. I think there's a lot of positive signs. I think that staying high quality in bonds is the move. And when we look at stocks, it probably will be somewhat of a choppy year. I mean, we've seen the consumer be very resilient over the past year, surprisingly so.
Q's back up to the 1115 pivot high. Q's back to the 1115 pivot high. Q, Q, Q. Okay, we had a pivot high at 1115. Over here, 1115. We've had this pivot high over here on the left. We're coming up against it right now. If we break through it, that'd be good. B and C pivots, pretty obvious. Higher lows at 1050, 1050, and 12 o'clock. We made a higher low, 1050, 12 o'clock, and continue to make higher lows, higher highs. Back above VWAP. Looking good.
Our take is a more balanced approach this year. A more balanced index would serve you better. So kind of bold prediction on our end, since where the Magnificent Seven seems to go, everyone goes, and so goes the markets. But we do think things will revert back to fundamentals this year, and people will go to better priced stocks. So that's our approach. Still U.S. focused. Still a good rating there versus international. We think high quality in the U.S. large cap market is still probably the predominant bellwether for the coming year.
Right. So when you say large U.S., it means maybe in addition to or aside from the Magnificent Seven?
Oh, in addition. More balanced approach on it.
What do you think of the banks that we heard from so far? I mean, then we'll have Goldman and Morgan and
NVDA starting to consolidate in a tight squeeze. NVIDIA at the highs. On the daily chart at the highs. Intraday is right in the middle of price action. Bitcoin looks like sell the news to me for now.
They say make hay when the sun shines.
So you don't think the Fed's going to rush to cut rates? I mean, do you think 100% chance sort of midway through, like the Fed funds futures tells us so?
Yeah, I do think the second half. I mean, a week or two ago, the consensus was about a 75% chance that interest rates would be cut in the March meetings. It's already down in a week to 65%.
4% chance, I believe, is what I just recently read. And as of most recent as today, inflation ticked up a hair, a couple basis points here. So I think the Fed's going to sit on their hands longer than most people are prepared for or expecting. So, yeah, I do think it's coming. I would push it back a quarter or two or a few meetings personally from where.
What is Hershey's doing? Hershey's backed off the highs. Dog.
Oh, yeah, sure. I just think we're going to go back to fundamentals this year, as I was saying before. I think that you're not just going to ride the big seven. I think you're going to have to pick stocks. You're going to have to be choosy. You're going to have to look at fundamentals.
Okay, let's take a look.
So,
all right, that's the Qs. Let's take a look at the FANG, New York FANG.
I'm generally bullish, but I think this year I'm more bullish than last year, which turned out to be a heck.
Okay, Doji hanging out at the highs. Nice reversal this week. Remember the box. Looks like we're just going to chop around. Best case scenario, we break out, but next best scenario is price action stays in the box. Stays in the box. S&P. Best case is we break out. Next best case is that we stay in the box in the upper half of this range. Okay.
Trading at Schwab is now powered by Ameritrade, unlocking the power
Okay.
of the award-winning trading platform.
So we stay in the upper part of this. That'd be preferred.
Including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly.
Okay. So you can see what we're looking at here. We're staying in the upper half of the box. Maybe we break out. Maybe we break out. RSI is rising. You see that? See RSI is starting to break the trend. Notice the RSI is starting to break that downtrend.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
There's no place like the New York Stock Exchange. We've got you covered. The biggest stocks, the biggest trends, all the market moves. The Watchlist with me, Nicole Petalides, 2 p.m. Eastern on Schwab Network. Welcome back to the Watchlist. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So, some support movers for you in the market right now. Bank of New York Mellon is one of the few banks that actually today is reporting earnings, has up arrows, adjusted earnings declined for the quarter, but revenues increased thanks in part to higher interest rates. Stock hit an 852-week high today, gained 12% over the last year. DOCU building off of yesterday's gains after reports that both Bain Capital and Hellman and Friedman are competing to acquire the company. Now, in light of that news, analysts at Bank of America and RBC have reiterated their neutral ratings. Bank of America raising its DocuSign price target 68. Healthcare stock is on pace for its biggest daily decrease in 7 months after the company reported fourth quarter earnings before the opening this morning. Revenues rose 14% year over year, but in the fourth quarter, but rising medical costs forcing shares lower. and held down 6% from its November highs. Coinbase, MicroStrategy, and other crypto-focused stocks continue to fall after the SEC approved spot Bitcoin ETF late Wednesday afternoon. So Coinbase stock lost more than 10% this week, 20% in January, MicroStrategy down more than 30%.
All right, so that looks good. Break out of the box. Let's do that next week. Let's break out. Okay. One other thing to notice too. Okay, so if you take the October reversal low after that 3-month downtrend, a little bit more than 3 months, take that high, the two red arrows, take that high and the same level, the breakout level, and place your Fibonacci's there, 0 and 100%. The extension brings us up towards 5,000. The 1618 there at the top, right above major resistance 4,800. You can see 1618 is close to 5,800, 5,000, which is the next level. 5,000 is the next level. Okay, here's 5,000 over here on the left. Okay, right there, that's 5,000. Here's 4,800. So if we can get above 4,800 next week or the week following and start cruising in this direction, look for puts to start to fill in overhead, the blue. We need more puts.
The big setup and the stars are aligning, if you will, for Bitcoin to ultimately be rising right now. And so, yes, the halving time frame, which is kind of a weird word most people don't understand, is that every 4 years Bitcoin goes through this time frame where they cut the amount that they provide for those that solve the equation for mining, the really hard math that these big computers do. They cut it in half. And so that makes it more scarce, more expensive to produce. Ultimately, there's only 21 million coins available for those that don't know that. And this is important because well over 19 million of those have actually been mined already. So there's a finite amount. There's a limited amount. And actually, if you look at this even a little bit closer and you do a little bit of investigation, my personal understanding of who the founder of Bitcoin was is that he actually mined the first 1 million coins and then actually passed away. And there's this adage, if you lose your keys, you lose your crypto. And so I think that there are millions of these Bitcoins as well that are no longer actually able to even be in circulation as a result of people losing their keys. So this is just kind of a perfect setup as we get new institutional money in. We get this flow.
Yeah, what do you do if you lose your key for your Bitcoin? You're screwed, right?
It also opens up the world for us as investment advisors to be able to share this idea with the rest of the world. Although I've been kind of quasi doing this for myself here for quite a while, and Bitcoin is one of those players that I'm personally paying some attention to. But yes, Nicole, I personally see Bitcoin having a phenomenal year. I think the toothpaste is out of the tube, and ultimately you can't stop what's already in motion right now. And this finite amount is
nice trend, and the futures continues. The cumulative rising.
Someone were interested in this, what's the best way to have a hand in what could be some big moves, to your point?
Yeah, absolutely. Well,
that have exposure to buying ETFs, how should people do it?
Well, great question. So it all comes down to cost. If you buy into the Grayscale mutual fund, I believe the cost is going to be 1.2%. That's higher than I personally pay because I own Bitcoin directly through Coinbase, and so there's no carry cost. If you end up going through, like a BlackRock as an example, they're looking at like 30 basis points or something like that, so significantly lower than the Grayscale mutual fund. So always be looking at fees as it relates to this. I think that direct investment is kind of the way to go. I'm personally going to hold on to these things, and I think that you're going to be able to get loans off of them long term. This is important for the Bitcoin conversation. But if I could just be honest and slightly pivot here, these alternative coins that have been rising up, like Ethereum, Cardano,
and others are ultimately going to really be, I think, laying the infrastructure for what the world's about to be doing here in the future, because we can tokenize just about everything, and it actually creates a more efficient system where you're not dealing with as much fraud, and things are authenticated in a way that I personally appreciate, and I think as others begin to understand, they'll appreciate as well. So really the big move on the upside for me, at least in my accounts, has been in these altcoins, not even the Bitcoin here, but Bitcoin's up 131% on the year, so that's great.
Yeah. And you know, is there anything that could sort of derail this, right? If you have higher rates or lower rates, the Fed is likely to cut rates this year, but there's still talk that we might have higher rates for longer or things like that. How do you see the economy going? Because that's part of the story. Is how the rates will go. If it's all based on the economy, that is PPI and CPI, for example.
Mm-hmm. Well, you know, if you think about Bitcoin or just anything else that's out there as an investment like this, it's an alternative. And what is it an alternative to? Well, I'd say probably an alternative to U.S. dollars. So I would say that how I would answer that question would be, well, if our economy struggles, the U.S. dollar gets weaker, then that probably bodes pretty well for a Bitcoin or something like that. If we see a recession, it could be bad for risk assets like this. However, Bitcoin in the most recent year has become non-correlated to the S&P 500 or the NASDAQ, which it was, pretty much moving one for one with in the past. Now it is not as correlated, and so that's a very good diversifier. I don't really think that there's a scenario where this is really going to go down unless, somehow there was some massive hack.
All right, starting to pull back a little bit.
More intervention from the SEC, or they, kind of reverse take on this. But, I guess like I said earlier, the toothpaste is out of the tube, and I think that there is a world right now that is looking at higher inflation relative to what U.S. dollars are valued at and what their currencies are valued at. There's been an offsetting over the last number of years, and so the to be able to have a currency that can fluctuate between those points in time, I think, is something that the world's looking at. And because Bitcoin was that first mover, it's likely going to get most of the attention. Although I am very convinced that it is not the answer to all of life's problems. I'm very convinced it's not the currency of the future. I just think that it's an asset class that's finite, and I think the world's paying attention.
Yeah. And then for opportunities, you do think that a name like AMD, right? You're watching some of the other names that could take on NVIDIA, AMD, Intel. You're also watching commodities, certain commodities as potential gainers too, right? Tell us about some opportunities that you think might arise.
Okay, well, the one I'm most excited about, Nicole, is how we see biotech interacting with AI. Because there's really three things that biotech's going to be able to do here. Number one, we're already seeing this, is that AI is going to be able to look at manufactured drugs that we've maybe had for a long time. What can these things actually do? Are there other applications for it? And we're going to see, I think, some real big breakthroughs with older drugs being repurposed. The second thing that they're going to be able to do is they're going to be able to forecast out how these schedules are going to go in the research. And ultimately, that's going to work out really well because they're going to be able to bring things to market, not for the $2.3 billion that it takes to take a drug from, beginning to market. I think they're going to be able to cut that down by thousands of percent. I mean, they're going to be able to do this in the less than $1 billion, area, especially as they continue to grow.
Okay, Q is pulling back a little bit. A little profit taking.
Partnerships go on here where you're going to see kind of the science, and then those that run businesses collaborate, and there's going to be some joint efforts within that. Hopefully we get a lot of real big breakthroughs in cancer, maybe some big breakthroughs in things like COVID and things like that can make a difference to families, as we think that we've all been affected by these things.
Yeah, I mean, how do you feel the consumer will hold up? I mean, because they do have some high costs that they face.
Yeah, so you just nailed it right there. As the consumer goes, so goes the economy. Our GDP, our gross domestic product, what we produce, 70% of that is based upon what the consumer spends. Our consumers right now are in deeper credit card debt, at highest APRs that we've had in 40 years. We are not doing nearly as well. And I'll just put this out as a warning here. I'm very concerned about banks. I know your last guest just talked about banks. I'm very concerned about banks and what's happening within this credit market right now. And I'm foreseeing that credit cards are unsecured debt. And this is one thing that we need to understand differently than a home mortgage or an auto that can go and be repossessed in the event that someone does not pay. In the case of a credit card, that's unsecured debt. And so if you max that thing out and say, hey, guess what? I'm filing bankruptcy. See you later. Those banks are left just holding the bag. And unfortunately, with these high APRs and people, not making as much as they were, and we've got more people working second and third jobs right now, Nicole, it just does not look like a strong 2024. I don't think that the consumer can shoulder this economy in the way that it has in the past. And I don't believe that our printing and spending is going to be able to go without, really looking underneath the hood here. As Moody's is looking at downgrading us, and the BRICS nations are becoming critical of our debt levels, et cetera. So that's my thesis. And anyway, that's why I have commodities as a pick, and I think we're entering a super cycle.
Yeah, and you made some great point. And nobody should shop so they drop and then file bankruptcy. It's not a good plan. But I think you're right. I mean, it's true because people have these credit card debts and all kinds of things, and then they can somehow weasel out of them too. David Strzelecki, it's great to see you, CEO of Sound Planning Group. David, thank you always. Great to see you.
Great to be with you, Nicole.
Coming up, the conflict in the Red Sea continues to escalate and impact life.
All right, we got an hour and a half to go. Hour and a half.
How it's affecting businesses, commodities, more on that. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in market.
All right, Q's pulling back to VWAP.
Anywhere on any device.
Apple pulling back. Just looks like profit taking.
Morning trade live on the Schwab Network. I'm Oliver Renner.
Meta continuation. Note, I did take a credit spread on Meta. It's doing exactly what I want to see. Push higher end of day. I could have taken some calls too, but I want to take some credit spreads because theta will kick in over the long weekend. One of the reasons I don't want to do any long call positions right now is because theta over the weekend.
We think we'll see more of this. Tesla, one of the and acknowledge that these ships are now sort of unreliable, not coming in the same way that they had been. We've heard several of the shipping companies talking about a pause. They're trying to use alternate paths but it is causing supply chain issues. Is it or isn't it?
I mean, I suppose it is. Yes, absolutely it is. Predicting terror groups and politics is even harder than predicting market price. So I'm not going to try to pretend I know what's going to happen in the future. But what I can say is that all the stars are lining up for higher crude oil prices. And I think although the Houthis and OPEC are working really hard to support prices, there's some other cards that are working in favor of them. For example, seasonality is very bullish from like late December through early March. In the stock market, we always say that October is a bear killer for stocks, but in crude oil, January and February are usually bear killers for crude oil. The more more bull markets start from this time of year than any other time of year, and so the seasonality is on our side. And also, we noticed that speculators are holding very small net long positions, and usually when speculators are this light in their crude oil holdings,
All right, Q's pulling back a little bit more. Apple. All right. So we're closing in on the last hour and a half. I'm your host, Kazavidi, coming to you from theclosingprint.com. It is 2:30 on the East Coast, 2:31 on the East Coast. Watching Meta doing well. What's Apple pulling back? A little profit taking on Apple.
So there's a trend line that we've been following in crude oil. It started in 2015, so it's almost a decade old. And the market has successfully held this level 5 or 6 times throughout history. It did melt down during the COVID crisis, but let's face it, nothing followed the rules during COVID. So we're just going to say that's a one-off. And we're coming right up against that support line. Right now, that support area comes in around 66 to 68 in crude oil. So I can't rule out a little bit of a washout slide just to test that trend line. But the 200-week moving average is at around $70. So somewhere between 70 and the high 60s is really good technical support. And so my best guess is if we look at a long-term trading range, we see crude oil trading between $70 and $100 a barrel. Keep in mind the U.S. is currently the top producer in the entire world as far as crude oil goes. The last time the U.S. was producing almost this amount of crude oil was trading from 40 to 60, but we think because of factors such as underdevelopment, underinvestment in exploration and infrastructure and things like that, as well as the OPEC production cuts, strong demand, will keep prices in this trading range. And again, I think we could see as high as 100 on the seasonal rally, but I'm not somebody that thinks 130, 150 is in the cards. I think 100 is about as high as we get, and then I'd probably start looking for things to soften up from there.
Right. And what else are you watching? Do you watch the metals? I mean, when it comes to these world of commodities and the dollar, I mean, because this seems like your world.
You mentioned natural gas, so I'll start there. Natural gas is in a bit of a process of a short squeeze. We had a lot of speculators that short going into the cold, kind of a surprising cold season, even though it shouldn't be surprising. It comes every year, but it was a little bit late this year, and I think it caught the market a little off guard. So I think we're seeing a short squeeze in that gas, and my best guess is we'll probably...
All right, Meta coming back. Q's pulling back as well.
But crude oil's on the other end and has some room to move.
Okay, what about DocuSign? Did I get filled on DocuSign yet?
Had a really rough couple of years. We've had some really big rallies and some really big setbacks.
DocuSign? I don't think so. DocuSign. Nah, it's still sitting there at the highs. DocuSign. Okay.
Overall this year, I think gold has a really good chance of breaking 2,100, and if it does, I wouldn't be shocked to see 2,500, maybe even 2,600 on the upside.
Wow. 2,500, 2,600. All right,
Go big or go home.
Here first. I mean, let's start with 2,100. Right now we're at 20.52 a troy ounce, up $33 today. I mean, that's a good move just for today. Carly Garner, great to see you. Dick Carly Trading. Thank you. Still ahead, Google recently made the decision to phase out cookies, and so we'll dive into the impacts of the digital advertising landscape right after this. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical.
All right, we continue to fade. Qs continue to fade.
Available anytime, anywhere, on any device for free.
Okay.
Welcome to Trade Live on the Schwab Network. I'm Oliver Renner.
All right, we've gone red on the day for the Qs, red on the day. S&P 500. S&P 500. Also flat on the day. At the moment, flat on the day. Flat VWAP.
And live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with
Okay, so apparently DocuSign is a takeover candidate. M&A. Looks like DocuSign got some interest from Bain, Hellman, and Friedman. Trying to take over DocuSign. I was wondering how long that was going to take. DocuSign and Adobe are the two behemoths in the online document signing business.
No politics, no noise. Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
DocuSign. Let me take another look at this. I might take this trade off and haven't filled anyway. DocuSign. This could very well pull back on me. So I'm going to go ahead and cancel that trade. It didn't get filled. I'm going to go ahead and cancel it. I don't like the prospect of this pulling back. Something happens and it doesn't maintain the interest of, I imagine they will. Bain, Hellman, and Friedman is interested in buying DocuSign as a takeover. So I took that off. DocuSign, no longer interested.
Yeah, it was a busy week for sure, Nicole. It's going to be tough to follow up your last guest, Collie Garner, in that call for 2,600 in gold, but I'll do my best. Kind of a mixed session here as we head into the end of this Friday. As you mentioned, lower on the day, but still higher on the week. And I did notice the SPX briefly up above that 4,800 level, and we are off the highs that we've seen in the session, but unable to take out the lows from yesterday. So kind of just consolidating. Here's a quick look at on the 30-minute candle chart, the sell-off we saw. Now this is the futures contract. 48.41 into the end of last year. That was a new all-time high, all the way down to the lows that we saw last week, down around 4,700. And again, even though we're negative on the day here, look at the week that we've seen. I mean, we basically clawed back all of the selling that we saw off those all-time highs. Currently hanging out right around 48.15 in the futures contract. Let's take one step back. I want to show you on the hourly where we are. Here's that all-time high that I just mentioned, 48.41, and here's the run-up that we saw throughout.
Yeah, IBM, that one looks good, right? IBM. All right, following through. IBM, when are earnings on IBM? I think I have it here on the watch list, right? No, I took it off. Okay, so this time around it wasn't on the watch list. IBM. January 24th. All right, so IBM reports on Wednesday, a week and a half from now. Okay, so remember Monday the 15th, we're off. So you've got 7 trading days until IBM reports. Wow, nice move on IBM.
Fizzling out quite severely, right, as we head into the end of the week. Even with geopolitics, we're hanging out around 72, 73. But this looks like a classic buy rumor, sell fact type scenario playing out here, Nicole. And definitely, we were just talking about what the bulls wanted to see in terms of this week and indices. This isn't what the bulls wanted to see. Looking at the week that was here, off the highs, you mentioned just shy of 50,000 down to 43,000. Let's take a step back here away from this 1-minute candle chart and the wide range volatility we've seen, because I want to show you where we are in the bigger picture here. We've had quite the run up. It does look like we're kind of forming a wide range balance around 44,000, but this also still looks very bullish to me on the bigger or more intermediate, kind of stepping away from that 1-minute candle chart and looking at the bigger picture. Take a look one more time at the bigger picture with me. The daily candle chart still holding above the 50. So again, you see a significant trend here to the upside, just a pullback. Again, something to watch next week if we build momentum to the downside. This is going to turn out to be one of the classics if you're talking buy rumor sell fact if this selling continues here.
All right, thank you, Ben Lichtenstein. Appreciate it. Good to see you. All right, let's dive into the world of digital advertising. Travis Klinger is with us, Chief Connectivity and Ecosystem Officer at LiveRamp. So we had Google move away from the cookies, and the cookies basically give more and more data and proprietary data.
All right, Q is pulling back a bit more. Q.
By disabling tracking cookies for 30 million Chrome users, what does this mean for Google?
Great to be with you today. So I think the end of the cookie is a major event for the advertising.
All right, we got an hour and 15 to go. Hour and 15.
Changing over the next 10 months. And with Google, just 8 days ago, they deprecated 1% of the cookies. And they're doing this to increase user privacy and make it more transparent in how data is used with consumers. So ultimately, the end of the cookie is a good thing. And it's going to make a better internet. And it is time to do it. But with that said, it's going to be a major event. And I think for publishers who have deep first-party consumer relationships, they're going to massively benefit from this. We're going to see a trend where marketers like Albertsons, for example. Oh, sorry.
No, go ahead.
Oh, sorry. We're going to see a trend where marketers like Albertsons, for example, are looking at how they can use their retail media data on a platform like Pinterest, where Pinterest has deep consumer relationships, people who are really interested and share their data in a consented and authenticated manner. And in turn, then, you're able to connect retail media data, personalize, show personalized ads, then measure the actual impact. If those users go in the store and they actually buy more of what the ad was selling them.
UPS. Just going through what's working in the markets. All right, let's go take another look. With a little more than an hour to go. Not doing anything at the moment.
It's a new tracking system. It's a bit more private, called the Privacy Sandbox. So it's not like Google will be left for naught, right?
No, Exactly. And it's important that like we recognize what did the cookie first do? The cookie enabled the explosive growth of the internet over the
Microsoft
past created a value exchange.
looking good. Microsoft at the highs.
Today you can browse endless
Meta
you can watch hours and hours
at the highs as well. Could come back to the 9 EMA. A couple of times mentioned the pullbacks are getting more shallow heading into earnings. The last time we revisited the 21-day. Previous to that, we revisited the 50-day. And the action's getting tighter and tighter as we move higher. So I would suspect that the 9 and 21-day, given the most recent last week of December pullback, very brief, 3 days, and then turns back up at the 9/21 day. I would imagine that's going to continue to be the case for Meta. Q's coming back a bit more.
Those who have deep consumer relationships. So think about your favorite publishers, like the New York Times, the News Corp. They are going to benefit from this. They have those relationships. They have the consumer's trust. They will be able to use the post-cookie solutions that enable brands to connect their data to those publishers. So at LiveRun, we're focused on helping enable brands to build an enduring consumer brand and be able to connect their data to personalize the consumer experience wherever it is. And so publishers and platforms who have those deep consumer relationships, connected TV, for example, is going to have a huge opportunity over the next year because they have identity that is going to last beyond the cookie. They have that trusted value exchange. Those are publishers who have login events. So when you log into a site with a subscription or you log in to share your email, they are going to succeed. These social platforms, so the Pinterest, the Snaps, the Metas, the Googles of the world, they have those login events, so they are going to benefit from this. And then importantly, marketers want to make sure that they're able to measure the effectiveness of their advertising dollars. So these platforms and publishers have to think not only about connecting their data to their publisher inventory, but also making sure that everything is measurable. If I saw an ad for yoga, did I go into the grocery store and buy more yoga, or did I buy the more premium brand of yoga? And the good news is there are solutions in place that make this better post-cookie, and this is going to be the year of transition. So I think if we were to come back here a year from now, it's actually going to be a really exciting year for those publishers, for those platforms, those marketers, but most importantly for the consumers. The internet is about to get massively upgraded so that you can still consume that same great content in a privacy-safe way.
And explain to us how you've been ready at LiveRamp for your clients, and you have big clients like Disney and many others. You've been ready for this, as you noted, as people have been making the changes, how they use and view things, right?
Absolutely. So at LiveRamp, we recognized that the cookie was going away over 7 years ago because Google may be the last browser to remove the cookie, but cookieless has been a conversation for a while now. Safari was the first browser with Apple and over 30% of the users in the US removing the cookie in 2017.
All right, Q's continue to move lower.
Cookieless collaboration,
SPY,
for the world's largest
profit taking. We're flat on the SPY at the moment.
Connecting them across not just the digital world, but also the connected TV world. And so we launched a cookieless solution called the Authenticated Traffic Solution 5 years ago. We've been out there in market. Today, 92% of consumer time is available through that cookieless solution. So all brands today, 80% of them are already buying on cookieless. So there's still a transition over the next year, but many of our brands began this transition a couple of years ago and were able to reach their consumers and most importantly also measure the interactions with those consumers.
I mean, Google must have gained a lot of data from that time. I mean, I'm glad everybody's moving forward to a different way, to your point, and you have to be ready for it, like LiveRamp, like Safari did that. But you're saying Safari did this back in 2017, if Google's doing it now, you know, from 2018 to now, that's a lot of proprietary data they may have scooped up over that time. But to your point, it's happening throughout this year. So bye-bye cookies. Travis Klinger, thank you, of Librand. Still ahead, our panel is ready to discuss the Fed and how it may react to the inflation data we have received between yesterday and today. While Bill Ackman is asking them to go ahead and move early and cut, others are saying you might see high rates for longer, like high rates saying Jamie Dimon is saying that. Coming up.
Meta, S&P, VWAP, flat VWAP. We're looking for prices to bounce around between 47.75 and 4,800.
Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Starting to bounce a little bit. All right. It looks like we're just going to chop around. At the moment, we had a little profit taking, scooted back from the highs.
So now, with some mixed results, we have a lot of decisions to make. Gene Golden's with us, Chief Investment Officer at Cetera, and Tony Welch, CIO at Signature FD. Thank you both for being with us. So, Tony, I'll start with you. What's the plan of action here? What are you thinking the Fed is thinking?
Well, I think, one, the market's pricing in a March rate cut right now. I think greater than 50% probability still. That looks a little optimistic to us, right? Is you've got enough inflation, enough strength in the labor market that March is probably too optimistic. Of course, we have a couple more prints before then. We have a couple more employment reports before then, so we'll see. But as far as Fed policy is concerned, I think May or June, when you start to get some softer inflation prints, and we'll see with the developments in the job market, that looks a little more realistic to us.
VIX dropping off. VIX dropping. Let's go see what the dollar looks like. Dollar.
Yeah, and first of all, Nicole, thanks for having me on your show. I definitely agree with some of the points that Tony makes in terms of, I think right now the Fed is saying 3 rate cuts. Markets are saying 6. I think that's a little too aggressive on the market side. I think when you think about the PPI and CPI, at the end of the day, CPI came above expectations, PPI came in lower, but there's no indication of inflation on the wholesale level. So all this says is that the markets are a little bit too aggressive in terms of expecting a March rate cut. We think that's a little too aggressive. Asset class perspective, let's say this year the Fed cuts rate, and we expect, say, 4 times this year.
All right, the dollar. 10-year VIX. The dollar did bounce a little bit, but the 10-year continues to drop. It's at 3.95%, so lower is better. You saw earlier we talked about the 10-year. If you were bullish, you want to see this continue dropping. All right, so we got rejected at the 200-day on Friday last week, put in a doji, and then for the last 5 trading days, try to get above it. Can't seem to do it. We got a reversal candle yesterday off the 200-day, back below the 21-day, and now we're testing lower lows. So technically, 50-day has crossed down through the 100-day. It will cross through the 200-day most likely. Probably 2 weeks from now, I'd say. About 2 weeks. So the trend is down. US dollar, we also want to see that moving lower, not higher, which is the case. Still hanging on the 21-day. Could drop off. We're looking at VIX. VIX backing off right here. Okay, at the lows that we've seen for the last month and a half. Junk bonds, we want junk bonds higher. If you're bullish, okay, if they are higher, HYG. Now, what's IWM look like? IWM. All right, IWM looking worse for wear. IBB, biotechs pull back, consolidating in a range. And Bitcoin, of course, are seeing a pretty decent pullback. Looks like sell the news on Bitcoin. I'll leave my verdict until over the weekend. Maybe we see this buyers come in.
Most likely, we're going to see core CPI below 2% pretty soon. The last 6 months has been below 2%. I see it year over year below 2% coming up pretty quickly. So all this together says that the Fed will be cutting rates because the economy is slowing, but I don't think the Fed will cut rates as fast as the markets expect because services inflation is still over 4%, but goods inflation is down. So again, lots of volatility. What this means, be opportunistic in this volatility, and active money managers are going to do extremely well in this volatility.
Yeah. And Tony, you did have an interest in small caps. Just tell us a little bit more about that.
I do, but I agree that I think that the market can broaden out. I wouldn't be shocked if you look back, 5 years from now and you saw the Magnificent Seven had their run up. Earnings continue to be good over the next 5-10 years, but the stock prices really don't do much of anything just because of what's baked into the value. And so you want to kind of look at some areas that might be more opportunistic, undervalued, could have some things go right. I think on the small caps, we're interested in it for sure. We need to see that economic growth. So contrasting a little bit to what Gene said, if we are moving back to a slow growth economy, that could be a little bit more challenging for the small caps. But our base case is we're going to get a decent acceleration in investment spending. Consumer trends are going to be okay. And economic growth will be robust enough to support something like the small cap trade this year.
All right, Tony Welch and Gene Goldman. Thank you.
All right, SPY still trying to hold on to this area. Meta, all at the best levels of the session. Not too far away from all-time highs. Meta. All right, so Russell was talking about that earlier. Meta. Okay. Not much to do. It's the end of the week. Meta's at the highs. Weekly. Okay, if you zoom out, you can see the highs, recent highs, all-time highs. Okay. 384. We're only $10 away. $10 away from all-time highs.
Have a choice in how you invest with Schwab.
I'm Nicole Petalides, live at the New York Stock Exchange. Catch me on Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring...
All right, we're drifting a bit lower.
In the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere,
on any device for free.
Schwab Network, empowering every investor and trader
every market day.
Binge watch the market with the Schwab Network.
All right, Meta dropping below VWAP.
Tune in 24 hours a day, 7 days a week at schwabnetwork.com.
S&P.
Schwab Network.
Where are they going to pin this? VIX dropping off now. VIX is dropping. VIX is dropping.
Available anytime, anywhere, on any device for free.
I'm Oliver Rennick. Get ready to cut the cord. Market on close is coming up.
Good afternoon. It's 2 p.m. here in Chicago during a snowstorm. This is Market on Close. I'm Tom White.
Oh, you got snow in Chicago, huh?
With an hour left in the trading day, let's take a look at where markets stand. We're gyrating near the flat line. The SP 500 barely in the red. Same for the NASDAQ 100. The Dow Jones Industrial Average.
Yeah, we're flat at the moment.
Some weakness in United Health post earnings. And the caps down about 0.25%, flat on the week. Now let's take a look at some of the commodity products which have been influencing the equity markets. Dollar slightly higher. Gold futures up over 1.5%, back above 2,050 today. Maybe some hedging going on there. Crude oil futures up 1%, trading just below $73 a barrel. Oil did hit above 75 earlier in the session on the turmoil in the Mideast. And Bitcoin futures.
All right, scans are not producing that much.
Yes, go live. Bitcoin goes dead, down 6% on the day, giving up some of those gains that we've seen over the last 6 to 8 months here in anticipation. Let's kick things off with a look at the broader market. Let's bring in Kevin Green, who's senior markets correspondent here. Kevin, give me your take here on the week, because it seems like a pretty uneventful finish to the week. Inflation data, we got through it, right?
Yeah, we're still above all the moving averages, hanging out at the highs in the box, looking for some direction, and we're just chopping around. So looks like that's what we're going to deal with. Looks like we're going to just deal with flat price action, chopping around, chopping people up. In the box. All right, so that's what we're looking at in the box.
Things of that nature. So I think right now we're still trying to get through a lot of this data, but some of the tailwind or headwinds that we saw earlier in the week are now behind us, especially after that PPI report that we got today that was better than expected.
Yeah, that PPI core under 2% for the first time since January 2021. So that's trending the right way, Kevin. Now, some people are saying that the hotter than expected CPI data that we had yesterday was kind of maybe that last gasp, right? That the PPI is going to start flowing into those CPI data points. Is that what you see here? Because it seems like the market's expecting, further weakness as far as inflation goes.
That might be the case there, Tom. I mean, if you look at a correlation between PPI and CPI, it's only around a 65% correlation between the two. So I would still
Stochastics starting to level out. MACD was looking for a crossover. Didn't happen. RSI has broken that series of lower highs. Okay, over the weekend, theta's going to kick in for a number of these, all of these credit spreads.
headwinds here if we did see inflation reemerge here.
Now, is that a sign, Kevin? I think that's a good point to bring up. Is that a sign that demand is weakening and that the economy is actually going to slow? Because I think that's what the market's pricing in all these rate cuts for, is that we're going to see a significant downturn in maybe the consumer and the economy in general. Is that what you're seeing?
Yeah, definitely. I mean, Tom, that's exactly what Oliver and I were talking about yesterday here. When you're looking at some of these prices, especially when you're looking at the commercial side and producer price index here, you could actually see some deflation because the demand just might not be there for those input goods. And that also coincides with the manufacturing PMI data that we've seen over the last couple of months. We continue to see contraction in that particular area, and that could also be
Micron turning up. Okay. Apple.
We continue to see some pressure when we're looking at the crude oil markets. We did break above $75 in the overnight session, but we continue to just get chopped down by sellers.
Apple turning off the low. A little short covering on Apple.
Speculators really trying to short this market, or I think that might also be another indication that it's not only just the inventory that it might be a problem, but it also might be demand in the long term. And that's actually not a really good sign if you're looking at the broader equity market.
Yeah, and going back to that crude market, Kevin, it seems like, the geopolitical risks that are out there, they're headline risks, and whether it's geopolitical risks, due to crude oil and energy prices and such, but it's also for equities.
All right, just grinding along. We're off 11 cents on the SPY. Trading 47.78, 78 on the S&P cash. Futures off $2, 2 handles. Futures.
I think it's more assuming that the inventory levels will continue to remain, the production levels will continue to remain, and demand might be falling rather than the geopolitical tensions. Carly Garner just talked about this on the watch list before. It was actually a really good take. If you look at the overall fundamental landscape for crude oil right now, you have very low long positioning when it comes to speculators. You have a fair amount of short positioning from those speculators as well. And then you have this technical base area around $70 a barrel when you're looking at the technicals on a 3-year weekly chart of the 200-week moving average, which has been very key for crude outside recessions. And so you have the technical set up to see a little bit of a push to the upside. We just have not seen it yet. Maybe we are just forming a base, Tom. Maybe we may break that 200-week moving average to the downside. I think if that's the case, I think that we have some headwinds here for the equity markets, as that is not a good sign and usually does foretell a recession on the horizon.
Yeah, let's.
They've been talking about this foretells a recession, that foretells a recession. So many things talk about recession. Probably already in one, the way it seems. Yet we're still making higher highs and higher lows. Right now, for this past couple of weeks, we've just been chopping around in a range. Not making any progress. No forward progress. VIX dropping off. VIX dropping off here.
Sometimes that just happens when you're looking at the technicals. You come up to a resistance point, you test it, you come back, test the support, try to test the resistance level again, and you want to be able to break through it with a very significant amount of volume. And we have earnings next week. That could be the catalyst if we get some good news.
Banks. We had JP Morgan. Let's see what JP Morgan looks like end of day. JP Morgan.
VIX basically at low levels below 13, kind of reflective of that.
Okay, that came back below yesterday's close. All right, so we're going to consolidate up here more than likely. JP Morgan. Goldman Sachs has earnings next week.
We got Tesla getting hammered again today, cutting prices over in China. They've got some issues shutting down the plant over in Germany. Is anybody even buying EVs anymore? It seems like the OEMs are pulling back on all their investments and saying, hey, we're going to make these trucks with big, giant ICE engines.
So, okay, I read the Hertz story as a Hertz problem, not a Tesla problem. I mean, Hertz doesn't exactly have a great track record. They filed a bankruptcy 3
They
years
still
ago.
had to buy them, right?
That's true.
Yeah.
And hey, you can get a Tesla now for like $18,000, they say. So, I mean,
Okay.
I think that right now we're in that lull where like we are waiting for the infrastructure to catch up, because I
major contributing factor.
All right, we got 50 minutes to go. 50.
But lots of negative news.
50 minutes to go.
And he said cut their prices in China yet again. Feels like this.
Okay, enough of them. Enough of that.
At a tailwind, and I think where we're likely to find the greatest opportunities is going to be in Asia emerging market equities. China, I'll separate out. I think there's certainly potential there, but Asia EM, including India, there's a lot of growth there. Valuations look attractive, with the exception of the Indian equities. And in general, though, going outside the U.S. is a good call right now. I think European equities valuations are attractive. Typically, valuations aren't predictive in the short term. But I think the cyclical exposure European equities have, the cyclical exposure emerging markets equities have, will bode well in this environment.
Dan, let's disagree. Let's go for the heck of it. I'm going to disagree again. Listen, I'm in my mid-40s, and I have been told since I came into Wall Street, you need to diversify sector-wise and geographically. And the U.S. stock market has repeatedly, routinely, and consistently outperformed. Maybe this year is the difference. Right. Well, there was a period from like 2000 to the financial.
Maybe this year is different.
Sure. It was a value.
Maybe this year will be different.
Market, but that includes 2000, 2003. Which
We got to break the uptrend first. All we're doing right now is consolidating. So first order of business, we would need to break the downtrend, or break the uptrend rather. Number of stocks above the 50-day, while we are above 90%, we're in the red zone. Lots of stocks can continue higher. You're looking at Goldman Sachs. Look at the 50-day. That's the green line. I don't see any reason why everything's going to start dropping off. If that were to happen, if we start to see selling across the board, I'd be more concerned. Right now, not concerned. Not cavalier, just not concerned. Watchful as usual.
And it's not just the U.S., it's going to be a global reacceleration.
I mean, it's also kind of easy at this point to forget that the NASDAQ 100 lost a third of its value in about 10 months. So it's not as if it's a one-way trade. We're always going to just be able to ride. I mean, this is the point a lot of people make about Facebook, that how many stocks fall 77% or whatever fell, and then shot right back to a high. It has not been without pain. No, but then you also.
What does Tesla look like? Tesla, the big change in Tesla, pretty obvious. Okay, the selling volume picked up as it lost the 21-day, then it lost the 50-day, then it lost the 200-day this week. Yesterday, it closed below the 200-day. The volume picking up. The dead giveaway on Tesla is going to be, you don't need to buy Tesla on the first bullish day. Look over here in late October. If you're thinking about Tesla, look at this selling, the volume picking up. We get a first bullish day, and then we get a second bullish day and a third bullish day. We make a higher low. Even if you waited 3 weeks on this one, you had an opportunity for a higher low, obviously in hindsight. But what I'm focused on is the volume on the pullbacks. The opposite of what we're seeing right now. The volume is there. It's just selling volume, not buying volume. So until that changes, Tesla looks like a short. You could sell a bear call spread if you want. I wouldn't do it now. I would have done it earlier, but didn't do anything. Oh, the attorney is going to come out of the woodwork. I don't know why I didn't say that earlier with Boeing. Everybody is injured. Everybody is scared. I don't blame them. I mean, if I was on that plane and the freaking over the wing door, is that what fell off or what blew out? I don't think I'd be too happy either. Boeing just can't seem to get out of its way. Boeing just cannot seem to get out of its own way. Let's take a look at Boeing. Boeing's another one. Boeing is another one. It looked like it was going to bounce. It's down to the 200-day. So this is looking pretty good. Now, think about Boeing the same way we're thinking about Tesla. Look at the volume, obviously selling volume. So we need to see multiple days. See over here where we were just trending. This was that was more contained selling every day. It wasn't like what we're looking at right now. The thing that I would like to see change is let's see if we can get a bottom at support maybe. Or if we revisit 170, 75. We get down to 175 and we start to see this repeat, this kind of action repeat, I'd be interested in Boeing. Until then, next, I'll look at something else. Look at something else for now.
This is going to be a continuous story. That was the story of 2023, but we obviously didn't see this was one of the best performers in the S&P 500, just behind NVIDIA and Meta platforms. But there are many, many automakers now fighting for key market share in China, although I do want to point out that we haven't exactly seen sales slow down. We've just seen Tesla now reevaluate the way it's doing business in that region. Now, the Model Y, Model 3 prices came down between around 3 and 6%. So now we're seeing the base version of the Model Y crossover vehicle starting at about $36,000. And then the Model Y starting at just over $34,000.
So they're talking Tesla right now.
Of course, they aggressively did cut their prices in 2023. That was the story, and just to illustrate the pace in which they were pricing a rear-wheel Model 3 vehicle at the beginning of the end of 2022 did start around $47,000. At the end of last year, we saw it cost less than $40,000. So many, many cuts then got us there. But I do think what it does beg the question of is what does this mean for its competitors when we continue to see them then have to adjust their pricing to accommodate the fact that prices just continue to move down. It's obviously a win for us as consumers, but
okay, so
investors scared over the margin story regarding Tesla, and I can't help it. I just
got about less than 43 minutes to go. 43 minutes to go. IBM, great job. Problem with IBM now is that we're right back up to resistance. So either we break out or get rejected, or just stay range bound. Look at MACD and stochastics. Nice looking setup there. IBM, I have no position in IBM. No position. That looks good though. Verizon, Chevron, Disney, Coca-Cola, trying to break above 60. 60.50, trending. That's a boring stock. I mean, okay for dividends if you don't mind not worrying about anything. J&J, AMZN, Microsoft. Microsoft near the highs. Not giving a whole lot. Not giving a whole lot back. Who's that? Oh, Citigroup laying off people.
Hey, Mike, thank you. And Mark, thank you very much for being here and for hosting us here at the Citigroup headquarters. Let's get right into it. You said in today's call, quote, "We're not satisfied with the performance and returns in our businesses, and therefore we are laser focused on executing against our strategy, simplifying the organization, and right-sizing the expense base." So how confident are you that you'll be able to achieve it all?
First of all, Leslie, thank you for joining us here at headquarters today. Today was a very important day. We announced earnings. And to answer your question, I'm very confident about achieving it all. And I'm confident about it because we set a new strategy at Investor Day to be the preeminent partner for institutional clients, to be a leader in wealth, to be a valued player for U.S. personal banking and our customers here in the U.S. And we're making great progress on that. I was disappointed in the quarter, but I really want to talk about or think about the quarter in the context of the full year.
Yeah, I would think so too.
Progress throughout 2023, and we're well positioned to continue that into 2024. And it really is about being a simpler bank.
Yeah, the stock price reaction would indicate that the market is looking past the quarter as well. But in terms of executing on this strategy, you have a situation right now where you're cutting expenses while also trying to grow the top line and really refocus and reprioritize the growth of the business. How do you do that without sacrificing growth in the area you're targeting as you're doing this all kind of simultaneously?
Look, it's about balance, right? We've got these 5 core businesses that we're focused on. They all are businesses that over the cycle will produce top line growth, and over the cycle will produce strong returns. And so it's about ensuring that we allocate enough resources to those businesses like our Treasury and Trade Solutions business, like our Security Services business, while at the same time investing in our infrastructure, our transformation, our risk and controls, and making the appropriate recalibrations as the cycle evolves. And so you've seen us make investments in services. You've seen us make investments in our investment banking business. You've seen us make investments in wealth. And in instances where that hasn't produced revenue, our wealth performance was less than we would have liked, we've dialed back that spending. But what we haven't compromised and won't is the investment in our operations and our infrastructure, in our risk and controls. But it is about striking that balance. We've got these 5 businesses through the cycle produce very strong returns. Our services business produced a 20% return on tangible common equity in 2023. Right? And our wealth business through the cycle.
All right, big starting to bounce. The 10-year moving lower, lower high. The 10-year just looks like profit taking. There's not a whole lot of blocks that have traded in the evening session. And we're looking at 1-to-1 up down volume. So it's not like they're systematically selling hand over fist. Tick cumulative is still green, although the signal line has pushed higher. The fast line has pulled back a little bit. So that's just showing what we're seeing on the screen right now.
Sure, and I think it's important to put that into context because that 20,000 reduction, which is intended to happen over the medium term, is directly linked to the strategy that we talked about at Investor Day and we've been executing against. And what I mean by that is we talked about exiting 14 countries. We talked about a simple.
What's Microsoft doing? Microsoft had a nice looking pop around lunchtime. This started moving higher. Over here, it broke above this pivot at 10:20, 10:30. Came back down to BWAP, broke higher again, retested the morning highs, and now we're fading a bit. Microsoft.
Restructuring charge that we booked this quarter. There'll be more of that in the first quarter here in order to drive those saves out.
I know that Jane said on the call that $2 billion was the cost savings that she anticipates from those headcount reductions. In terms of additional expenses we can see tied to severance, any ballpark there?
Well, so in 2023, we booked about $1.5 billion of severance and restructuring related costs. In 2024, we're estimating somewhere between $700 million and $1 billion of severance and organizational simplification related costs.
Let's talk about the consumer. Net credit losses were just shy of $2 billion in the quarter. That was up 22% sequentially, 69% annually. Although the losses are still relatively low by a historical standard, do you think we're starting to see a deterioration in the quality of the borrower at this point in the cycle?
No, look, we haven't compromised our underwriting through the cycle at all as it relates to our card customers. What we're seeing is that if you think about what happened in COVID, spend levels were down, loss rates were down, and as we've come out of that, spending has picked up. We've seen good purchase sale activity. We've seen payment rates that were high.
SPY off 50 cents now, 1/10 of 1%.
The 12% top line growth in our U.S. personal banking business, which is also 16% for the full year. So we've seen that top line growth, but we've also seen the loss rates mature and materialize through 2023, and we expect that to continue through 2024 and peak in 2024 before starting to normalize. So in some ways, this is a maturation of a portfolio that has come out of COVID, combined with new acquisitions that we've done since then, maturing at a more normal pace. And that's what's driving the increase that we've seen.
Interesting. Thank you for that clarity too on the 2024 peaking. Lastly, I want to ask you about geopolitics because we're in just such an increasingly complex world as you're
No bounce yet. Just profit taking from the highs.
As it's been built up over the past few decades. This quarter we saw significant losses as it pertains to exposure in Russia and Argentina specifically.
Looking for a higher low in Microsoft now. Looking for a higher low here. With 35 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, the 12th of January. Coming into the closing bell, we've got 35 minutes to go. A lot of stocks have faded from the highs, though not a bad day. Not a bad day. Not a bad day.
Those were not credit reserves. That was not about loans that we have in that country or in Russia for that matter. Those were reserves around transferability of capital risk. And that's very different. That's not an exposure that's tied to credit.
Is the devaluation of the currency.
Well, the two things. You have the devaluation of the currency that flowed through and hit our top line. And then you have the reserve that's tied to transferability of capital, which is in a way linked to that devaluation. So it's important to point out we're well reserved in both
Tesla,
Argentina and in Russia against that risk. And importantly, when I look back over the 100+ years that we've been in Argentina, serving over 1,300 multinational or clients, I should say, and 700 multinational clients, we've lost $5 million in the last 10 years. $5 million, right? So we're very careful about how we manage the risk. A lot of these clients are multinational clients. A lot of the loan exposure that we do have is backed by the parent company. And this is, again, part of our strategy. When I look at the returns that we generate, if you think about our TTS, our security services business, 20% returns in TTS. That compensates, if you will, for the risk that we take in many of these markets. And so we're in these countries because this is where our clients are. We've been in them for a while. We know how to manage that risk, and the returns make good sense for us when we think about the business we do with those clients.
So certain markets you will stay global.
Yes.
Mark Mason, CFO of Citigroup. Big day for you. You got fourth quarter earnings, this transformation strategy. I really appreciate you coming on CNBC to help us make some sense of it all.
Happy to be here. Thanks for having me.
Thank you. Mike, I'll send it back to you.
All right, Leslie, thank you. And thanks, of course, to Mark as well. Up next, glass half full. KKR's Henry McVeigh is back. He's breaking out his playbook for 2024 and telling us where he sees some big opportunities ahead. He'll join me here at Post 9 right after this break. Closing bell will be right back.
Duration too. You're giving yourself over 60 days, so you got a couple months in that position. I was just looking at the 18 strike puts. I mean, you're paying what, 70 cents of extrinsic value for those puts. And if you think there's some more weakness, dude, Delta down 8% today. You've got American and United reporting earnings also. So I think that goes back to my theory that, hey,
all right, starting to see a little bit
bias. It's really good time to
short covering now.
Or take a straight out position.
What's Meta doing, Meta?
Yeah, go ahead.
Keep in mind, Jets is up, I think, 50% over the last month and a half.
Yeah.
I mean, this thing has been on absolute tear, and we're seeing that, perhaps things aren't as good as everything. I think this could work without any geopolitical risk. That's just a potential tail. Like, I just think there's a lot of ways to win. Sorry, I'll let you go.
Oh yeah, no worries. I like the explanation there. You mentioned the consumer names. Are you looking at names like Procter and Gamble and Coke? Is that a reflection of that? Maybe with the market's pricing in 150 basis points of cuts this year, is the fact that we're going to see a drop off in the economy, and it's going to be led by the consumer. Is that the way that you're looking at that to the downside?
Yeah, we've certainly had some buyers of downside in the consumer staples. We're seeing that pricing power is perhaps shrinking. I think what sort of happened in a lot of these names, they've had unit slowdown, but pricing power to offset that. That's probably going to change this year. So sure, consumer staples. The issue is that if they in a defensive case,
all right, we've got 30 minutes to go.
In XRT, like the actual retailers,
30 minutes.
Is weakening, and
not much to do in the last half an hour of the trading day.
It hasn't happened yet, but if unemployment starts picking up, and we already know credit cards are stretched, mortgage rates are higher, there's a lot of stress on the consumer. And it wasn't that long ago that brick and mortar was dead. I think it was several years ago. So I think that there's certainly an opportunity in XRT. Again, even if you're long these names, if you like retail, if you like the consumer names, sure, buy an XRT put to hedge.
Yeah.
And we definitely would lean longer on the e-commerce side.
Yeah, definitely. Cheap protection out there, Danny, is what I like to call it. But it could be cheaper. We'll have to wait and see. Great discussion here. Appreciate it, Danny.
Hey, thank you for having me. I really appreciate it.
All right, that's Danny Kirsch. Head of
landing, these guys will shake off the loan losses. There won't be any problem. I don't believe that. I believe that when their earnings are out in the next few days, what you're going to see is some sizable, write-offs, charge-offs, increases in delinquencies, and I would definitely short those stocks.
All right, great discussion here. Post earnings, appreciate it. Dick, have a great weekend.
You too. Bye-bye now.
All right, that's Dick Love, financial strategist at Odeon Capital. But coming up next, we're going to take a look at some options. My block that I'm not on today, but Rick DeCat's going to join us. He's going to break down a couple option flows in Delta Airlines GM, and we're going to take a look.
Starting to see a little bounce in the indices. Microsoft making a higher low. Not doing anything the last few minutes of the trading day, of course. Q's just oscillating around a flat VWAP, so not expecting a big move. SPY trying to go back to green on the day, painted green, unlike painted black. Looking for it to paint green on the day.
I definitely feel privileged to be in that position.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
At each and every angle. The whole
All right, Meta's bouncing. Everything's starting to bounce. Let's look at the FANGs. Not much to do. Just check your positions. If you have anything expiring today, Friday, 0112, January 12th expiration. Do I have any options? Yeah, I got a couple. I got HUT expiring, worthless. Thought we might get something going there. Never happened. HUT died. HUT.
It seems like there's a little bit of optimism in this game for whoever this trader is. They made a long.
Yeah, that's the only thing I have is HUT. Bitcoin related. That's a die. It died. Okay. That's the only thing I have expiring today.
So you can see that we formed kind of these two twin peaks sort of on our chart just below.
A small position. Okay. All right. So we're drifting back towards VWAP. Trying to stay green on the day. Where flat SPY is off 1/100th% at this point. It's flat now. Flat. So SPY trying to push back up. Pin in this area would be likely, I think. Looks like we'll pin in this area. Some people were looking for it to pin near 4,800. I don't know if we have enough juice to get back up there. That'd be cool, though, if it did.
Not flying high today. One note of interest on this, Rick, on this, they're buying the 43 call, selling the 46, $3 right call vertical. They're only paying 30, under 40 cents for this, so they're not outlaying a lot of capital. But you mentioned that. I saw it on the chart. That 42.5, 42.60 level has been a double top, so you need to see that, and you're basically giving yourself a couple months, right?
Yeah, 63 days or so, expiring March 15th here. So there's some time left on this trade. They're giving themselves.
What's he doing? Delta. Okay, Delta. The rain coming. All right, so that's fine.
Yeah, call volume over 200,000 calls have traded. Only 70,000 puts have traded. Put call ratio 0.33. That's about half of what normally you see, which is about 0.7 on a put call ratio. So maybe a lot of dip buyers in here. We saw some of those unusual players in there. Thanks for that one, Rick. Now, next name we got here is GM on the car side. Tesla getting hammered this week. What's going on here, GM?
Well, GM is a longer term play here. This one is going all the way out to September. So about 252 days or so. Buying 6,000 September 20th, 40 strike calls at a $2.08 debit. So basically, this one is looking for a push back above the previous peaks that we saw during the summer for this automaker name here. That 40 strike lines up pretty close. We made it a little bit above that point, but our best close was something more like around 40 or so, around that area. So basically looking for a nice push above that area, above that 42 level, close to those yearly 52-week highs here, 43.63 here. And this one is, sky's the limit on this one. We don't have a accompanying short strike. It's not a spread. It's just a straight up bullish bet on this game here. So I believe it would be, let me check real fast, how much of a percent increase we would need to get it to our break even near 42.08. About 7% or so, a little under 7% we would need to break even on this trade. And the total risk comes in at about 1.2 million. So a rather sizable trade that we've got here.
Yeah, I think the key, looking at this one, Rick, going out to that September 40th strike, 252 days. So they're giving themselves plenty of duration on this for a rebound. I did notice on the chart, though, Rick, when you look at this, it's been consolidating around this $35 to $36, $37 level. So you need a breakout above that, right?
Yeah, it would need a bit of.
All right, we've got a little bit more than 23 minutes to go. 23 to go.
As I said, quite close to those yearly highs. We topped out near 43.63, about a 7% move to the upside for that breakout area here. But you can't see it on our line chart here. We had quite a sizable gap up recently. Took us from the levels of about 29 to 32 or so in one day. So a big move upward. Kind of seeming like there was a bullish catalyst in this name. Oftentimes when something like that happens, a longer term play can be what many traders decide to do based on some change in the fundamental situation.
All right, good look at that GM upside bullish sentiment trade there. But now let's turn to the big one, Rick. I talked about the VIX earlier, hovering around 12.5 at extremely low levels. Not surprising with the S&P 500 just below a record highs, but protection's cheap, and it looks like somebody might be trying to buy some protection here in the VIX.
Bought a whole lot of protection. We compare it sometimes to you want to buy the umbrella before it's raining here. Someone brought a pretty darn big umbrella. So about 250,000 contracts at the 17 strike call in this game, expiring February 14th. So maybe someone's expecting kind of an unhappy Valentine's Day.
Back to VWAP. All right, back exactly what I was thinking was going to happen. Liquidity dries up on a Friday. Not much going on. Many people taking Friday off so they can have a long weekend. 4 days off. All right, Tesla's starting to move a little bit more. Likely just shorts covering Tesla.
Jump up in volatility here, breaking even at 1765. As with our last trade, unlimited potential profit, but the total risk, if we assume a 65-cent debit or so, is about 16.2 million.
Okay, some people are looking at potentially getting long Tesla. I would like to see the first bullish day on the reversal. I'm not trying to catch the absolute low. I'd like to see the volume pick up from bullish, currently bearish, most of the volume on Tesla.
But volumes have been pretty low in there, so nobody's buying protection, and there's no uncertainty out there, even though there's uncertainty across the board, whether it's geopolitical or corporate risk, interest rate risk, and everything. So to see a trade like this, call volume about 27 times normal daily average volume in the VIX product that we've seen over the last 5 trading sessions. So this is pretty surprising. Then I also saw some February 16s and 18s, over 100,000 on each one of those strikes. So if we get some volatility during earnings season, or maybe some geopolitical risks, or maybe some data that doesn't agree with the market, so somebody's basically just taking a protective call position, because if the stocks get hit, the VIX is going to go up, right?
Yeah, and then it's too late. Then it's too late to get the protection that you would need for a portfolio, especially one of substantial size like this. And that's exactly what I was thinking. Perhaps someone is banking on a rough start to earnings seasons here. We got the big banks kicking things off today here. But we'll have to see. It's one of these things where the VIX is it can move so abruptly and so suddenly and so fiercely. Yeah. It's something that I can definitely see the thinking behind to put some protection on, when you have a substantial position in equities.
Yeah, definitely. And that's a good point, because you've got 32 days till expiration in this one. So you've got some duration to go on this February 14th option.
Okay, 18 minutes Tesla, still driving. All right, Tesla Apple turning the corner. Meta, Microsoft bouncing more. Microsoft is bouncing more. Would love to buy some Microsoft calls, but I'm not going to do it. We got the whole weekend of expiration plus Monday. I don't like having that extra theta day. Normally, I wouldn't buy an option on a Friday anyway. I'd sell an option generally after Thursday afternoon. That's when theta really starts to kick in. So if you're thinking about selling options, a lot of times it works very well to sell options on a Thursday after the noon hour on the East Coast. Theta kicking in that evening, Friday, and then over the weekend. Same idea as we're currently talking about. You've got a lot of people taking Friday off, and then Monday is a holiday. And Monday's a holiday in observance of Martin Luther King Jr. So we won't be here. I like having an extra day off. So the Sunday video will come out on Monday, and so will the watch list.
Weekdays at noon on the Schwab Network. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio.
16 minutes.
He's Alex Coffee.
Okay, I don't have anything I need to take off, so that's good. I had a good week. All these credit spreads just killing theta. That's good. Yeah, that's what I want to see. Okay. Meta hugging VWAP. I sold the only thing I took today. Meta. I took, what did I take off? I took,
above $75 a barrel earlier on the geopolitical risks, but like the market always does, it just kind of pushes it aside, and they're not too concerned about it.
Meta. I took Meta, a bull put spread on Meta, $226 and credits for $774 in cash. It's held aside, so that's about what did we say? 29%, 29.19% return on investment. The trade will expire on 2nd of February. However, in the last 2 weeks, 22nd through the 2nd, these last 2 weeks, the theta will really kick in, and theta on Meta is currently $25. No, $2.50 a day. Meta starting to bounce. Okay, the Q is looking better.
Yeah, you bring up a good point about that lagging China data. CPI remained in negative territory for a third straight month. That pickup that everybody expected in the second half of 2023 in the Chinese economy never took place, and it seems like it's getting worse at this point. So production ramping up to record levels here in the U.S. and across the globe, and demand waning a little bit. So we'll continue to watch the oil markets and the geopolitical tensions. But wanted to kind of turn to the WASD report was released.
Yeah, the one thing that could send the markets dropping out of that box that we've pointed out. One thing that could do it is if there is some kind of escalation like the Ukraine war, how that impacted price action. So go back to February a year ago, year and a half ago, whatever, and check out how price action reacted. That's what you can expect. If there was something that happened in the Middle East, that's a wild card. So never cavalier, but certainly not concerned about the markets at the moment. To be concerned, I'd really need to see VIX at much higher levels. That would tell me that institutions that have lots of money on the line are concerned about the markets. So coming into the close, we're faced with a spinning top in the upper half of this range. Inside the upper half of this box or range that we knocked out between 4,700 and 4,800. We dipped below 4,700 a couple of times last week. And we opened up this week, Monday, and pushed back up above 4,750. And that remains an area that we continue to bounce around. Right now, S&P looks pretty strong. SPX looks pretty strong. Okay. So 47.75. Support, resistance, 4,800. Okay.
Yeah, falling knives on both corn and soybeans recently. All right, great discussion.
Yeah, I did notice that wheat was rising. Wheat.
Managing Director, TJM Institutional, breaking down commodity markets. But now let's get in, check in on a developing story with Renita Young, Senior Market Correspondent here. Renita, DocuSign continues to outperform this week, up about 17%. What's going on here?
You're absolutely right, and it's on those takeover rumors, Tom. Now, yesterday, Reuters reported that a couple of private equity firms are competing to acquire DocuSign. I'm talking about Bain Capital, and then I'm talking about Hellman and Friedman.
Oh, wow. Losing track of time. So February will be 2 years war in Ukraine, 24 February 2022. Wow.
That's expected in the coming weeks, and they could choose to join forces to do so, but there's no specific word on whether or not that has happened yet.
Okay, S&P coming into the close. We're back above VWAP now. back to green on the day, so they're painting this green. We'll see if we pin right in this area. I'm thinking we're going to pin in this area. Tick cumulative is still green. It's 1-to-1 up down volume. Blocks have been pretty good. Okay, Uber, very active today. Uber with the block trades on Uber. Let me go take a look at Uber real quick. I'm not going to buy anything at the moment. I'll sell premium, but I'm not going to buy Uber reversing. There was quite a bit of block volume on Uber noted earlier. Triple top, respecting that resistance level. There's some supply there, no doubt. Uber. We've got 10 minutes to go, folks. 10 minutes to go. Make sure you double check your options. If you don't plan on being assigned, do note today is January the 12th. If you have options expiring today in the money and you don't feel like getting assigned, I've had that happen, I don't know, about 6 months ago with the Qs. While it wasn't an unpleasant experience, it was something I had to manage aggressively. And it wound up that the puts that got assigned, or the calls that got assigned, wound up, the markets wound up bouncing and, or pulling back rather. And it wound up not being as big a deal as it first seemed. Getting assigned 300 shares of the Qs, not a big deal. We've got 9 minutes to go. All right, most of the FANG stocks have bounced off the lows. Microsoft, nice reversal back to 388.50, 388.60. Apple turning. Okay. Bitcoin off 5%, turning the corner now, starting to turn back up.
That means a lot for my community and for every community.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
It's been a very
24/7
fast week.
On schwabnetwork.com
and on all your favorite streaming services.
All right, so we're off on Monday. Weekend video will be out on Monday. So will the watch list. Apple's starting to move now. Apple is starting to move. Shorts, no doubt, covering. Shorts covering on Apple. Nice reversal back to VWAP. Tesla trying to get a higher low out of this.
Welcome back to Market on Close. I'm Tom White, filling in for Oliver Rennick. It's time to bring in our next guest. Look at the big picture. Let's welcome in Michelle Gidley, Director of International Research at Charles Schwab. Welcome to the show, Michelle.
Thanks for having me.
All right, so international markets. It seems like the optimism here domestically has been.
All right, 6 minutes, folks. 6 minutes. Make sure you double check your positions. Today is the 12th, January. Friday expiration. If you got something expiring today, make sure you are aware you might get assigned if it's in the money. If you don't plan on getting assigned, close the position.
And the reason is for not only the impact for Taiwan-China relations, but also U.S.-China relations. And right now, it looks like the DPP party could maintain the presidency, but there'll be a new leader, and his name is LLY And tensions with China could rise if Lai wins because he has described himself in the past as a worker for independence. And, he has softened his rhetoric more recently, though. Alternatively, if the KMT party wins, tensions could ease because they seek to engage with Beijing. Now, so what would a win by the DPP party look like? Well, we could see an increase in military.
5 minutes to go. 5 minutes.
To see some economic sanctions. But we maintain our view that an invasion of Taiwan by China is a low probability over the intermediate term. And the reason is
Okay, ZIM integrated, Microsoft, the big cap tech stock, New York FANG. Let me go take a look at that. All right, so that's back. Microsoft back to highs, continuation. So if you're day trading it, great job. I didn't do anything with Microsoft.
People kind of forget about this, but in 2022, China imported more semiconductors than oil, and that was
New York FANG.
from Taiwan. And so China's also reluctant to change the status quo.
All right, here's the New York FANG Index, inside day, just off the highs. S&P 500, green, trying to stay green here. Trying to stay green. Penning just below 4,800. So next week we'll be able to see what has expired in terms of the Gamma open interest.
China's long-term goal is for reunification, but yes, in the intermediate term.
And we'll look for options to fill in next week, so we'll know where our levels are. So I should see an update from Brent later tonight. If I think about posting it, I will. In the Gamma channel.
Core CPI is weak, up just 0.5%, and PPI has been falling for a year. And that really just signals a lack of corporate pricing power due to excess supply, weakness in consumer spending, and weakness in confidence. Now, there's a potential for a rate cut next week, but it may not address what ails China's economy, which is weak confidence and not high rates. That said, investor sentiment is also quite pessimistic, and valuations are low. So if the government announced policies to reduce restrictions and improve conditions for businesses, that could really
3 minutes to go for the closing bell. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on January the 12th. Coming into the closing bell. Hope everyone had a good week. Looking forward to it again next week. Maybe we break out. I'd like to see us break out. That'd be great. Make it above 4,800. This is what I'm looking at right here. Okay, so with respect to what we could see next week, if we can get above 4,800, that big level right there, puts and calls. The calls are the orange, puts are the blue. If we can make it above that, there is the 5,000 in the far right margin. I don't know if you can see that, but far right margin, that's where all of that option volume is. Let's go look at the SPY. Okay. SPY doesn't have the same amount of options at the level, the 500 level. Okay, so we got less than 2 minutes to go, Microsoft, look at you, Microsoft. Microsoft high of the day. Microsoft new high of the day. All right, folks. Enjoy your long weekend. I certainly will. I like to have the extra day off.
Young lady who was mid-30s, a couple of kids.
Have a great weekend, everyone.
She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was her, we were able to help her move forward. The client won't care how much you know until they know how much you care.
That's it. Have a great weekend. I have a hard stop. I'm going to grab a beer. I haven't had a beer in a couple of days. let's see, Wednesday. All right, folks. Take care. Have a great weekend. We'll see you on Monday. Ciao.